do anything when you don't know what the playing field is going to look like. That said, companies have generally been able to navigate periods of uncertainty. And I guess I would highlight we're always in a period of uncertainty. I mean, today we know that President Trump came out with this package that's potentially worse than expected. But, 2 years ago, we could have had the same type of uncertainty. We've had COVID, we've had other types of shocks that corporates have handled. So I guess I look at this and I think, okay, companies are sitting there kind of waiting for clarity, but we know that China is the culprit here. We know that that's where the U.S. is playing hardball. We've had a stay of execution on other regions, at least for 90 days, or we'll see. But I think that at least we know kind of
sentiment
a little bit more than we knew prior to.
So we got some news this morning to look for.
We played this game back in 2018, and it was far worse for equities, far worse for credit, and the tariffs were nowhere near as high as they are right now. How instructive is the 2018 example for you?
Well, 2018, I think, was interesting because companies were pretty good about being able to shift their sourcing models. So what worried us after April 2nd was that it wasn't like you could shift your sourcing model somewhere else. It was like everything was under siege.
So the Fed
Today,
isn't going to help.
That's a little bit mollified
it's going to be
by
a
the
fight
fact
with
that
the
we've
Fed.
seen, this potential for negotiations outside of China. So I think that's a positive. But when you think about the tariff setup back in 2018, even before that, companies had been pretty aggressively shifting sourcing out of China to other regions of the world. So I think that's the other kind of takeaway, is that half the economic activity that we used to do with China has been shifted to other parts of the world.
Is it just too difficult to internalize some of these numbers being thrown around? Are they just so large that people don't think they're going to happen?
Well, yeah. I mean, I think that, going above 100% on tariffs, like our unitary elasticity model breaks down. I mean, there's, it's very difficult to model that in, but I think the idea is that's the region where we're really going to see trade limited.
Yeah.
But the good news is we've already been in an environment where companies have been reshuffling away
US
from
core
China to other regions of the world.
PPI, month over month, year over year is coming out.
They don't think they're going to last very long.
8:30, that's going to be big news on whether that hits target or not. And then sentiment is always, it'll move things.
High-end chips. One thing I will say about
the
these
Fed's
numbers,
not going to help. The Fed's going to get in the way and drag their feet.
Well, they're above what he promised on the campaign trail, which was 10% on the United States and up to 60% on China. So I think if you're looking at this play out,
how it comes through at 8:30.
Part of the deal, then maybe that's where we end up.
I'm going to watch the ES today. So I'm going to move over to the ES right now.
Good to see you too.
The NQ is just too choppy. It's too volatile. It's you can't trade it on.
Positive by 1% on the S&P.
It's untradeable on
with your Bloomberg brief. Here's Danny Berger.
Margin.
Hey John, we start with the tragedy in the Hudson yesterday. A helicopter crashed into New York's Hudson River,
with it bouncing
killing all
around.
6 people
You
on
get
board.
your stop
City
loss
officials say
snapped
the
out, or you blow
passengers,
your
including
account
3 children,
on
were
one
from Spain.
candle.
The helicopter's flight path shows that it had flown around the Statue
ES
of
is a
Liberty
little
and
smoother,
George
so I've been
Washington Bridge
working with
before
that the last few days.
Elsewhere, Mexico is vying to
I'm back
protect
today
its
all
auto
day.
shipments to the U.S. in the wake of President Trump's 25% tariffs on cars. A trade official says that the country is looking for ways to move parts of the production process to the U.S. in order to increase the deduction. The official said that Mexico's goal is to have the lowest tariff rate of any other country in the market. Officials from the U.S. and Iran are set to meet in Oman to discuss Iran's nuclear program tomorrow, the highest level talks since 2022. The talks are complicated by a deep distrust between the two sides. The U.S. is seeking to prevent Iran from developing a nuclear weapon.
So you got a fair value gap below, that's support, and one above that's resistance. So it's kind of too tight.
John.
Danny, thank you. Good luck with that.
It's not going to happen.
And it's not going to happen,
the control
right?
EMAs are
uranium, and then you have to also think about, is Trump going to be after if he wants a deal about whether or not the Iranians are able to support their proxies? I don't see that happening under this administration.
That's the ask anyway.
It's kind of a coin flip going into the news with the chart set up like
Apple
this.
hopes for an exemption. That conversation just around the corner. Equity futures right now positive by 0.4% from New York. Good morning.
Okay, so we're heading into news at 8:30 for PPI. Year over year, month over month. We're caught in between a fair value gap as a sell or resistance and support. We got our EMAs crossed. I mean, it's looking like a long, but with the news coming up and volume's a little bit low. This is a coin flip on whether this is going to go long or short. I mean, we're kind of in this range. So I don't think this is a good place to try and take a trade. I think we wait.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The opening bell just around the corner, 1 hour and around 13 minutes away. Equity futures positive still. We'll see if this holds. We'll see if it sticks. We're positive by 0.4% on the S&P. On the Nasdaq, we're up by 0.5. Let's get you some morning calls. First up, Bank of America upgrading American Express to buy, saying the credit card provider is recession resilient. Okay, that stock is up by 2% in the pre-market. Your second call from Mizuho, initiating coverage of Walmart with an outperform rating, calling the company a must-own name. In the consumer sector, that stock is up by 0.5%. And finally, Citi cutting its price target on Nvidia to 150, citing economic uncertainty due to the ongoing trade war. Sticking with tech, Dan Ives of Wedbush cutting his price targets on Tesla, Apple,
I've only got to make 2,700
front and center in this economic period of uncertainty. No U.S. tech company is more negatively impacted by these tariffs than Apple, with 90% of iPhones produced and assembled in China. Dan joins us now from
Rodney Dangerfield of Okay, so it's calling for me to make $1,833, and I'm back in a funded account.
Hawaiian shirt to an economic Armageddon. But
you do apparently. You promised me a black suit though.
So we just need one trade, pull in 1,800. We got all day to find it.
I mean, you know, it continues to be, in my opinion, 25 years doing this job, from dot-com bubble, financial crisis.
Got all day to find it. No need to gamble in the morning here before news inside of a band like this.
In my career.
See, it's kind of support here, and then it's resisting here.
It's the economic impact.
You know, you could have guessed long, and now
investors and consumers don't recognize. Relative to, remember, we're not talking stocks. We're just talking about just the pure supply chain. The reality is that tech, the hearts and lungs of the tech supply chain, are in Asia. And you can't all of a sudden call Smith Semiconductor manufacturing in the Midwest for a chip because there's one problem: they don't exist. So they've basically been left in the ocean, boat flipped, no life raft, being like, okay, good luck. We'll talk to you guys when you get to shore. And I don't think the recognition of what this is going to do to pure demand destruction in terms of CapEx, uncertainty, and the reality of what's actually happening here. The snowball, once that starts and goes downhill, you can't all of a sudden just be like, oh, we're good in 2 months.
Well, that's not to mention the fact that they have a huge consumer base in Asia, which also potentially could get cannibalized from everything that's going on. One thing that's amazing about your analysis is you go around the world and you talk to investors, you talk to executives, you talk to the CEOs of these companies. What's the mood right now?
It's like the Michael Jackson Thriller video. That would be the best way I could compare the mood. It is as troubling as I've ever seen, because there's so much nervousness in terms of uncertainty. We don't know our inputs. What's demand going to look like? CapEx, do we cut it now? No one's giving guidance. So I mean, I just find that as someone that's been the most bullish, you know, over the decades, you cannot go into this earnings season and be like, it's baked in. Look, it's a new reality. And that's why when they say near-term pain, we've talked about it so much. Near-term pain, it would take Apple 4 to 5 years to build a new factory, $30 billion, just to move 10% of the supply chain, and iPhones will be 3,500. We should build them in New Jersey if you like iPhones being 3,500. That fundamentally is the issue in big tech, CapEx, projects. That, to me, is what's so scary, in terms of, all the conversations that I've had.
Can you give a sense? Apple seems to be on the lowest end of flexibility when it comes to rejiggering the way it does business in the wake of some of these new rules of the road. What about some of the other tech companies? What about the Microsofts of the world, as well as the Oracles, some of the companies that are integral to a lot of corporate business planning in the U.S. right now?
Yeah, look, software, and we've told investors, defensive-wise, like in this bunker mentality, software is going to outperform. In terms of Oracle, Microsoft, Salesforce, cybersecurity, Palo Alto, CyberArk, among others. But it's still, okay, I ordered a server, $100,000, comes in a rack, so am I going to get hit with a bill 2 months later for another $100,000?
9 minutes till news. Kind of doing some busy work while I'm looking at this.
Software is impacted because it's CapEx. They're also driven by hyperscalers, driven by CapEx, driven by the AI, a lot of this spending. So that's why it's the ripple effect that impacts software as well. I think they're the best house relative to this neighborhood, and probably we will say less impacted, but they're not immune because this is going to impact all of tech. And I think across the board, tech earnings comes down off the gate 10 to 15%, just for starters. And then you wonder, okay, what's baked in from there? Where do we go?
Dan, you're talking about potentially, if it's made in the U.S., a $3,500 iPhone. With a 140% tariff rate, is it still cheaper to make it in China?
And that's why you're going to have $2,300 iPhones, $2,100. And that's why it just comes down to, Emery, I think the reality, and Apple, they're in the eye of the storm. They have no flexibility. And you can talk about things like, do they get exemptions? Where do they play? India.
Do they get exemptions?
Look, and again, no one knows because you don't know rules of the game. And maybe they get some exemptions, but not all exemptions. But then what about A, B, C? What about, do they get exemptions? And I think that's why from an investing perspective, every other time in 25 years, from financialcrisis.com, you could be able to look through things, be like, okay, on the other side. Here, you don't know rules of the game. You could wake up being like, you drive on the left side of the road, your name's Tim, it's not Dan. And so that's the reality when it comes to these stocks.
Okay, but these companies have had warnings, and I'm not just talking about Trump on the campaign trail. Even Biden was pushing for de-risking when it comes to Beijing and Washington. Trump talked about this in the first term, and there was tariffs in the first term. Why didn't they do more to put supplies outside of China?
Because you basically can't. I mean, the reality is, like, this is a supply chain that's been built for 20, 30 years. The reality is, like, the IP, the way these products are made, anyone like myself that spends so much of my time in Asia, in China, throughout Taiwan, Vietnam, and others, you just can't, we don't have the manufacturing, the consumer cost basis from an employment perspective to actually do that here. And I think that's the whole issue, is that saying it and doing, they're two different, there's a reality and a fictional. And I think that to us is why we've been so troubled by what we've seen, because in my opinion, it takes US tech back a decade. It cuts the knees off when it comes to AI revolution.
All right,
we're
starting to work short here. We got 6 minutes.
It's China tech.
So
6 minutes till the news.
Because my view,
but this could be a fake out, so you want to be careful.
If I thought this was permanent, and I thought this stays, then you downgrade every stock that you cover. It's the view that this is basically, whether it's 30, 60 days, it's the view that June, September quarters you basically throw out. You start to look at some sort of normalized 2026 number and a baseline situation. So my view is, like, you can't, but John, if you assume this stays for an elongated period of time, then it's game, set, match. So our view, the way that we've navigated is like...
Your assumption, it doesn't hold, it doesn't stick, it's that bad.
If this holds, I mean, you talk about Armageddon, like that would be probably a good term to where I would see that, just given the amount of products that come from China, the supply chain, US tech, we could say it. I could say I want to play in the NBA. I could say it 100 times, but I'm not, okay? So good.
Thanks for clarifying.
But again, good 3-point shot. But the reality is, that's where I see, and that's why we're navigating investors through this. Software, we're going to worst case numbers and kind of getting some sort of baseline to where you should own certain names if they get to those points.
It's a difficult moment. Dan, it's good to see you. Appreciate your time. Thank you for being here. Dan Ives of Wedbush. It's so bad it's not going to hold. Seems to be the takeaway from a lot of people we've been speaking to over the past few days.
Right, and then you hear from the energy secretary who's in the Gulf talking to partners about things like tariffs, and he says it's the start of a negotiation. 145%, maybe more. How can it hold?
Only a few days ago, we asked the chair of the Council of Economic Advisers over at the White House whether it was a negotiation or the rules of the game, and we were told it could be both.
Could be both.
So it could be both. PPI data's up next. This is fun, isn't it? Veronica Clark of Citi joins us in just a moment. From New York, this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Let's just tally up the week, which is difficult to do. As things stand on the week so far, the S&P is up by 3.8% on the S&P 500 this morning, adding just a little bit of weight to the rally, up by 0.4%, well on course for the biggest weekly gain of 2025 so far, even with China putting 125% tariffs on the United States after US tariffs on China went up to 145%. This has had profound effects on the bond market in unexpected ways. 2-year, 10-year, 30-year. The 30-year yield has risen by more than 40 basis points on the week so far. The yield at the moment, 4.8723. Typically, this would be a safe haven, where money would go when things get tricky, when policy gets volatile. That's not happened this week. In fact, some investors have been unnerved by what's been happening down in Washington, D.C. To turn to foreign exchange just briefly, this is what things look like at the moment. Euro dollar at the moment, 113.56. The euro, positive on the week. The dollar, DXY, is down about 3% on the week so far. We're heading towards a pretty ugly week for both bonds and the US dollar. With some economic data, let's cross over to Mike McKee for more to get you some PPI. Good morning, Mike.
Well, we're going to start with a big surprise again this morning on inflation that the Fed should be touting. The PPI for final demand headline number falls 0.4 after last month a 1/10.
Okay, we ended up going long on that. So let's see how long it holds for.
Year over year to 2.7% from 3.2%. A big drop in the annual rate of producer prices at a headline level, and the Bureau of Labor Statistics.
Center of the screen. I got to run out for a little
prices.
bit.
We saw that effect yesterday in CPI. For the core, a 1/10 decline after a 1/10 rise the prior month. We were expecting a 3/10 rise, pushes the core rate to 3.3 from 3.4, and then core X trade up just a tenth. 3.4% is your annual rate there. Now, goods prices is the surprise in the PPI, not completely because of gasoline, but final demand for goods moved down 0.9, the largest decrease since October of 2023. 3/4 of that, they say, is because of final demand energy. Food went down 2.1% during the month. The indexes for chicken, eggs, beef, veal, fresh dry vegetables, and diesel fuel moved lower. So we'll have to check on the eggs prices. But services fell 0.2%. So both services and goods were down. There was some thought that we might see some tariff bleed through into this report, which, of course, put together before the tariff announcements, but doesn't look like there's much in there right now.
Mike McKee, thank you, sir, on the latest. We'll return to Mike for some details in about 5 minutes' time. Joining us around the table, Veronica Clark of Citi. Veronica, good morning. Good to see you.
Good morning.
We're not really moving on these headlines. These should be comforting words for the Federal Reserve. They should be getting ready to reduce interest rates. You think they will cut rates as soon as May?
Yeah, we do. I mean, I think there is the sense that maybe this March data is still a bit stale. We haven't seen the tariff pass through yet, and I fully expect that we will see higher consumer goods prices as we're getting into the summer. But some of the details of the inflation data we got yesterday, we'll see what the details are of PPI. We saw particularly weak services, the largest decline in non-shelter services since May of 2020. And that weakness, it was in volatile components, but it was in airfares and hotels and car rentals. It feels like softer demand kind of weakness.
I remember reading a note after Wednesday's CPI, and it was what could have been. There was this feeling that the disinflation that we're seeing in this data could have been what we were hanging our hat on with respect to what the Federal Reserve was going to do. How much does the move in the long end of the yield curve really challenge their ability to respond to potential weakness by cutting rates?
Yeah, I mean, obviously, cutting rates is going to not necessarily impact that 10-year yield. It will impact the short end of the yield curve. I think, as we start to see weaker demand data, and I think we will, weaker labor market data, that is what they're going to be reacting to, and they still will be cutting. But all of these, market functioning concerns, there are other things they can do. Buying assets again. I don't know if anyone's thinking about that quite yet. Guidance we've heard from Fed officials doesn't seem too concerned yet, but that is a possibility.
Well, earlier this week, Mohamed El-Erian said that that maybe the Fed could have gotten quite close to having to execute some sort of emergency quantitative easing during some of the turmoil earlier this week. I just wonder if cutting rates is the prescription that this market still needs, given the fact that the long end might even sell off more in the face of rate cuts.
Yeah, it's possible, but I think the market does want to know that there is some put from policymakers, and the Fed is part of that, that the Fed will be there to support activity. Obviously, they're going to have to balance the employment and inflation sides of their mandate, but I do think ultimately the Fed is going to lean on that employment mandate more.
You said that you're expecting to see the increase in consumer goods with tariffs. When do you actually start to see
Okay, guys, I got to head out to do a couple things. I'll be back to call the open.
Yeah, I mean, it is really hard.
I've got this on center.
Maybe
I'm on the ES.
I
I haven't been trading the NQ.
But as we're getting into May,
because
June,
it's
maybe that's
just,
when
you
start
know,
to see it.
within,
There
I
is,
say two
you know,
words and it can
uncertainty
jump 10 to
question
20
does mean maybe
points
you pause
just back and
everything,
forth,
you know,
and
you're
it's
not
just, you
investing, you're not
can't,
hiring, but maybe you're
there's
not
not a lot
changing
you
your
can do
prices
with
yet.
that.
You don't want to raise those prices, you know,
So
for
I've
the
been
consumer
working
that
the
can't
ES
necessarily
mostly.
pay it, just to then have to cut them later. That's, you know,
I think
creates
I only need like
volatility.
1,700
So maybe it's we're holding off a bit longer, but
to qualify
the
this
size of
account,
these
and then
tariffs
I'll
that
be
you
on
probably
funded
will see
Monday if I
higher
can do
consumer.
that.
Had
So
some
we're
bank
just
earnings
looking
this
for a
morning. The
nice,
guidance was pretty decent
easy
from JP
trade.
Morgan. In fact, they increased it. The CFO spoke just
Make,
moments ago. Jeremy Barnum had said the narrative is wait and see. And that's what it feels like for the broader
What's more
US
like
economy. What's the high frequency data that you're looking at the moment to sort of gauge
gotta
how
make
this
that
economy is developing? Yeah, this is very much wait and see, and this is an interesting time for the labor market, I think, to be in this wait and see mode, because this is a time of year when businesses start hiring. This is when you're hiring for the summer. This is when, you know, new students are entering the graduating, entering the labor force. So I'm really watching trends in hiring.
I need 1,833. So I need 1,833 and 16 cents.
Because that's
So
going to
that's
tell
what we're
you
trying to
if
do.
you
We're
did
just
happen
trying
to
to
get
make
laid off, how quickly are you coming off of those
1,834
unemployment benefits? If those
Not
start
get
rising,
crazy.
that correlates really well with the unemployment rate. What's the trend at the moment coming into this?
And,
Yeah, I mean, I think
golden
this
to
is a
get
labor
back
market that has been
into
loosening for a while, and it has been driven by that low hiring dynamic, which I think was going to be a
All right,
problem this
guys,
time
I'll
of
be
year
back for the
anyway.
open.
That uncertainty, that pause in activity is going to make that dynamic even worse. So this was, I think, already a labor market that couldn't handle a shock like this.
I just wonder how much the dynamic and the way that we talk about the Fed has to change, given the fact that they cannot respond in the same way if truly treasuries are not the risk haven that they have been in the past.
Yeah.
They are dealing with a very different dynamic. I just wonder, especially if they're dealing with stagflation, especially if they're dealing with companies that are coming off a really resilient place, at what point do you change the parameters of how you even understand what kind of Fed intervention looks like, given some of these uncertainties?
Yeah, I mean, I think their tools are, you know, the toolbox has grown, right? We know that, you know, the last 15 years, but their tools are somewhat limited. Certainly interest rates are a blunt tool. I mean, I think we have to just, you know what we know about this Fed, and this Fed has been a Fed that has, you know, been surprisingly dovish. It's a Fed that cut rates 50 basis points in September. It's a Fed that in 2019, when we did have tariffs, we, you know, had manufacturing weakness, and we had some wobbles in the equity market. It's a Fed that cut rates 3 times in 2019.
You and the team haven't been shy about big calls. I remember that very aggressive call in the hiking cycle, and people laughed about it, and then they went even harder than you were expected.
Yeah.
So nothing would surprise me. I think we've said it repeatedly on this program. After the pandemic, then we've all got to be humble about what could happen here. Veronica Clark of Citi looking for that first interest rate cut on May 7th from the Federal Reserve. Michael McKee's back with us for more. Mike, have you got more details?
Yeah, we got some interesting numbers in here that the Fed will be interested in, and of course people on Wall Street. We didn't have a lot of tariffs in March, but we did have the steel tariffs and steel mill products, and this is in the United States, went up 7.1%. Economists have been warning, you know, American producers are going to raise prices if they can because of the tariffs as well. But some of the numbers that go into the PCE have been pretty good. Portfolio management up only 0.2% after an 8% rise last month. And we saw airline fares drop by 4% during the month. So some good news there. It'll be interesting to see after the smart nerds put their pencils to the paper what they think PCE is going to be. One other one that I wanted to mention was egg prices. Yesterday we criticized the administration because egg prices had gone up at the consumer price level. At the producer price level, they fell 21.3% last month. So maybe we'll get a tweet on that soon.
Nice. Nice. Saw what you did there, Mike. Appreciate it. Mike McKee, thank you very much. Joining us now around the table, Tony Crescenti of PIMCO. Tony, good to see you. It's been a while.
Great to see you.
Thanks for dropping by. I just got one question. Help us answer this. Has Japan been dumping US Treasuries? And how would we know?
In the data, no, slowly. And people talk about China selling, that they'll start selling, but they've been selling since February 2022 when Russia invaded Ukraine. They had at that time 1.15 trillion of US Treasuries. Now they have 750 billion, so almost 400 billion has been sold so far. So this idea that China will sell and have an impact on the market, well, that's kind of looking in the rearview mirror. There could be more of that, for sure. And it's all geopolitically driven, but it's not the determinant of yields right now.
So what is the determinant? What's going on right now?
Well, I think the nervousness you see in the value of the US dollar and the concerns in markets reflects a big concept. And I'm going to talk about it because I wrote a book on it a decade ago. And Tom Keene, I heard on the radio this morning talking about how the Greek yields, a 30-year bond, is lower than the U.S. 30-year bond.
And please, Tom hasn't changed. Continue.
And so what that tells us, John, of course, is that something's different in terms of the assessment of credit. Now, a decade ago when I wrote a book, it was called The Keynesian Endpoint, the idea that nations can reach practical limits to their indebtedness. Greece reached a Keynesian endpoint, could no longer borrow from the financial markets because of its credit problems. The UK, under Liz Truss, 2022, reached a Keynesian endpoint, and ever since, Rachel Reeves, the Chancellor of the Exchequer, the Treasury Secretary, has put the UK in austerity. So the US is seeing stress related to the idea of reaching practical limits to indebtedness, and it needs the world to have confidence in the U.S. to fund the high level of indebtedness that we have. So that's one of the major concepts to be thinking about in terms of the stress in markets.
So are you saying that what we have seen this week is Donald Trump's Liz Truss moment for the United States?
I'd rather call it a read my lips moment. George Bush, 1988 convention speech written by Peggy Noonan, famous for writing speeches from Ronald Reagan. She said the biggest takeaway was when he said, read my lips, no new taxes. 2 years later, as president, he raised taxes because the interest on the debt reached a record level, 3.2%. That stands today, that'll be broken next year. I say it's a read my lips moment because George Bush had to do something that was anathema to the party, make a politically difficult decision to raise taxes. So today, we see with societal upheaval, stress related to difficult choices that we have to make because of the high level of indebtedness. And so we'll have more of these read my lips moments ahead, stress regarding how much to raise taxes, cut taxes, spending, etc. So lots of difficult decisions that have to be guided and managed very carefully and communicated well so the markets understand where we're headed.
Tony, how do we get from a read my lips moment, though, to a Liz Truss moment?
If there's complete ignorance of what the bond market is concerned about, I would think that you would have that moment. But so far, you see some relenting to the bond market, and the James Carville-like. Remember, he said, of course, he'd like to be reincarnated as a bond investor because he can intimidate anyone. If the policymakers decide to say no to the bond market in the sense of allowing inflation to rise, so the Federal Reserve could permit it, could create that moment, but it's not. And that's why you see Fed Chair Powell being very slow and gradual and prudent about rate cuts because it's the right thing to do, because high inflation would be saying something very negative to the bond market. So I think it's if we go on a fiscally irresponsible path, you'd see the bond market pushing back. And what I would expect then, the final word, is a hall of mirrors effect, where not only are investors looking at policymakers, but policymakers are looking at markets because they matter a great deal now with the high level of debt that the U.S. has.
Aren't we there right now? Policymakers looking at markets? Donald Trump even talked about that the bond market was a bit queasy overnight.
It happened now, but in a multi-dimensional game of chess that you know Donald Trump plays, if you think he's thinking that, then you've got to think something else, perhaps. Who knows? So it may be the case that policymakers are looking. And the big signal this week from policymakers in Washington and Trump's team of rivals is the ascension, if you will, of Scott Bessent, the Treasury Secretary, speaking more in a calm fashion in ways that we're used to, Rubin-esque, you could say, as we saw under Bill Clinton and Robert Rubin as Treasury Secretary.
We were speaking with Greg Peters of PGIM Fixed Income earlier, and he said that this week really has been a game changer for him, that he can't put this back in the bottle. You can't unsay certain things, and that this really is making him rethink the role of treasuries as a safe haven asset, given that if the goal is to reduce trade, then essentially there will be less dollars overseas to invest naturally in U.S. treasuries. Are you thinking about something similar?
Yeah, and I was looking this morning, and anyone could, on the IMF website, the COFER data, COFER data. It shows how much of the world's $12 trillion in reserves is put in the U.S. dollar. The figure is today 58%. It's been in decline. The next closest nation or set of nations is Europe at 20%. For the Chinese currency, there's fewer dollars or reserves in its currency than in the Canadian dollar. And so one other point to make, though, that's just the background. If you lined up friends and foes of the United States, and I don't mean to put anyone in the foes category, but just deemed or perceived as foes, you'd see that the nations that are friends would have still have account for about 60% of world reserve assets. So if each of the friends and foes went to their respective corners, you expect that the amount of money held in dollars would still be roughly the same, close to 6%, if it went to the extremes. That's one major point. The next one is liquidity. Of course, the U.S. bond market this week has seen, according to the New York Fed, $700 billion or so of daily volume. No market comes close to that. This isn't to say that over time we couldn't see that 58% of money held in dollars decline, and you have a plurality, 49% in dollars, more in euros, more in the yen, et cetera, et cetera. It's possible, and it'll be gradual. I wouldn't expect it to be immediate.
Lisa, I'm pleased you brought up Liz Truss for a bunch of reasons, including this one. The former British Prime Minister eventually left, had to reverse policy, made a scapegoat of her Chancellor. It's a very different moment for this moment in the United States. I don't see that happening anytime soon.
Well, I don't foresee President Trump stepping down. It's unclear who he can scapegoat. This was what he promised. Promises made, promises kept, and there are a lot of people who say ultimately that the goal is the right one. But you raise a great point. What's the off-ramp? How much do you say that what we are seeing right now is a structural change that is going to last, where you cannot get these relationships back in the same kind of way?
Tony, it's good to see you. As always, thanks for dropping by.
Thanks for
Thank you.
me.
Tony Crescenzi there of PIMCO. Equity futures right now on the S&P 500 up by 0.5%. With an update on stories elsewhere, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Just to recap the most recent data, March PPI unexpectedly falling, gas and energy costs playing a major part in that. It added to the tamer than expected inflation readings that we've been getting leading up to the wave of tariffs. Thursday's CPI report also came in soft, but economists do expect inflation numbers to increase throughout the remainder of the year as President Trump's trade policy takes hold. And we also had a strong start to bank earnings on Wall Street. Morgan Stanley reporting first quarter trading revenue that topped estimates. Morgan Stanley stock traders took in a record haul in the quarter, and it raised its guidance on net interest income. On the other side of things, Wells Fargo missed on net interest income with loan demand remaining soft. Elsewhere, Shein is getting ready to go public. Reuters reporting that the fast fashion retailer secured approval for a planned IPO in London, but is yet to get the sign-off from its Chinese regulator. Shein and the UK's Financial Conduct Authority declined to comment to Reuters, and a representative for the FCA also declined to comment to Bloomberg. And that's your brief, John.
Danny, thank you. Thank you very much. Up next on the programme, we'll set you up for the week ahead, and we'll head down to Washington, D.C. to catch up with Bloomberg's Tyler Kendall. From New York City, this is Bloomberg.
In case you missed it on Balance of Power.
The statute governing the FTC says commissioners can only be removed for cause. Was there any indication that you were fired for cause?
No, there was no claim of cause, and the statute actually specifically says cause means neglect, malfeasance, or inefficiency, and there was no claim of any of those.
So as we talk about some of those other examples, keeping in mind we are having this discussion with you on the day we got a Fed rate decision, is this directly applicable to what is supposed to be an independent central bank? Is that one way in which market participants should be looking at this?
Yes, that's exactly right, and market participants should be scared. To be clear, there's no legal difference between Jerome Powell and me. In fact, he and I were both originally appointed by President Trump, and if the president can illegally remove me, he can illegally remove Jerome Powell. People should be very worried about that.
Don't miss Balance of Power, live every weekday.
Listen carefully. Can you hear the rhythm in the markets?
not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
The opening bow is about 39 minutes away. Equity futures on the S&P just about positive by 1/3 of 1%. With some movers this morning, your morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. We got some bank earnings to work through. Most of them positive, save for Wells Fargo, which is down in the pre-market. But JP Morgan is higher, though this is still far off of the highs that we saw this morning. At one point up 2%, so some of that getting pared back, but overall a really strong quarter. Record stock trading revenue from them. Also an upgrade to their net interest income outlook, but again unable to hold on to the most of their gains. We also heard from Morgan Stanley too, a strong quarter from them as well, but again it's the same pattern. Unable to hold on to the gains. They are now down 0.5%, despite the fact they talked about really strong stock trading revenue as well. And again, maybe it's just this era of uncertainty that we're living in that makes it hard to really buy into these players. Now, one stock that is gaining this morning, or at least let's hope it doesn't prove me wrong, it is still gaining up 1 1/3%, is BlackRock, which is remarkable because after they reported earnings, first they were down, now they're up. Again, everything is swinging, very volatile this morning. BlackRock missed when it came to their inflows, but analysts saying, look, it was a noisy quarter, but Evercore pointing out the fact it has a really diverse platform, which means that it can weather some of the tariff storm and the resulting turn in sentiment. John.
Danny, thank you. Great work this morning. As always, some of the movers to look for going into the opening bow. Going into the weekend and out the other side, this is what we're looking at this morning. 10 a.m., UMich sentiment. 1 p.m., a White House press briefing. Monday, earnings from Goldman. Tuesday, from Bank of America and Citi. Plus, United Airlines results after the closing bell. Wednesday, retail sales. That number will become more and more important. Thursday, an ECB decision, plus another round of jobless claims. Down in Washington, D.C., Bloomberg's Tyler Kendall joins us in the nation's capital for more. Tyler, we've had the retaliation from China. What has the response been down where you are?
Yeah, hey, John, we've gotten some fresh reaction from the White House this morning. Of course, Energy Secretary Chris Wright on this program saying that the tariffs are all just part of the negotiation. But we also heard from USTR Jamieson Greer in another interview calling Beijing's reaction unsurprising but unfortunate. Up to this point, President Trump has really tried to strike a more optimistic tone, particularly when it comes to China, saying that he's going to hang tough, but also that he has great respect for China's President Xi Jinping, but that he is still waiting for his call. We should note that the two leaders have not spoken by phone since President Trump was inaugurated back in January. And of course, as you've been discussing this entire program, Bloomberg Economics talking about how this will all but halt trade between the two countries, as we're seeing U.S. factories canceling orders, recent data showing us that trans-Pacific ship orders are already declining significantly as we start to see the impacts coming through. And John, I would just point you quickly to the countries that this administration are talking about. We keep hearing Japan, South Korea, Vietnam, India, of course, all countries that are geographically close to China.
Tyler Kendall, the latest. Some real tension here. Negotiations in some places, retaliation in others. The latest from Tyler down in Washington, D.C. One more programming note for next week. Keep an eye out for this. Anne-Marie, an exclusive conversation with the Treasury Secretary, Scott Bessent, live from Argentina early next week.
So obviously we'll be talking about trade, whether that's the negotiations that he's involved in, and also when it comes to China. Is this really the start of a negotiation, as Secretary Wright said? But also, what's going on in Argentina? Argentina just renewed this currency swap line with China. There are reports potentially there could be an extension of credit from the U.S. We do know that Argentina's Milei has a very close relationship with Donald Trump. But Latin America has become this battleground for influence between Beijing and Washington. And that's what I think makes Bessent's trip to Argentina so important at this moment.
Are you hopeful we get a quiet weekend ahead of that?
I don't think that it's possible. Sure, I'll be really hopeful, but I've got a feeling that there are plenty of fireworks, and if nothing else, if there are no fireworks, that alone will be news.
This week has been exhausting, hasn't it? It really has. The volatility has been off the charts, reminiscent of things we saw in COVID back in the great financial crisis. I'm sure you've all seen it all a million times over, but this felt different, a structural shift, and perhaps the erosion of safe haven status right here in the United States. That debate will continue through the weekend. Coming up on Sunday night at 6 p.m, we'll have that conversation. A surveillance special, just giving you a jump start on the trading week as US futures trading gets underway. That will begin at 6 p.m. Eastern time on Sunday. Look out for that. Special coverage with Bob Michael of JP Morgan, Libby Cantrell of PIMCO, and we'll be catching up with Stuart Kaiser of Citi. From New York City, that does it for all of us. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store. Which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world, and so that has been very lucrative as a business.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're ready. Go.
We finally made it to Friday, and futures are unchanged. 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Shonali Bassick. And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, China turns up the heat, calling Trump's tariffs a joke. Deputy Treasury Secretary Michael Faulkender joins Open Interest in just a few moments.
The banks cash in. JP Morgan and Morgan Stanley post record results while Jamie Dimon expresses caution on the economy.
And President Trump's dream of made in America iPhones faces hard realities. The latest on Apple's dilemma next. Some stocks we're watching, though, before we get there. Banks, of course, in focus. They reported strong trading revenue thanks to extremely volatile markets. But Jamie Dimon warning of turbulence ahead. Certainly some turbulence in shares, Matt, now turning lower despite a rally right after those results.
All right, Tesla is halting sales in China of 2 models of its EVs imported from the U.S., therefore subject to China's now 125% tariff starting tomorrow. You can see Tesla only slightly lower in the pre-market.
And Matt, I'm watching Apple over here because, of course, they face major headwinds from the U.S.-China trade war, with analyst Dan Ives saying iPhone prices could rise to $2,000 in a matter of weeks.
And on that topic, last night, President Donald Trump acknowledged there will be economic pain as the world readjusts to his trade approach.
Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing.
Let's get the latest on trade negotiations with Bloomberg's Tyler Kendall in Washington. Tyler, what do we know? What does the administration actually want from our trading partners?
Yeah, hey, Matt. Good morning. It's a pretty big question, and we're still waiting to see what sort of details. For one, of course, we know that it has to be not just addressing any trade surpluses that they might run with the U.S., but particularly also those non-tariff barriers that we hear so much about. And the biggest uncertainty, though, of course, coming as this escalation continues with China. We heard from the USTR this morning calling Beijing's recent escalation unsurprising but unfortunate after Beijing released a statement this morning calling the White House's recent actions a, quote, joke. Now, of course, as you well know, Bloomberg Economics saying that a 100% tariff on Chinese imports would all but halt U.S. imports from Beijing going forward, let alone the now 145% tariff that is currently in place. We have been getting some updates from this White House about how negotiations are going, but we really saw Treasury Secretary Scott Bessent yesterday downplay investors' concerns, saying that the recent market movements is not necessarily unusual and that there will be certainty in 90 days. But of course, at the moment, still so much uncertainty here. As the White House says, it's currently narrowing in on about 20 countries that have made what NEC Director Kevin Hassett said were sensible offers to the U.S. And I point you to the countries that they keep talking the most about. These are countries like Vietnam, India, South Korea, and Japan, which, Matt, as you know, are all geographically close to, of course, China.
Bloomberg's Tyler Kendall from Washington. We very much appreciate your reporting. And here's exactly what China had to say about the decision to cap tariffs on the United States. Given that American goods are no longer marketable in China under the current tariff rates, if the U.S. further raises tariffs on Chinese exports, China will disregard such measures. And as Tyler was saying, China then called Trump administration's actions, quote, a joke. For more, we are joined by Deputy Treasury Secretary Michael Faulkender at the White House. First, Mr. Deputy Secretary, I'm looking for the administration's reaction to China, because President Trump said he is waiting for China's call, but would he pick up the phone to call Beijing?
Great to be with you this morning. That's right. We are looking for China to pull back on its tariff retaliation and to come to the table and discuss with us how they're going to address these decades-long, not only tariff but non-tariff barriers. As Secretary Mnuchin and Ambassador Lighthizer in the first Trump administration focused on in negotiating with China, there are long-standing issues with intellectual property theft, with illegal subsidies, with forced technology transfers, and the president came into office campaigning on the fact that we were finally going to address these. Instead of coming to the table and negotiating with us on those things, China has chosen to retaliate. We welcome the Chinese to get in touch with us and start discussing how we can address some of these long-standing inequities in our relationship.
Well, let's talk a little bit more about that. We were having a great conversation with Heyman Capital's Kyle Bass yesterday. He made the point that it's not clear what the off-ramp is here when it comes to the relationship with China, and that was before even we saw the latest retaliation from Beijing. So I want to hear specifics here. When it comes to concessions, what exactly does the Trump administration want? I mean, we talked about a few of them just now, but bring fentanyl into the conversation, for example.
Absolutely. I mean, you saw when the president came into office, one of the very first things he did was extend tariffs in order to address the fentanyl crisis. Because as you said, we have somewhere between 70,000 and 100,000 Americans die from the fentanyl whose precursors are coming from China. So yes, in addition to addressing these long-standing issues on intellectual property theft, we want them to take every step necessary to halt the precursors that are coming into Mexico and Canada that end up becoming the fentanyl that's illegal crossing into our country. We are looking for them to address as I said, the long-standing price quotas, the capital controls that are keeping American products and American financial services from coming into China. We are looking for them to fulfill the terms of their Phase 1 China trade agreement. So we are looking for active steps by the Chinese to live up to their existing obligations and in order to bring some, again, equality back to this relationship. As the pandemic demonstrated and as current conditions are showing, the Chinese need to address some of their practices that are putting the United States industrial base and the United States economy in a position that the president recognizes is not sustainable. And so we are looking for them to work with us in order to create an environment whereby we can address these vulnerabilities, where they can come to the table and equitably address these long-standing issues that have given them an unfair advantage and that have done detrimental harm to America's manufacturing base, America's small towns and communities. And this president is committed to making sure that we do something about these issues. And so, as he has acknowledged, there are going to be some transition issues associated with it, but the most important thing we can do is see the Chinese acknowledge and address these long-standing inequities and actively do something about it.
Michael, I want to talk about, I've long dreamt of a United States in which we have no income tax, but we get so much revenue from personal income taxes, $2.2 trillion. We get about $450 billion from corporate taxes, and we're only looking at it 10%, maybe 300 to 400 billion from tariffs. What kind of tariff revenue do you expect we can start building annually, and how much or to what extent can that replace taxes on citizens?
Yeah, thanks for bringing up the tax issue. As you saw yesterday, we had the House of Representatives pass the budget resolution. We are very much looking to coordinate the tariff revenue that we generate as an offset for purposes of realizing deficit reductions.
But will it be enough?
When you look at the cost of the extension of the Tax Cuts and Jobs Act, as well as the economic growth that's going to be realized from the implementation of the president's policies, that's more than offset by the projections and tariff revenues that are going to come in, such that we can simultaneously extend tax reform, deregulate the economy, get the growth that we anticipate, bring American jobs back on shore, and bring our deficits down, and get to that 3% deficit to GDP target that the Secretary has been talking about. And so the full implementation of this is what's underway since day one. And when you look at the major success that we had with the House yesterday, the full implementation of the president's plan is well underway.
Deputy Secretary, I'm wondering if you can give us an update, because Secretary Bessent has said that the Treasury's borrowing authority could run out in June or July. What is an update on the X-date timing, given the tax receipts that are coming in, and how likely is it that we could see a situation where we hit that sooner, say May?
Right, so as you just recognized, the update is coming from the fact that tax day is next week. And so once we hit April 15th and once those automatic payments and checks that come in are processed, we will see how much the tax revenue came in. So far, what we're seeing, we released the monthly Treasury statement earlier this week. We're seeing that gross receipts are coming in higher than last year. So that seems to suggest that we may have a robust tax filing season in terms of revenues that come in. Until we get those final numbers, we're not really in a position to update the X-date. But what we're looking for is for Congress to understand that getting the reconciliation process started with yesterday's vote in the House is important, because we don't want to get anywhere close to the X-date. And so what we want to do is start work immediately on getting the reconciliation package done that includes a debt ceiling increase, so that we get nowhere near a potential X-date.
And Deputy Secretary, on the topic of taxes, Bloomberg News reported last week, I believe, that Republicans are considering hiking the tax rate to 40% for millionaires. And I'm just wondering how seriously the administration is considering something like that.
What we're most importantly looking to do is make sure that tax reform, that the Tax Cuts and Jobs Act from 17 gets extended. We are discussing a number of potential offsets with members of Congress, but I don't want to get into the specifics of any negotiation on any one particular parameter.
All right, I just want to finally ask about DOGE and get a ballpark figure from you there as well. How much do you expect DOGE is going to be able to cut annually? You know, if you can't give a 2025 number, what do you think it'll look like in 2026? Because that obviously can also help to offset any tax cuts.
That's right. So in addition to some of the things that we're looking to negotiate with Congress in terms of mandatory spending reductions, a lot of the efficiencies that DOGE is identifying are going to help us submit a budget to Congress that's going to have reductions in discretionary spending, because as we modernize our systems, as we look for efficiencies in the way that we deploy the federal bureaucracy, as we reduce the scope and scale of government's intervention into the private economy, we are going to bring down the cost of government. Just in the Treasury Department alone, we are looking at billions of dollars in efficiency realizations. And so DOGE is going to keep working for another couple of months, and we're going to add those up. I would not at all be surprised if it's on the order of $50 billion a year that we can realize in cost reductions. And so once you project that over the entire...
$50 billion? I thought we were looking at like $500 billion a year in cuts from DOGE. I mean, the original...
I mean, so I'm just talking about on the discretionary side. In addition to that, there's another one of their big ideas, or one of their big agenda items, is to look at all the waste and fraud that GAO has identified. They identified that there's $200 to $300 billion a year in improper payments. So if we find ways to utilize systems to reduce improper payments, there's potentially hundreds of billions there. But on the reductions in spending on the discretionary side, we are in the $50 billion. It should be reached without any problem. I have not seen updates outside of Treasury in terms of how much larger we could get once you go beyond.
Secretary, one other question I have before I let you go here, because even beyond what you might see in terms of money coming in and out the door for the U.S. government, you are seeing the bond market react. You're still seeing it react fairly significantly, with the 10-year yield at about 4.5% as we speak, the 30-year at about 4.9%, yield still higher. How concerned is the Treasury Department that borrowing costs at the longer end of the curve are rising this drastically?
Right, so we did a 10-year auction and a 30-year auction earlier this week. Both of them had very strong subscriptions to it. We saw international investors come in and continue to participate in that bond auction. And so we are seeing that markets continue to function well. We are seeing that there continues to be strong demand for Treasury securities. And so far, we are monitoring the situation, but liquidity seems to be just fine in the bond market. And so as we generate realization of some of the negotiations that are going on, we anticipate that that's going to continue to bolster demand for dollars and dollar-denominated securities and reduce some of the volatility that's currently in capital markets.
Deputy Secretary, we really appreciate your time this morning. That is Deputy Treasury Secretary Michael Faulkender. Meanwhile, let's get a check on these markets. As Sonali mentioned, the bond market really spiking right now in terms of yield. That sell-off reigniting. You can see the 10-year Treasury yields up about 6 basis points right now. We're knocking on the door of 4.5%. That is taking some momentum out of the equity market before the bell. You can see the S&P 500 futures flipping to the red, now down 0.5%. Same story if you take a look at the NASDAQ 100. We were up slightly just a couple minutes ago, but you can see that maybe that bond sell-off that we're seeing putting some fear back in this equity market. Now coming up, bank earnings season is officially underway. We'll take a look at this morning's heavy hitters with Baird analyst David George next. This is Open Interest.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
What mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
You're going to hear 1,000 companies report, and they're going to tell you what their guidance is. My guess is a lot will remove it. They're going to tell you what they think it might do to their customers, their base, their earnings, their costs, their tariffs. It's different for every company, but I assume you'll see that. And anecdotally, a lot of people are not doing things because of this. They're going to wait and see.
And of course, that is Jamie Dimon striking a cautious tone as bank earnings roll in this morning. JP Morgan and Morgan Stanley have beat on equities trading, while Wells Fargo topped estimates for expenses and loan loss provisions. Joining us now, David George, senior research analyst at Baird. And only Jamie Dimon would bring in a record haul for equities trading and still have a weather report here that is so cautious. And of course, you would expect that in the midst of these tariffs. I think what investors expected less of is how well these banks are doing. Can they continue this, or is the party over?
Oh, I don't know that it's either of those. I think it's a situation where first quarter numbers were excellent. And as you mentioned, some parts of the capital markets, most notably trading, in the case of JP Morgan, was up almost 50% year over year. That's 5-0. So they did benefit quite a bit from that volatility. And then they took around $1 billion and threw it into the reserve because they can. They've got the earnings power to be able to do it. They've got the balance sheet to withstand virtually any economic environment. So I think that what Jamie is saying is that whatever we're going through at this moment, whatever we want to call it, has paralyzed business activity, and there are a lot of unknowns. But the only thing we do know is that JP Morgan's very well positioned to weather any environment, and they did guide up for their net interest income, and the NII number, Sonali, is simply just a math equation. So bank NII should be fine, but fees and credit are kind of the open questions at this point.
Yeah, I wonder if you can expand on that a little bit, David, because it seems like they may be getting a lot of trading revenue in this current quarter, but I wonder if advisory fees are going to tank, not just now, but throughout the rest of the year. Do you see a chance for that coming back?
Yeah, I think, and good morning, Matt. I think that that trading so far in April is probably pretty robust, but clearly I think everyone could agree that JP Morgan is over-earning on trading this quarter, but it did offset, as you mentioned, some softness in M&A and advisory. And I think it's fair to say, and Jamie said this a moment ago on the call, that activity levels have come to a halt, particularly in some sectors that have either direct or indirect impacts from these tariffs or prospective tariffs. So think it's reasonable to assume that any M&A activity is going to be on pause. And I would stress that it's probably a pause rather than a cancel. And I think that's important to note. But clearly there is a ton of uncertainty. The stocks are, the quarter was very good. The outlook seems reasonable. The stocks are cheap. But for the moment, we are just going to be a victim of what's happening in the macro and around tariff discussions and really bond market volatility and equity market volatility at the same time.
Right, David. I think that's true of many industries right now. I also want to talk about Wells Fargo, also out with their earnings this morning. You saw initial positive reaction in the market, but now you can see that shares down about 2%. What's your read? I'm looking through it. I see that, their non-interest expenses actually declined. What they set aside for loan loss provisions, that came in a little bit below analyst expectations. What do you make of the numbers?
Yeah, I thought the numbers at Wells were good. They have Charlie and his team have done a great job in the face of this asset cap kind of continuing to execute their business plan. And if we're not dealing with tariff headlines, I would expect the stock to be up today. So the numbers were good. The provision came in a little light, which was a little surprising, but leading indicators, interestingly enough, on credit are good. Non-performing loans at both JP Morgan and Wells were down sequentially. So the credit situation today is quite good. And the next 6 months, I think it's reasonable to assume a shallow recession. And I think that both companies are positioned for that, and the stocks and the bank group broadly, I think, are pricing that in at this point as well.
I want to point out some of the comments that Jamie Dimon is making in the earnings call, because he's talking about the bond market. He says there could be a kerfluffle in Treasury markets. He also talks about the 10-year. He says that the notion that it has to go down is false. So you're seeing Jamie Dimon kind of draw caution to the Treasury Secretary, his wish of the 10-year being lower. He says that there could be substantive effects here at the longer end of the curve. When you think about the bond market equation for these banks, what is the scenario here that would start to concern you?
That's several questions in one, Shanali, but I think the concern is there's both direct and indirect impacts. So the direct impacts, and that it has an impact potentially on bank capital, that's something that's not particularly concerning. But I think it's important to just kind of consider how the 10-year is an integral part of our economy. On one hand, that's how the government presumably is going to fund itself. Eventually, they're going to need to issue longer dated paper. So that's a complete other TV show you may want to consider having. But as a practical matter, on Main Street, which is what the administration is claiming to be in favor for in all of this, this is going to make its way into mortgages. So mortgage rates, so 10 years up 50 basis points this week. Mortgage rates will be up at least 50 basis points on a week-over-week basis. So this will have implications across the entire economy. Borrowing rates for companies that want to do longer-term financing will go up. So I'm not going to try and paint it as a positive, because it's not.
All right, David, let's end on that note then. That is David George of Baird breaking down the heavy hitters on the bank earnings reporting season stage. Meanwhile, we want to pivot here and talk about these markets, because Bank of America's Michael Hartnett, the latest strategist, to tell investors to remain cautious of these rallies. He recommends actually that investors sell any rallies for the S&P 500 until the Fed steps in or the U.S.-China trade spat comes to a conclusion. He suggests a short position on stocks and a long bet on 2-year treasuries. Let's discuss with HSBC Chief Multi-Asset Strategist Max Kettner. Max, it's great to have you with us. So it's one thing to say, sell the rally, be cautious of the rally. It's another thing to say, actually, you should short the S&P 500. Where do you stand on that debate?
Yeah, I do see the same thing, actually. I think particularly on US equities, still a bit cautious. In fact, there is another complication that has just been added in the last 48 hours. Just a week ago, we were trading at 385 on the 10-year. So we were anywhere near a level where higher yields would be any kind of trouble or spelling any kind of trouble for risk assets. Now at 4.5% at the 10-year, actually, we did some analysis earlier this year in January. Where's the kind of level of the 10-year where it really starts hurting all the risk assets? And incidentally, we're right at that level right now. We're at that 4.5%. We're just breaching what we call that danger zone. Now, you might argue that that is, in the current environment, not particularly important because it's all about tariffs, it's all about politics. But I would say, given this persistent uncertainty and now yields having entered that bearish, that danger zone where it puts additional pressure on equities, that makes me even more cautious in US equities. And it makes me really think, you know what, every sort of short-term rally that you've got, just like on Wednesday, for example, those are really the kind of rips that you want to continue to sell.
All right, so yeah, cautious or actively selling? Do you just sell the rallies? Do you actually short US stocks?
Yeah, I mean, look, in our asset allocation, we're massively underweight US equities. We're massively underweight US high yield, right? So we are really having right now a much, much bigger allocation to rest of world equities. I think particularly Eurozone, even China, I think stand to benefit, at least in relative terms right now. But of course, it's all about where do you hide out right now? Because previously we were thinking, okay, if I short equities, Matt, just like you were saying, what do I do? Where do I put it? Do I put it in long-term bonds? Well, that's not really working right now. The correlation has snapped back into positive. And obviously, perhaps we might even get something like debt sustainability concerns once again, and that would be weighing on the long end of the curve, at least temporarily again. So, you know, US Treasury is probably not the place to hide out. US dollar as well. I think it's much more yen and gold.
Max, you're sticking with us. That is HSBC's Max Kettner. Futures lower ahead of the opening bell, less than 4 minutes away. Stick with us. This is Open Interest.
And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, Anti-Money Laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussions in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg.
Okay, just got back. 1 minute to the open. What are we doing? What are we doing? Had a big drop.
All right, it will be exciting.
Nobody
Get rid of this.
like
How's that go?
Bloomberg.
Sorry about that. Alright, center this chart.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Futures are
Just gonna take my time today. I just got to get 1850.
A little bit less on the NASDAQ. But really, I think a
No
focus
rush.
should be on yields because they continue to rise, and that is not a great thing, as we heard from Andrew Sliman yesterday, for stocks, or vice versa. There's the opening bell at the New York Stock Exchange. Project Hood ringing the bell down there. I don't think
Here's
they
the open.
necessarily sell anything, but PetMeds tries to, and they brought dogs to the NASDAQ marketplace, which is something I think
So we had a drop off that news this
Friday
morning.
of doom and gloom.
Let's check out that news
Unfortunately
and
for
see what
those
they
dogs, the stock is down
Must have come in
90%
below.
over the last 5 years. What stocks, Katie Greifeld, are you watching this morning? How are they doing?
Well, I'm looking at the banks, and they're also not doing too hot. They did post strong trading revenue thanks to these very volatile markets. You did hear Jamie Dimon warn of turbulence ahead, though. You can see that his stock, though, is up about 0.7%. But you look at some of his peers, Wells Fargo, Morgan Stanley,
Yeah,
after
you missed
actually
it.
gaining pre-market,
You
Chanel
missed
now
PMI.
down as the
10
cash
o'clock that
trading begins.
University of Michigan sentiment, that has an
because
impact.
of course they face major
So we're not looking at doing anything till at least 10:45, 11 o'clock, and see if we can get the forecast cloud to turn on and just get a nice smooth trade.
And Matt, I'm feeling kind of bummed that I just broke my iPhone this week.
See here.
Well,
gonna have to get a new one.
Buy one now.
Right.
Before those tariffs hit,
Bears watching
Dan
but
Ives was
not
saying
seeing fundamentals.
90% of iPhones are made in China. That's even more than I thought. Tesla is halting sales in, speaking of China,
Trump is the chief
of two of its models
negotiator.
of EVs imported from the U.S. Obviously, they are subject now to 125% tariffs, so that would make the price exceedingly high. Bloomberg Intelligence senior analyst Mandeep Singh joins us now to break down what we're seeing in terms of the tech trade. Let me first just ask about Tesla. I don't even know if it's in your wheelhouse, but
Tough position
does
in
it
pushing
matter about
inflation
car
up and
sales?
slowing
I mean,
growth.
this is a robot AI company, right?
Well, not really. I mean, if you look at how they make their money right now, it is all about the EV car sales, and to an extent, autonomous driving is less than 10%. But I
Kremlin,
think
no
EV car
breakthrough
sales do
seen.
matter a great deal for Tesla.
So it looks like they're not going to
So it still
negotiate
matters
anything
for
in
Tesla. Let's talk
Ukraine
about the
yet.
rest of the food chain here. When you think about the Magnificent Seven, obviously it's been a very tough trade. And I mean, what is the bull case right now? We've heard a lot of bearish takes, a lot of doom and gloom. Dan Ives is changing his stripes as well.
Came in
what do you
under.
see as the light at the end of the tunnel here?
Yeah, look, just this week we heard two of the Mag 7 give their CapEx guide, and they reaffirmed it. They said, irrespective of the economy, we are spending CapEx. So to my mind, 4 of these hyperscalers are spending
Well, that's
their
good
CapEx
news.
dollars. It benefits the fifth one, NVIDIA. And if you leave aside Apple
Trump's
and
going to
Tesla,
be crypto friendly.
AI is what has carried the weight of this market since end of 2022. And I feel it's still the secular trend that everyone is bullish on. Companies are spending. So from that perspective, you could see, sentiment improve. And this earnings season obviously will be a good indicator in terms of the impact of tariffs. But what these companies are suggesting is even if there are tariffs, they're only going to bear,
Eds Collins, U.S.-China tariff hikes are
the rest
extremely
will come from
concerning.
suppliers. Probably 1/3 will be borne by the customers. So from that perspective, the
Yeah, the
margin
Fed's just going to fight
downside,
Trump the whole
at
way
least for
until
now, seems to be
he
limited.
goes to
And as
war
long as
against
these
them.
companies are bullish on CapEx,
Get
I
'em out of
think the
there.
AI side of the story still remains intact.
Mandeep Singh of Bloomberg Intelligence. We are now back also by Max Kettner, HSBC Chief Multi-Asset
We're on a
Strategist.
downward path
And I
so
want
far.
to double down on the tech story in this market because
Yes.
the declines you're seeing in Apple, I just took a look at how steep they are relative to other times. And almost 25% decline into April this year is equal to nearly their entire loss for 2022. We knew how the market ended up that year. And so you are seeing a mixed trade when it comes to big tech.
30.
How do you treat it, and do you worry about much
All right, let's
steeper
go back to the
declines?
ES.
I do worry. I'm not sure.
All right,
whether
so
that's
we're sit and
just,
wait.
tech.
We need
I don't
10
think it's
o'clock to
just
go
a
by.
tech-driven story where I actually worry a bit more.
Wait for 10:30,
rather than just
11.
the
See what
Magnificent Seven,
happens.
Is when we look outside of the Magnificent Seven, I think cyclicals over defensives, not only in the US but really also globally, are not yet pricing in enough pain. So you could argue, when you look at the Mag 7, that perhaps they've already started pricing in quite a lot of pain already. The issue, of course, is that would be probably applicable in a normal sort of downturn scenario where the data slow down because of, let's say, cyclical reasons, a kind of sort of typical risk-off scenario where you would say, fine, that is where I'm more buying the structural stories, the structural growth stories like the Mag 7, and I'm going short the cyclicals. Of course, right now with the tariff headlines,
all right,
sort of probably
so that's it. We're wait and hold. Just watch it go by.
And the cyclicals, and
wait for all the news to get in for the day.
Steep decline.
Settle down nice. Try and make nice couple, maybe nice smooth little trades, 900 apiece, and slide into the XFA for Monday is the plan.
Or individual asset
all right,
price
I'll check in as
things
develop.
Picked out a buy. I mean, when you're sitting in bed thinking about this at night, are you like, man, I'll buy the Mag 7 index when it gets to 1700?
Not sure that's what I'm thinking about when I go to sleep, but you know, apart from that, when I think about it, I think when we look at some of our fundamental models, then you know, the gap between cyclicals over defensives globally relative to our sort of fundamental models is at the moment around 9 percentage points high. And that gap really needs to be closed. So we need to see a sort of underperformance of cyclicals over defensives globally of another 9 percentage points. I think then we're at the place where we can say, look, if there's a recession coming, it's now thoroughly priced in, so buy at these levels. If there's no recession coming or only a shallow slowdown, then buy even more. Right? So that's sort of what we're waiting for. I think it's a 9 percentage point roughly underperformance of globally cyclicals over defensives. Right. Then I think we can really say this is pretty likely the bottom.
I want to talk about drivers here because it just feels like the bond market is in the driver's seat. I mean, we know that President Donald Trump is watching the bond market because Jamie Dimon is watching the bond market, and it just feels like stocks and equities in general around the world are responding to what's happening in the U.S. Treasury market. So how hard is it to make a call on stocks right now, given that it seems to be technical factors that are at play in fixed income?
Yeah, so I would, you know what, I'm going to be a classic strategist and agree with half of your statement and disagree with half of your statement. I think, you know, when we look at it, the technical drivers, I think you're 100% right. We've seen a lot of unwinding of systematic strategies, of trend-following strategies. That's likely coming to its end. That's number one. Number two, the bond market move, of course. Like I said in the first segment, you know, we are starting to enter that danger zone, that zone where really higher yields start biting risk assets across the board. Again, that doesn't help that it's technically driven. But I would argue, when we look at the next 3 weeks, the reporting season, look, I mean, as a corporate, as a CEO, CFO, you've got every incentive right now to pull your guidance or to cut your guidance at least. And that, of course, would be, I think, taken by the market as sort of the first evidence that on the ground, things really start deteriorating or perhaps have already deteriorated. And then, of course, the recession worries intensify even more. So I would say half of it, yeah, technically driven. The other half, however, is really very, very classic old school fundamentals around a recession and slowdown fear.
We are going to bring you guys a lot more about those guidance cuts in this show. But first, Max, I want to talk to you about the VIX because you're looking at sustained volatility here at levels that you really have not seen. We saw, of course, the carry trade unwind last year, but to stay above 40 for this long, you really haven't seen it since the onset of the pandemic. And if you're sitting there, a trader with an itchy trigger finger, do you sit there and buy volatility now? Do you think it actually gets worse from here? Do you sit there and, given the bearishness that still exists out there, do you head for put buying? What is the trade that you could make here that is the safest one?
Yeah, I don't think it's VIX buying right now at the moment because when we look at the VIX futures curve, so look at the first versus the third future, look second versus fourth or something like that, it is fully inverted, i.e. really buying protection now on the front end is extremely costly. So that's probably not it. I think it's much more raising cash. Where do I put the cash? Do I put it in gold? Yes, absolutely. Still at these levels, I think I'd be an absolute buyer of gold because you know, in a stagflation scenario, that should be outperforming the long end. In a scenario where we are more worried about debt sustainability, it outperforms the long end. And if we get proper recession, I would argue probably the long end and gold perform pretty much in line with each other. So it is still gold levels to buy gold. I think also in terms of parking cash, what currency? I think the Japanese yen still really stands to benefit here. And in terms of where do you put the money, it's probably more like something like euro rates. You know, the ECB has more room to cut, and it is perhaps less prone to these sort of technical factors that we were just discussing around the bond market. So euro rates is probably a bit of a better risk-off alternative and hedge than treasuries. But on the VIX specifically, I think it's got a bit too punitive, certainly too costly because of this full-on inversion of the VIX futures curve.
All right, Max Kettner talking to us about the inversions out there. Thank you so much for joining us from HSBC. We will be watching that ECB decision in 6 days from now. Big bank earnings began this morning. Shanali's been here since like 3 a.m. We'll recap all of those reports next and tell you what they mean. This is Bloomberg Open Interest.
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is a trillion-dollar game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, American Express getting upgraded to a buy over at Bank of America. The firm says it's recession resilient and that high quality customer base should drive earnings and also keep those credit losses in check. Next up, we have Cinemark getting raised to a buy over at JP Morgan. The firm says that the cinema company is one of the least economically exposed firms in today's volatile environment. People are still going to the movies. And finally, we have Coty getting downgraded over at BNP Paribas Exane. The firm sees a more unfavorable backdrop thanks to lackluster beauty trends and tariffs, Janali.
And now we're going to head back to the banks because JP Morgan reporting strong results, but CEO Jamie Dimon expressing caution about the economy.
People are not doing things because of this. They're going to wait and see, and that's That's M&A. That's M&A with middle market companies. That's people's hiring plans and stuff like that. So people have to adjust this new environment.
For more, we are joined by Bloomberg finance reporter Catherine Doherty. There are live blogs going on for both calls, JP Morgan, Morgan Stanley, from all of our colleagues on the finance desk. I know bagels are around the corner for us too. Long morning. You know, despite the numbers themselves, we saw record trading at Morgan Stanley and JP Morgan. How do you describe the kind of caution we're hearing from the bank executives?
So there's the two consumers and the corporate clients that they're both painting this very tepid, uncertain outlook ahead. And that is affecting behavior. So for consumers, what JP Morgan's on their call, what they highlighted was that the behavior has been actually a move forward. People are spending with the expectation that costs for some of the goods, whether it's an iPhone or maybe it's something that you were holding out to buy, a car, you might be going to get that item now with the expectation that prices could increase tied to tariffs. Now, with corporate behavior, what was referenced on today's call is that they're starting to see a lot of the companies that they're working with hold back on they're changing their strategies. So they're looking at what are the things that we need to do to shore up our ability to potentially handle price increases, or if these tariffs do change the way that we need to manufacture, potentially moving to the US, those are the types of decisions that money managers at these companies are starting to think about, rather than how to spend to be more on the offensive, rather than, I think right now what's the change in the mood is moving to the defensive.
I've been monitoring savings account levels and debt levels, and they seem to be savings account levels moving lower, debt levels moving higher across income groups. Have you heard any bifurcation of consumers? Have you heard anyone talk about a low-income consumer is having a tougher time, a high-income consumer is doing better, or are they all put in one bucket now?
So across the board, JP Morgan just highlighted strength for the consumer and that they're not seeing cracks yet. But I do think that what they are also pointing out, and the difference that you're alluding to, is that with the higher end consumer, there is a slight advantage that they're given. And I think that they're seeing that in the form of spending, and also the savings are they have a little bit more of a cushion than at the lower end of the consumer, but they're not yet saying that that low end consumer is experiencing financial stress that would cause concern as of today.
And Catherine, I want to talk a little bit about Jamie Dimon, the man himself. I mean, he just said on the earnings call that the bank will be in the crosshairs of the trade war. But as you've reported on throughout this week, Jamie Dimon has been also an influential voice when it comes to our trade policy.
That's correct. He has spoken an earlier interview on Fox. He put out his annual letter on Sunday night. So those were both moments that the market and even President Trump was digesting, putting out his own reactions to what Dimon was saying. And on today's call, analysts did ask Dimon, was this changing how you were given your own outlook, or were you even aware of the president listening in to your commentary? And he said, I was not aware, and it does not change my approach or how I want to communicate to our customers and to the market at large.
Kat, thank you so much. That's Catherine Doherty of Bloomberg News. And I want to point out, guys, Morgan Stanley, one little gem in all of these standout figures is the almost $700 million they made in so-called other revenue, much of which was tied to selling off the debt tied to X. So Elon Musk, a friend to Morgan Stanley in this administration.
But did that debt cost them money over the last 4 or 8
That's a good question.
or 12 quarters?
I would say the opportunity cost, you can consider a cost. And also, by the way, because Jamie Dimon was saying there's more hung loans, we know that that could hurt for a while. But, you know, a happy end to what has otherwise been a long, frustrating story. Don't forget to tune in. We have an interview with Wells Fargo's CFO later today at 3 p.m. New York time. Wells Fargo has been choppy in the trade. We'll see what he has to say. Now coming up, President Trump's dreams of phones being made in America. We're going to look at how realistic that is next. This is Bloomberg Open Interest.
minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. Check on stocks. Right now, we are seeing gains on the S&P 500 at 1/3%. The NASDAQ rising 0.4% as some of the big tech stocks are rising. I think it's interesting that you're looking at yields that continue to climb, although we're a little bit off the danger zone in the 10-year yield of 450 right now at 448.16. These tech stocks are the reason that you're seeing green on the screen. Okay, Tesla is down, but not by much. NVIDIA is up 2%. Apple is up 0.5%. You've got Google and Microsoft gaining, and then the banks, well, JP Morgan, the one bank that's really putting up some gains, Katie. And that is enough to lift the market 1/3%.
And you can see also Apple shares up about 0.5%. And that's where I want to focus in on, because this week the White House made its stance clear. President Trump wants Apple to begin building iPhones in the U.S., but the dream of an American-made iPhone really faces a reality check. So let's discuss that now with Bloomberg Technology co-host Caroline Hyde. So Caroline, walk us through the different components here. There's the issue that I don't think we have the factories that are needed to build these iPhones in the United States, but talk to us about labor, suppliers, the list goes on.
The talent, the engineering tooling, that we just don't have the labor capabilities. There's a great sort of visual that Mark Gurman, who is our key Apple reporter, paints. Do you want the entirety of Boston to become iPhone City? Because that's what it's going to take. It's going to take hundreds of thousands of people, and you'd have to totally flatten Boston, remake it into a manufacturing hub where people can sleep, they can eat, they can go and get their hair done, they can have gyms. It would be an entire city where the right labor supply comes together with the right ecosystem of STEM learning to supply that labor. And then you need the ecosystem of suppliers to come in as well. Asia is perfect for it. The US is not.
How insane is the supply chain? And well, you know, you have another comment that you made in the IB that I have to bring up too.
Yeah.
Why Boston, right? I mean, maybe
well, that's right.
real
It's
estate,
500,000 people, and that's about the amount of people that you're going to need
in the whole city. But you know, just to kind of talk through the
tiny town. There's only 500,000 people in Boston. It's got to be more than that.
Maybe not sprawling Boston, inner Boston.
Got it.
You know, to the point that you guys are making here, it's not just the size of the amount of workforce we need or space that's needed, it's the actual materials as well.
Precisely, and that's why some of the rare earths and some of the imposition of stopping selling things into the United States is going to be a real hamper for the tech ecosystem if you wanted to build it here. Look, actually, Apple already makes Mac Pros in Texas. But where did they get the parts to assemble that Mac Pro? From China. Ultimately, this is about having to have the entirety of the chemicals, the rare earths, the ecosystem, the fact also that we are turning over iPhones, every 6 months? So it's not just about having one manufacturing unit that's good to go, it's about re-catering that manufacturing unit every 6 months to be able to make the most precise little changes. This is why they've tried in India. This has been for a decade. They've tried to make India a hub, and it almost is. Look, they're going to be fulfilling about 35 million phones. That is going to satisfy a lot of the demand in the United States. That is where Tim Cook is going to be focusing all of his energies. But this isn't easy to do. They've been trying to diversify for many years, and ultimately India has got the space and it's got the people, it's got the STEM education. They've been able to replicate to a certain extent, but 220 million phones are sold per year,
Right.
and of varying degrees with different intricacy. Over in Brazil, in Latin America, they do have a hub, but for much lower end phones as well. So this is really sophisticated and hard.
Well, and also diversifying to India and to Brazil is a lot different than producing here in America. When I talk to car makers, they all tell me, none of them on the record, obviously, that you know, it takes so long to do this, and it's such an investment for the future that maybe they wait 2 years and see how the Republicans do in the midterms. And certainly, unless he changes the Constitution, right, Donald Trump isn't staying here for longer than one term. So.
And Apple has committed a lot of money. Look, we heard from the spokesperson of the White House, of course, Caroline herself, good name, but spelled with a K. Caroline Levitt was saying, look, they're already putting a big chunk of change into the United States. What was it, $500 billion that they've committed to spend over the next few years? But that is in the manufacturing and more of data centers. This isn't going to be about the intricacies of making an iPhone. It is a decade-long program, and this is why you're seeing Apple sell off so hard. Yes, it's up today. Yes, it's up on the week, but it's still down by more than 5% on the month. More broadly, people are worried about a 90% increase in costs of making an iPhone if you brought it to the US. That's what Bank of America say.
All right. Caroline, thanks so much for joining us. Caroline Hyde, they're talking to us about Apple and the iPhone, how much it'll cost if these tariffs stay in effect. Coming up in the next hour, we'll talk to Joanne Shu from the University of Michigan on the consumer sentiment data that we're going to get out at the top of the hour. This is Open Interest.
Okay, 2 minutes till the University of Michigan sentiment is released.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability.
And I'm on
Does
hold
that
with
take
customer
pressure off?
service
Does it
for
increase
something I
pressure?
purchased. So if you heard that in the background,
once you
that's
start
what that
making
is.
profits, people expect you to make more, and all of a
I
sudden
got 10 things
valued
going
at a
on here.
multiple of those
So
profits as
once
opposed
this
to the
comes
theory
out,
of
we'll
what could be.
probably get a
So
market reaction one way or another. I have no idea. Right now, we're kind of between this fair value gap up above for resistance, these trend lines, and you got the VWAP down here. So where we land on this, I have no idea, but I'm going to wait until it filters through and the market figures it out. I'm hoping by 11 o'clock our trade box will turn on. We'll get some reasonable volume. And
really strong revenue
we'll
growth.
start,
You don't need that.
we'll start hunting for the trade. I just need 1850. 1850 today. I'll be back on the Funded Express account on Monday. And we'll see if we can't build our fortune with the system I built.
We want to grow our revenue into our existing
All right.
and there's no need to reduce
27
the cost
seconds.
for being efficient with what we allow our cost growth to look like.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Oh, here we go. News has been released. Preliminary. Here, I'll show you the news. I've got it over on the NQ.
I'm Deborah Rodriguez. China's hit back at a new hike in U.S. tariffs with its own
Preliminary.
increase. Beijing says it'll
Actual
raise taxes on
56.5,
American-made products to
previous
125%, a day after President Trump announced 145% tariffs on Chinese goods. Some countries may be ready to negotiate. Correspondent Weijia Jiang.
The White House says the U.S. and Vietnam have agreed to start formal discussions, and others are in the works. China is not among those countries. A top official warned if the U.S. wants a trade war, China will fight to the end.
U.S. envoy Steve Witkoff's made an unannounced visit to St. Petersburg to meet with Vladimir Putin. The Kremlin says it does not expect any breakthroughs on the war in Ukraine. Meantime, Yesenia Karolina, the ballerina with dual U.S.-Russian citizenship, freed in a prisoner swap, is back home. CBS's Michael George.
Karolina touched down at Joint Base Andrews late last night, and her next stop is expected to be San Antonio, Texas. There's a program that helps people who were wrongfully detained, and you might remember that's where WNBA star Brittany Griner went after her return to the U.S.
Karolina was convicted of treason in Russia for making a $52 donation to a Ukraine charity. And investigations underway into yesterday's helicopter crash in the river off New York City that killed a family of 5 tourists and the pilot. Video shows the chopper coming apart in midair and plunging into the Hudson. Former NTSB chair Robert Sumwalt.
I'm not saying that this is a factor, but sometimes the pilot can control the helicopter in a manner that it's over-controlled and the tail comes off the aircraft.
Columbia University grad student Mahmoud Khalil, detained for pro-Palestinian protests, is scheduled to go before an immigration judge in Louisiana today. Legal analyst Thane Rosenbaum.
The court ordered the Department of Homeland Security to present evidence justifying the revocation of a green card of a lawful resident and then ordering his deportation without judicial review.
President Trump gets a physical today. CBS's Linda Kenyon.
When he ran for president in 2015, his then doctor stated he would be the, quote, healthiest individual ever elected to the presidency. The doctor later admitted Trump had dictated those words. One question is whether the president's physical will also include a cognitive exam.
Sad announcement from a Hollywood actor.
Hi. Can I help you?
Euphoria and Grey's Anatomy star Eric Dane says he's been diagnosed with ALS, Lou Gehrig's disease. It causes progressive paralysis of the muscles, and there's no cure. Dane says he looks forward to returning to the set of Euphoria next week. Dow, S&P futures, NASDAQ futures about flat right now. This is CBS News. Thinking about investing in U.S. bonds? J.P. Morgan's Jamie Dimon says he believes they're still a safe place in what he calls a turbulent world. Dimon also says he expects corporate earnings to fall over uncertainty created by President Trump's trade negotiations. Now the story of a wild ride in a U-Haul in New Mexico.
Santa Fe police say the man and woman were helping the driver of the truck, Stacy Walker, clean it when Walker suddenly locked them in the back. A passerby heard the couple banging on the back door and called police. When they arrived, Walker took off and the chase was on.
Hey, when I was coming down 599, he started hitting me head on.
Walker was finally stopped and charged with kidnapping and assault on a peace officer. The man who was tossed around in the back of the truck suffered a back injury. Michael Wallace, CBS News.
Things are heating Heating up in the Southwest. It hit 100 in Phoenix yesterday. It's the city's first triple-digit temp of 2025, something that doesn't usually happen for another month. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Well, hi, everybody. Hosting Bloomberg Intelligence, it can be volatile. You know that? Alex is out. We're in. I'm John Tucker. She's Emily Griffeo. Who likes volatility, Emily? Traders do.
And journalists. And
well,
apparently banks.
Maybe you. Banks that trade. They did, in fact, make lots of money on that. We're going to get the lowdown on earnings from Allison Williams of Bloomberg Intelligence. We're also going to take the pulse of consumers just out, the University of Michigan Index. And Joanne Shu standing by from Ann Arbor to hold your hand. Do you have to work this weekend? That may depend on Treasury Secretary Bessent and some of the conversations that may be taking place. Let's get right to it with the market update, the all-important market update. I'm going to go right to Treasuries, in fact, Lisa Mateo.
We will. It's brought to this Bloomberg Business Flash is brought to you by IBKR. Will U.S. initial jobless claims exceed 260,000 for the week ending May 10th, 2025? The yes recently at 8%. Trade your prediction with IBKR Forecast Trader at ibkr.com/forecast. Last trading day for this contract, May 14th. And yes, John Tucker requested, so we are going there. We're starting with the yield space because the 10-year yield hit the highest since February. So we go to the 10-year, 4.52%, up 10 basis points. There you go. The 2-year yield, 3.90%, and that's up about 4 basis points. The dollar extending losses after its biggest plunge in 3 years. We have the Bloomberg Dollar Spot Index down more than 1%. Stocks have really been back and forth since the open, with the S&P 500 up about 0.2%, the Dow up 0.1%, and the NASDAQ up about 0.3%. More economic data just coming in. We have University of Michigan sentiment. Expectation was for 53.8, came in a tad lower, 50.8. Also, U.S. wholesale prices dropped in March by the most since October 2023. Energy costs, that had a lot to do with it. It contributed to the 0.4% decline in producer price index. Core PPI, that barely budged. Big banks kick off earnings season. We had JP Morgan first quarter earnings beat expectations. Trading booming, but the bank did express some concern about a slowing global economy. Their shares are up about 2%. Wells Fargo posted above forecast net income. Its shares down 3%. And Morgan Stanley is up about 0.6% after first quarter revenue beat predictions. We have Christina Aquino. She's going to have more on that and break it all down for you. Want to quickly mention BlackRock. Its shares up 1%. Its firm's assets under management hit a record $11.6 billion last quarter. Adjusted earnings per share also topped expectations. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Emily and John.
Thanks very much. Appreciate it. Let's look under the hood right now. And out with some of the individual movers, Christina Aquino, Bloomberg Managing Editor for Markets Live. Market Drivers Report being brought to you by Commonwealth, supporting the more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. Christine, let's start with the banks. Starting off the earnings reporting season. And the banks, what is the big takeaway for you, first off?
Well, John, the big takeaway is that banks do love all this volatility. Record stock trading revenue for JP Morgan and Morgan Stanley. So JP Morgan seeing a 48% increase in that revenue to more than $3.8 billion. Lisa mentioned that there is evidence that they're preparing for an economic downturn that's very evident in what they're doing for the money that they set aside for soured loans. That's up to $973 million, way more than the predicted $290 million that analysts saw. And that is definitely one of these signs. You know, they're shoring up their coffers and they're trying to prepare for what's to come, which is potentially considerable turbulence, according to CEO Jamie Dimon.
Now, this record volatility, this wasn't accounting for the most recent week, right? Because the quarter ended
a couple weeks ago. So it's interesting that even before this week, they're still profiting.
So they're going to see more trading profit
they're
in
gonna
the
see
next
more
quarter.
of it, basically.
Yeah, I think so. So there's going to be a lot for investors to like heading into the second quarter. I mean, that shares though are kind of flip-flopping. They're up just over 2% at the moment. We did see some pre-market weakness for JP Morgan. So a lot of volatility again, but this is the sort of environment.
Okay,
that
that's the
banks thrive.
trading part. What about the other parts where the banks make money or lose money? How's that business doing?
Yeah, well, I mean, they're still kind of, it seems like they're still doing well. Looking at Morgan Stanley, for instance, they're also hitting a record trading revenue, right? So they saw 4.13 billion. But the reaction to that seems a bit more lukewarm. I think we're seeing for Morgan Stanley, though, higher expenses for their part. That's at 12.1 billion for non-interest expenses because of the fact that they laid off about 2,000 employees in March, and that added to their severance costs of $144 million.
Okay, so in terms of cost controls, who's doing what? That's a big theme too.
Yeah, definitely, John, because I think, heading into the second quarter, we are seeing a lot of volatility. That's definitely going to be good for banks. But then it's a question of, are they going to be able to keep those costs under control and kind of really maximize the revenue that they can reap from what's happening in markets? And so, yeah, there's a lot to be said about differentiating between these banks. If they're all generating really sky-high revenues, then it's really going to be all about how they manage the cost side of things. And that's probably what investors are going to be looking at in terms of kind of which bank is doing the best and where are they going to be putting their money for investors.
All right, what else are you looking at?
Looking, of course, at some of the casualties of this raging trade tensions between U.S. and China. Texas Instruments very much caught in the crosshairs there. That's down more than 7% today. And that comes after we heard from a Chinese semiconductor body, which said that the government will put tariffs on chips based on where they're manufactured rather than where they're shipped from. And so what that does is it does clarify the kind of costs that Texas Instruments, companies like Intel will incur if these trade, tariffs will push through between U.S. and China. But it also makes it very clear that the cost is going to be much higher than what they're dealing with now. And that's really weighing on Texas Instruments shares.
Christine, you're the managing editor of markets. What else are you looking at? There's a lot going on in markets. But
There's a lot
really
going on in markets. I mean, I love a macro story. So, treasuries, John, you mentioned earlier, I mean, that's still very much in the crosshairs. We're seeing yields higher across the board today, particularly in the long end of the curve. Last I looked, it was 10-year yields up about 8 basis points, 30-year yields up about 6 basis points. And that really speaks to kind of, I think, the lingering inflation concerns that are stemming from this potential trade war that's emerging, particularly between the U.S. and China. It's the two world's biggest economies, John. I mean, and Emily, I think it's really impossible for the global economy to not feel the impact of that, particularly when it comes to inflation.
And you can't separate the two in this trading environment, treasuries and bonds from stocks at this point. Thank you so much, Christine Aquino, Bloomberg Managing Editor for Markets Live. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. So C plus G plus I, you know that formula. It adds up to growth in the United States or lack of growth, GDP. C is the consumer. Joanne Shu, the director of the University of Michigan Surveys of Consumers. Joanne, the latest data at the top of the hour. How are the consumers feeling?
They are not feeling great about the outlook of the economy. We've had multiple consecutive months now of sentiment and particularly expectations really taking a nosedive. Consumers are seeing weaknesses on many different dimensions of the economy: business conditions, personal finances, their own incomes, inflation, labor markets. This is something that should be very concerning.
Tell us a little bit more about just how backward looking is this data? How much is it incorporating the recent tariff, flip-flopping that we've been seeing this week?
So we started collecting data about 2.5 weeks ago for this release, and we closed on Tuesday. So it captures the April 2nd announcement of the reciprocal tariffs, but does not include the partial reversal that happened on Wednesday of this week. It's pretty clear that every single time over the last few months, we've seen a tariff announcement or a change in tariff policy, escalation of tariffs, consumer sentiment has taken a dip and inflation expectations have gone up. But we haven't seen much relief come when those tariff announcements are reversed or tariffs are reversed or taken back. So it's not really clear how much relief consumers are actually going to feel from Wednesday's announcement, particularly given that tariffs with China remain sky high.
Yeah, the one-year inflation expectation, these are eye poppers. 6.7%, that's the 1 year. The longer term, the 5 to 10-year inflation expectation. 4.4%, that's above the prior reading, just a 0.1% higher than what the survey was for. Are these sort of self-fulfilling prophecies?
They can be. So when people expect higher inflation in the future, they may believe that you should buy big things now in order to avoid those price increases in the future. And indeed, we're seeing a lot of news stories about people stockpiling. But we see this more broadly than that. In November, as soon as the election finished, a lot of people were expecting Trump to go ahead and implement more aggressive tariff policy when inaugurated. And so many consumers were telling us on the interviews back in November and December, now is the right time to buy a car, to buy durable goods, because you're going to get hit by high prices in the future. And indeed, we saw robust sales figures in Q4 for exactly that reason. One of the things that helps prevent things from becoming a self-fulfilling prophecy on the inflation front is that consumers feel so weak on other elements of the economy. Their income expectations are down, and they're worried they're going to lose their jobs. And so they might not be willing to front load their purchases that they might otherwise have done. And they don't really have the support for the robust consumer spending that we saw in the years following the pandemic.
In like 30 seconds, what's the history of consumer spending following numbers like this? Do they really pull back?
Typically, they pull back, and it's a high probability this time, particularly because higher income consumers are feeling just as dour as their lower income counterparts, and higher income consumers generate so much of consumer spending.
All right, Joanne, always a pleasure. Appreciate it. Joanne Shu, the director of the University of Michigan Surveys of Consumers. Again, the University of Michigan Sentiment Index, 50.8. The survey expectation was for 53.8. Those are not good numbers. You are listening to Bloomberg. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now. The Bloomberg Business app, Bloomberg.com, anywhere you get your podcasts. I'm John Tucker, along with Emily Grafeo. This is Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Interactive Broker Studio. I'm Lisa Mateo. We've got stocks fluctuating. The dollar falling, gold on the rise. The 10-year yield hit the highest since February. This is all in a week. It's seen some of the biggest swings in decades. That's due, of course, to the global trade war. I want to start in the yield space. So we have the 2-year yield at 3.94%. That's up 8 basis points. The yield in the 10-year, 4.57%. That's up 14 basis points. We go to stocks now. The S&P 500 down 0.4%, 25 points. We have the Dow down 0.4%, 198 points, and the Nasdaq off about 0.6%, 102 points. The Bloomberg Dollar Spot Index down 1%. Bitcoin rising above 82,000. I'm checking with crypto-linked stocks like MicroStrategy. That's up more than 2.5%. Coinbase Global, though, seeing a bit of a drop, down about 1%. Gold on the rise. Demand for those haven assets really driving prices to new records. I'm going to start with COMEX Gold, up more than 2%, $3,251 an ounce. We have spot gold up more than 1.5%, $3,233 an ounce. And that has shares of some gold miners higher. So, for example, Newmont, their shares up more than 7%, and Barrick Gold is up nearly 6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Emily and John.
All right, thanks, Lisa. Well, it looks like the trade war is getting worse. We're hearing from China, and let's head to our Jordan Fabian, the White House editor. What is China saying at this point, Jordan?
Retaliated with new 125% tariffs on American goods. And they also dismissed President Trump's retaliatory measures as a joke and said they wouldn't raise their own tariffs higher. While one can maybe read that as they're backing off, I mean, tariffs between the two countries are already well above the levels that many economists say would choke off trade. So I think they're sending the message that this has already gotten out of hand and they're not going to respond any further.
Just help us put this in context, because 125%, China capping tariffs on U.S. at 125%, that sounds like such a big number. How does it compare to just what we've seen historically between the relationship between the U.S. and China?
It's an extremely high number. I mean, this is a trade relationship that's worth $690 billion a year. Previously, except for certain sectors like solar panels, there weren't many too high tariffs on the U.S. side on Chinese goods, and the whole trade was the U.S. export services to China, and in exchange, China can send cheap goods to the U.S. That is all now disrupted. Not to mention, on a broader level, this trading relationship, the trust has been broken, and so how you rebuild that remains to be seen. President Trump wants to get President Xi on the phone. President Xi says he won't call until these measures are taken off.
So who's taking the lead on this right now? Is it the president? Is it the Treasury Secretary? Is it the trade representative?
Well, it's been a rotating cast of characters, but at the center of it has been President Trump. And he said this week that he's making these decisions on instinct. And so this process naturally is going to be very volatile, given the fact that it's really kind of up to one person to make the final decisions. That being said, it does appear that Treasury Secretary Scott Bessent and Howard Lutnick, the Commerce Secretary, have now taken the reins on these negotiations with foreign countries, and also the U.S. Trade Representative Jameson Greer is involved as well.
How are we seeing the reaction so far, not only in global financial markets, but just with what businesses are doing, I guess, to prepare for these tariffs?
I think you've seen a lot of businesses try and get inventory as fast as they can to the United States before the tariffs took effect, and now they are just trying to gird themselves. I mean, different businesses are doing different things. You've seen Amazon cancel some orders from China. You've seen Walmart saying that they're going to absorb some of the cost increases for now, but they're not sure how long that can last. And in the meantime, there's a lot of calls going into the White House from businesses, farmers, et cetera, telling them how hurt they will be by these tariffs and trying to gain some exemptions. The president opened the door to that this week, but whether he actually delivers on that remains to be seen.
And Jordan, thanks very much. Appreciate it. Jordan Fabian, the Bloomberg White House editor. Of course, as we say, the trade war getting worse. Shoppers are stressed out. We just saw that from the numbers from the University of Michigan at the top of the hour. So how does that translate into what shoppers are actually doing at this point? Julie Van Ollen is the Chief Revenue Officer at Rakuten Group. Rakuten is the, correct me if I'm wrong, it's the internet bank, right? Julie?
The Rakuten that we'll be talking about today is actually a shopping platform, a cashback shopping platform. We have about 17 million shoppers and 4,500 retailers, and really a place where the value-seeking consumer goes to get the most bang for their buck.
Are you seeing signs of stress?
Honestly, it's more disheartening than we ever dreamed at this moment. We recently conducted a study in conjunction with Harris Poll that we'll be releasing on Monday, but I'm excited to give you guys some sneak peek into that, which yielded an even more dire outcome, I would say, which is to say that shoppers are certainly stressed financially. They're prioritizing price and
ASM.
above all else. We found
It
that
looks like they didn't like the news at 10 o'clock.
That they can afford their daily expenses in addition to non-essential items, which means you have this huge swath.
I just need 1,800
who has to make strategic decisions
to get requalified into another XFA. So I'm just waiting for my spot. So if this is going to be a down day, I'm just waiting for a pullback and waiting for the volume to get in my range on the 3 bars. And then maybe we'll look at a quick short for 1,800.
So a really dire time.
I did 5,100 yesterday, so I've came back from all my mistakes on this one.
To bracing for potential economic uncertainty that comes out of tariffs?
When did you go long?
How much of this was before all of the tariff?
Oh, you shouldn't have been trading until after the news was out, man. Were you hanging out? I was calling the news.
Low for many months now, and there's of course concerns that the economic challenges will get worse, but fears of inflation and
right in here, like how long ago?
Consumer spending for a while now.
Were you off the signal?
A bit different and juxtaposed at this particular
at 9:47, or was it recent? Oh, you went long 9 minutes ago.
Could come back and increase.
What information did you have to do that?
With whatever discretionary income consumers have, they're
this is a full-on short.
As much as they can, especially in essentials categories. Now they have this very buy now urgency in order to fulfill what.
Well, you had this still. You had nothing.
A challenge in the coming months.
Was that your that new thing you're playing with, the Trendmaster thing or whatever?
They're spending on. Are they putting it on credit cards?
Yeah, this was like a note. This was a hard on. Like the only way to go 9 minutes ago here was short, but there's no entry point.
From a retailer standpoint,
I gotta wait for the pullback, and we're really waiting for a pullback back into this fair value gap for resistance right around the 20. So the trade coming up for me, I mean for what I do is right here. This is the trade zone. You're looking for an entry in this zone before you do anything. Oh yeah, I get it. I get it.
Whether that means direct to consumer brands.
You were looking for a pullback to the VWAP probably, right? So you were thinking, all right, maybe we're in a range right here. Okay, you were looking at the double bottom off this trend line, probably. You were looking at the double bottom off the trend line to move back. And then you probably got stopped out on this wick right here. Okay, I totally get it. That's solid. I mean, that's a solid quick move, you know.
Purchases telling us about the state of the consumer economy.
I get that.
When you think about non-essential items, and especially when you ask the folks who can't afford those non-essential items, I think we're thinking about things like apparel, beauty, electronics, even upward of luxury. But all of those categories are challenged right now, not just on Rakuten, but in the greater e-commerce and shopping landscape in total. The one that I think is particularly interesting, that's a high price point considered purchase that continues to thrive, is travel. And all I can think is that there's this just sentiment of escapism for consumers that with whatever discretionary income that they may have, those who have it are using it to come to places like Rakuten to get a deal on travel so that they can get to some new scenery and set their minds right.
And that discretionary spending, as you point out, that's pretty quickly evaporating, isn't it?
Yeah, I think that's right. And even for what is not evaporating, the concerns of what is to come has nearly every consumer clutching their wallet, which, of course causes this challenging juxtaposition with the retailers who are very much on the other end of things, who are either already seeing dramatic increases in terms of cost of doing business or are preparing for scenarios in which that will be the case. So to meet that value-seeking consumer at a time when their costs are increasing is probably one of the biggest challenges of the moment.
What's your assessment of just how easy it's going to be for the retailers and other companies to have pricing power here? If they have to pay more because of tariffs, how much are they going to be able to raise prices if we now have a consumer that's looking like it doesn't have much tolerance left for a higher price?
That is, in fact, the challenge, and the not knowing is the even bigger challenge, right? I think as we speak to retailers and brands, their main focus is to hold off passing along cost to the consumer at all costs for as long as they can, largely because, one, they don't know what's to come and what will stick from a tariff standpoint, but also they know that that's an incredibly irreversible change, especially when you start to think about value brands or big box stores whose daily value proposition is savings. So to pass along the cost of those increased tariffs to consumers is particularly irreversible. So they're trying to use whatever lever exists within their disposal today to try to create that incentive or permission to buy for consumers while waiting on the cost passing as long as they humanly can.
Tell us more about the platform. Just how much of retail do you guys capture? And does one aspect of that stand out as opposed to another?
Rakuten is an interesting platform, and particularly in this time, very excited to come talk to folks like Bloomberg because we sit across all categories. We are not just a retail platform for apparel and beauty, but really a place where people come to buy essentials and get cash back on those essentials. We have 17 million shoppers shopping across categories, including financial services like consumer banking and credit cards, a place where they come to shop big OTAs, to book their travel purchases. So a place where luxury brands are using a platform to give new, younger consumers an opportunity to potentially try high-end products that they might otherwise not try without that cashback permission to buy. So we do have some really, interesting insights, as we've been talking about today, from across those categories and that shopper base.
Julie, always a pleasure. Thanks. We appreciate it. Julie Van Ulen, the Chief Revenue Officer at Rakuten, the retail platform. And on Sunday, BTV going to have special programming to kick off the trading week. This is going to be from 6 to 7 p.m. Wall Street time. You got to wonder, Emily, is anybody going to hold a position over this weekend? That'll be an all-important show. Again, Sunday, BTV, 6 to 7 p.m. Wall Street time.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The U.S.-China trade war shaking up the global economy, financial system, leading to a decline in treasuries and the dollar. We'll start with the Bloomberg Dollar Spot Index. It's down about 0.9%. Over to the yield space, the two-year yield 3.92%, up 5 basis points. The yield on the 10-year 4.54%, and that's up 11 basis points. We have gold on the rise. COMEX gold up more than 2%, $3,243 an ounce. Spot gold up nearly 1.5%, $3,226 an ounce. Over to oil, Brent crude up about 0.1%. It's $63 a barrel. WTI crude $60 a barrel. And to stocks, the S&P 500 down 0.2%, 14 points. The Dow off about 0.3%, 118 points, and the Nasdaq down about 0.1% or 26 points. We have shares of BP. They're edging lower in London. They're down more than 2%. This is after reporting lower gas and low carbon production, but higher debt last quarter. And Novartis, their shares are higher, up about 2% in Zurich. It promised to spend $23 billion to expand its U.S. footprint. And finally, Jeep and Ram maker Stellantis. It's off about 3%. Vehicle shipments in North America, they dropped 20% last quarter. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Emily and John.
All right, Lisa, thanks a lot. I'm John Tucker, along with Emily Griffeo.
Order filled.
We are in for Paul and Alex on Bloomberg Intelligence today. You know, volatility drives everybody else crazy, drives me crazy, but it's actually good for banks. Allison Williams is our banking analyst from BI. Allison, just how did the banks do based on market volatility and trading?
Right. So trading really knocking it out of the park at JP Morgan and Morgan Stanley, really setting up the bar for Goldman on Monday. But we saw, gains of almost by half in equities trading. So that's benefiting from the volatility. I would say, fees, FIC was a little bit like in line to weaker, fees were fine, but we know that there's risk ahead there. We actually saw some.
When you say FIC, you got to explain
FIC.
it to people who think like a German Shepherd.
So,
fixed income currency.
So trading rates, trading credit, currency, and commodities.
All right. So I want to go to loan loss provisions for some of the major banks, because that's kind of an indication what they think about what's ahead for the economy and the consumer.
It is, and that was really the key thing that we were looking for this quarter. And what you saw was JP Morgan, about $1 billion of loss reserve building. And that's really looking at the economic uncertainty ahead. So keep in mind, we're not really seeing signs of weakness yet. In fact, if anything, we saw a little bit of front loading on the consumer. Our retail analysts and BI have been talking about that. But JP Morgan, being conservative, and guess what? Those trading gains we just talked about, that's how they can afford to be conservative, because their trading upside was about $500 million. They also had a gain related to First Republic. Remember that acquisition from a couple of years ago. So basically, after some conversations with the government, they have recognized the gain there. So those two items really helping them to fund that conservative look. By contrast, Wells Fargo did not see the same trend, and you see the stock sort of reacting to these today. Because what this means is that JP Morgan has less earnings risk if things do deteriorate, whereas Wells Fargo is not as well prepared with the provision building.
Emily, as you pointed out, this doesn't even capture the volatility that we just saw recently, right?
Of this week,
It does not.
the historic week, we had a fifth day in a row, marking last week of yesterday, of an intraday range of more than 6% for the S&P 500. We haven't seen a streak like that since COVID and the global financial crisis. What did we get, though, from just the outlook? I mean, Jamie Dimon has been pretty vocal about his economic outlook. Did we get any guidance from these banks about what to expect?
So I think it's prepare for the unexpected, right? And so I think that's what, Jamie Dimon is known for giving his views, but he's also known for saying, look, this is how we manage the bank. We prepare for the worst. And so I think that's what we saw today was There were a few items that helped them to set aside this money depending on what happens. And, as you pointed out, we've seen lots of trading, we've seen lots of volatility. Expectations are that we're going to continue to see, or could continue to see a benefit, at least based on what we've seen in April. U.S. cash equities volumes, really setting new records. And the question is that when it comes to the end of the quarter in June, will we be closer to some certainty around tariffs? If so, we can get those reserves back so they can release those back into earnings.
Am I right when I say Wells Fargo is more sort of consumery related? So
Wells Fargo does not have that, they have a trading business, which also participated, but certainly not to the size of JP Morgan, who is, one of the leaders in equities trading, the leader in FICC trading by revenue. On the Wells Fargo side of things, we actually did see net interest income coming in a little softer. We also saw non-interest income coming in a little softer and some citing of weaker loan demand. And so I think those are also contributing to some weakness in the shares this morning.
Because at the top of the hour, we talked to the University of Michigan Sentiment Survey, and that looks like consumers are just might be reining in. That's the signal there. So what is that going to mean going forward for Wells Fargo?
So for Wells Fargo and for JP Morgan, it's certainly not good, right? If to the extent that sentiment stops consumers from making purchases, going on those trips, et cetera. And as I said, and JP Morgan, I think, alluded to this, there has been a little front load of spending. All that being said, the credit card business, which is the highest loss ratio business and can be sort of the most susceptible to discretionary spending, is a much bigger business for JP Morgan. On the commercial side of things, where I think you have seen, I think, already some stagnant activity in terms of businesses like, not executing on things they would have, Wells Fargo has a little bit more exposure to those sort of traditional businesses as a mix of their business, just because they are more focused on the bread and butter lending.
What about deal making? Because coming into the year, a lot of sources I spoke to said this is going to be a big year for investment banking because Trump will be supportive of that environment. What did we see in these earnings?
Yeah, so a couple things there to your point. Coming into the year, I think everyone was excited. We've been talking about this investment banking fee recovery. Bankers have been looking forward to that. M&A also benefiting from some of the lesser, a lighter regulatory environment, as you spoke of. But we really have not seen the benefit of that. And that is, largely due to CEO sentiment, and having a view towards the future really does impact M&A, right? Because if you think the value of your business could significantly change in the next few months, or if you think a business that you want to purchase could be significantly different in value, chances are you're probably going to pause, and that's what we've seen on the M&A front. Equities, IPOs, also we saw that started strong in January, completely stalled out. We see all these deals on hold. Debt fees, actually the one area where you're continuing to see some strength, but again, the volatility early this quarter is likely to hamper all of that revenue.
All right, I got like 45 seconds left. So Monday, what's up?
So Monday, and this more about bragging rights than anything, we'll be looking to see if Goldman can increase their trading revenue by at least 25% to keep them sort of at the top of the trio. But I would fully expect that they are going to participate in the equities derivatives trading, the prime brokerage that really drove those 45 to 50% gains at JP Morgan and Morgan Stanley. So we expect better trading. FICC trading may be in line. Fees probably a bit weaker. They are typically the leader in M&A, so that is going to weigh on them a little bit. What happened on the compensation front? We did see Morgan Stanley with severance charges. That sort of confirmed some of the things we saw from Bloomberg News, that they were letting bankers go because we're not seeing that fee recovery, as you noted.
All right, Allison, thanks a lot. Let me give you a quote. JP Morgan Chase up 2.8%, those shares. Allison Williams covering the banks for Bloomberg Intelligence. Thanks a lot. We appreciate it. I'm John Tucker along with Emily Grafeo. This is Bloomberg Intelligence.
Order submitted. Order filled. Stock filled. Order filled.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
And I'm John Tucker, and along with Emily Grafeo, in for Alex and Paul. We're on vacation, not together, but they're on vacation. President Trump's second term off to one of the worst starts for the stock market since the Herbert Hoover era in 1929. Let's get more perspective from Bloomberg Intelligence Chief Equity Strategist Gina Martin Adams. Gina, you got to give me some definitions here. How do you define a panic in markets? And if we've reached that level?
Good question. Yeah, I think the old rule used to be any 2%, the moment you get to the point where 2% up and down days are extremely prevalent, the VIX goes over 20. It used to be the definition of panic. We seem to be testing that theory with VIX spikes to 40 to 60 in the post-pandemic world. But nonetheless, when you get to a point where, as we saw this week, you get an extraordinary rally in stocks, you're usually in the midst of a major correction. As a matter of fact, we had the 8th strongest bump in U.S. equity market history midweek this week. All 15 of those other big bumps in U.S. equity market history occurred in the midst of 30% or greater declines in stocks. So it's pretty clear, just based upon the degree of the rally that we had this week, amidst the weakness that we had the week prior and earlier in the week, is evidence that we are entering panic mode. We are fully in the crux of some sort of market disruption, market crisis that is pretty severe.
What does that mean for the upcoming earnings season? Are investors just not really going to pay any attention
Order
to
submitted.
earnings and it's all going to be macro-led this coming quarter?
I actually think that earnings will become incredibly important because we have at least a sense of how bad the tariff environment can get. We seem to be settling around a likelihood that we end up at greater than 20% average tariff rates in the United States. Now the question is, what does that mean for earnings? Analysts have done very little to actually reprice the earnings outlook or reestablish the earnings outlook for companies because they were, of course, waiting for clarity on what is going
Order
to happen
canceled.
with tariffs. So everything that's been put in the marketplace so far has been about scenarios. Now we get to the point where we can presumably start to figure out what the actual numerical impact of tariffs are, and that will start to emerge with earnings results. I don't know how much companies are going to be able to offer a tremendous amount of clarity on that, and that's going to create probably further disruption in price trends. But now we will start to price tariffs. In my view, we've been very volatile over the last week because the market is trying to price tariffs without a tremendous amount of intelligence from companies and analysts with respect to what those tariffs will ultimately mean. Now we're going to get that intelligence emerging.
Order
Who
submitted.
faces the more immediate cost with the
Order filled.
hit because of tariff turmoil? Or do you just take the easy path and withdraw your guidance?
Yeah, I think that companies will probably be forced to withdraw guidance because they don't have a tremendous amount of clarity. I think they're going to negotiate, right? Just like the president is suggesting that he's going to negotiate with countries, companies actually pay the tariffs when the product goes across a border. So companies are going to have to negotiate with their suppliers. They are also going to have to test the consumer market for how much tolerance the consumer has for price pass-through. And that's going to take a matter of months before companies can come to any resolution as to where things are likely headed. I think there is still a little bit of uncertainty as to where tariff levels are headed as well, though we got a lot more clarity with that over the last month. And so they are going to have to remain somewhat nimble. But in my view, we're just getting to the point of really testing and implementing some of these elevated costs, and that creates a lot of disruption in the outlook for fundamentals. And it's quite clear that companies are going to struggle to provide a tremendous amount of guidance for what this means for 2, 3, 4 quarters from now. Instead, they may focus much more near term on how they're implementing change, how they anticipate to negotiate cost increases, and how they see the consumer or their ultimate buyer eventually responding.
Gina, we're down 10.5% year to date on the S&P 500, at least in this very second. What are the signs that BI looks for that a bottom is actually forming? Have we seen any of those signs yet?
Yeah. So in theory, we saw some of the signs already that at least the early stages of a bottom may be forming, but the degree to which we can see further weakness emerge is still very questionable. And what I mean by that is historically, you see these major capitulation events as at least the beginnings of a bottom. We definitely saw a capitulation event over the course of the last week with the VIX spiking as much as it did, with correlations rising across the world. Although I'll say there's more evidence of capitulation in global stocks than there is in the US. And there are a lot of mixed signals coming from the bond market as well as currencies with respect to a normal sort of economic disruption. So we're still working through a good deal of that in the marketplace. This is a historic event by any stretch of the imagination. We have not been in a climate in which tariffs have accelerated this much, this fast ever in developed market, the equity market history. And so the result of that is tremendous uncertainty, which probably persists for an extended period of time. But at least from a normal standpoint or a historic standpoint within the equity markets, the degree to which we saw VIX and pairwise correlations rise would be evidence that we at least have potentially started a bottoming.
Damn it, missed the I missed the short. I've been flirting around with that short for
Gina, thanks so much.
it's getting too
Great
choppy.
weekend.
All right.
For our
I'm
listeners
glad I
in the
got
US, a
out.
reminder, you can listen
I
to
didn't
our
really get
us
hurt. I'm
on
only down
Sound Radio,
400.
Sirius XM channel 121.
All right.
Access the
I
world's
gotta
only
wait for a
global
better
audio business network,
I don't
coast
know
to
what's
coast,
going on.
24 hours a day. Bloomberg Radio on Sirius XM channel
It's 11
121,
o'clock.
presented by Oracle.
Nothing's
This
really
is
happening. Let me
Bloomberg
check the
Intelligence.
news. Traders, Kremlin. I don't know if anyone's watching that. This is serious VWAP chop going on. This is classic VWAP chop. So I guess we got to wait till we move off the VWAP and pick a direction. I thought for sure we were going to work lower, but I don't know what's going on right now.
Really cyclical business.
Breaking market headlines and corporate.
But I was able to get out before I got wicked out on that.
Like the M&A that we've seen.
So that's the value of just like if it doesn't work out right away and you get green, just drop it in and break even. Because this could be a lot worse for me right now than what it is. And it's not really that bad.
This is Bloomberg Intelligence. I'm John Tucker. Along with Emily Griffeo, Alex Steele, and Paul Sweeney, they very smartly got the last coach out of Dodge today. You didn't make it to Friday. That's the good news. But it's not over yet. So who wants to hold a position over the weekend? Raise your hands.
I don't know. I'm still
That's what I
thinking
thought.
south
China
side, but
firing back, oil dragging
we're in
wholesale
our
prices
range for
lower.
volume.
Maybe for all the wrong
I don't
reasons.
know.
Volatility may not be good for you. Great for traders, though.
I'm definitely not playing with the NQ. It's giving me a headache just watching the
King
Dom
dollar
chop up
losing
and
its
down.
crown as consumer confidence plummets. Let's get an update on the markets right now. Get right to it. Here's Charlie Pellet.
Hi, thank you very much, John Tucker. Happy Friday. What a week it has been. Stocks again whipsawing today. Fear continuing to grow that foreign investors are beating a retreat from American assets. Right now, we have got the S&P 500 index down by 0.1%, lower by 8, swinging between gains and losses. But the S&P right now at 52.59. The Dow down 105. That is a drop now of 0.3%. Nasdaq Composite Index down 10, drop there of 0.1%, and the Russell 2000 Index of small cap shares down by 1%. The 10-year 4.56%.
See, you had that scam wick that took the shorts out right here. That was your value. So you know what, man?
Texas Intermediate crude just above 60 a barrel, 60.20 right now, up by about 0.2%.
I'm gonna sit on the 50. I'm gonna sit on the 50.
81,920, up by
Order submitted.
2.5%. American consumers are in
If I
a
get-
foul mood.
if
Consumer
it comes to
sentiment
get
now
me
at an almost
fine,
3-year low. The preliminary
let's see what
April
happens on the
sentiment
next
index
candle. Got
sliding
30 seconds.
6.2 points to 50.8, according to the University of Michigan. Joanne Chu is director of surveys at the University of Michigan, and she was guest last hour right here on Bloomberg Intelligence.
They are not feeling great about the outlook of the economy. We've had multiple consecutive months now of sentiment and particularly expectations.
I missed it.
Really taking a nosedive.
That chop.
Consumers are
That
seeing
chop
weaknesses
messed me
on
out.
many different dimensions of the economy.
Let's see what
business
happens on
conditions,
this next
personal
candle. See if
finances,
it
their own
snaps right
incomes,
back.
inflation.
You see, we're getting across on the
labor
stochastic, so
markets.
it's going to go
This is
down from
something
here.
that should
I
be
might get
very
lucky. It
concerning.
might come back
More
enough for me to
conversation with
maybe
Joanne
mark it
Chu
in.
of the University of Michigan on the Bloomberg
But there's no
Intelligence
way I'd get in
podcast.
anything from here.
Wherever
Like where we are, where the price action is, this is not a
Bank
trade here.
earnings now,
It's
JP
too
Morgan
choppy. We
Chase
could
after
chop right
earnings,
back up.
Moving higher, JP Morgan stock traders took in a record haul in the first quarter. JPM up by 2.4%. Wells Fargo after earnings down 3.8%. Morgan Stanley after earnings down 1.8%.
I don't even know if I want to sit here.
BlackRock after earnings up 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. And now with a look at some of the stocks that are moving. Look under the hood right now. We're joined by Bailey Lipschultz, the equity reporter for Bloomberg News. At the intersection of China and chips, we find, Texas Instruments.
Yeah, chips.
How you doing, SM? I got chopped up a little bit here this morning already, but I controlled it. Pretty proud of myself for not letting myself lose my mind, let my monkey brain take over and just start doing crazy stuff. So feeling pretty good about that.
Of the semiconductors index, we're seeing Broadcom trading.
If it hasn't dropped off yet, we're probably going to revisit the VWAP. I'm gonna, you know what? I'm gonna wait. I'm gonna wait for better confirmation.
Is because of the new Chinese tariffs targeting semiconductor imports. So Beijing raising tariffs on all.
All right, I got to make a call. Be right back. I'm gonna wait. I'm gonna wait. If I miss this whole move down, that's fine. I should have already got where I'm at. But you see this wick probably just crushed people. Everyone like, okay, short. Boom, this wick crushed people, and I got out before that wick, so I got lucky.
Who imports what?
Well, I didn't get lucky. What I do is if it doesn't go my way right away, I drop in break even 1 or 2 ticks to pay for the commissions. And then if it takes me out, it's okay. I can re-enter, and it didn't hurt me. You know, you can't. Once it starts going against you, you can't keep holding, and then buy in against it. I mean, I guess this would have been. There's no way that would have blown my account for the day to take that much heat.
What did you use?
But anyway, I'll be right back.
Green eye shade.
See, that works out.
What else are you watching, Bailey?
Well, we'll stick on the trade that maybe caters to an older generation gold ripping. So Newmont up right now, up more than 6.5%. Ticker NEM, best performer in the S&P 500. Opposite side of that, when people are getting anxious, they flock to precious metals, they flock to gold, they flock to commodities. So Newmont rallying because of that. Also, the company did get an upgrade from UBS, hiking their price target to $60 from $50. The stock right now trading at $54.40, basically saying long run, company has a way to go to reestablish their track record and credibility, but basically Goldcos are rallying, and the backdrop for macro is better for the companies.
Are you going to get a pick and a shovel and go up to the Yukon at some point?
I'm debating it. You know, I'm from California, so maybe I should go back to the West Coast, treat it like
Sutter's Mill.
Yeah.
Anywhere near there?
I don't even know where that is. You're using geography, man. You're exposing the facade.
Oh, never mind. Emily, what's the next stock you're looking at?
One of the underperformers in the banking space, Wells Fargo, right now down 4%, ticker WFC. Big earnings season for banks, but obviously the big focus is on what the future holds for these companies. The one thing that did stand out, though, for Wells Fargo, obviously a bit different of a business relative to JP Morgan and Morgan Stanley. They actually got dinged by a number of analysts flagging lower net interest income and non-interest income. So basically saying that the net interest income was lighter and there are no reserves built, according to HSBC analysts, and others basically saying that weaker revenues were hitting the company. But again, we are in such a macro market that these moves can reverse pretty quickly.
Bailey Lipschultz. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere else you get your podcasts. Do you know where gold comes from?
The ground.
Well, don't say that. I thought you were going to say Tiffany, but no, gold actually comes from neutron stars.
Okay.
It comes from
so
outer
it comes from the sky, from space.
Did you know that? No, it's true. Mike McClone, our commodity star at Bloomberg Intelligence, no-brainer that the shiny metal is the place to be in times of trouble, Mike. The stuff you follow is priced in dollars. Can I start there with all the pressure on the dollar? So what does that mean for your space?
Yeah, it's a perfect storm, John, for higher gold prices, and it's doing it. It had one big pump above 3,000, one dip below, and here we are off to the races. So this is, it's going to be a question of what's going to make gold go back down. And the number one source is that the U.S. stock market stabilizes and goes back to the bull market. But the key thing that's been happening lately is the safe haven of U.S. Treasuries is being questioned, which means it's good for gold. But the key thing I've been pointing about gold is gold was historically very cheap versus the U.S. stock market last few years, and the rock's been outperforming stocks for a while. Now it's accelerating, but it's very expensive versus the U.S. Treasury bond market. Like T-bonds right now pushing 5%, but that's been amazing. They just keep ticking higher, which means gold's the winner. Question is, what stops this rally in gold?
What stops this rally in gold?
Exactly. I don't know, but I think the number one source I'm looking for is you basically need its main competitor, the U.S. stock market, to go up. And I think the biggest risk it goes down. Gina Martin Adams, their chief equity strategist, and Anna Wong are still bearish stocks in the U.S. economy. And a key thing that's really happening with gold this year is that flip. with Bitcoin. Remember, we had that massive frenzy in ETF inflows into a Bitcoin ETF last year. That's flipping backwards. We have 3 months of outflows in a row now. And gold for 4 years had ETF outflows. Now they're switching to inflows. So I think one key thing I like watching is that Bitcoin to gold ratio. Right now, it takes about 25 ounces of gold per Bitcoin. I think that's going to continue to get pressured lower as Bitcoin goes lower. The peak was 40. I think it goes to 10.
Mike, today it's interesting because we have the S&P 500, the NASDAQ down, but actually Bitcoin is up 2.6%. What do you make so far of kind of that? Well, I won't use the bifurcation word because I don't think John Tucker likes that word very much, but the divergence in those two assets.
So it's one day. The key significance of reason cryptos are down is because the stock market's down. The Bitcoin is the most unique. The key thing to remember, our listeners and our viewers really need to understand is gold has 3 dependents: silver, platinum, and palladium. Bitcoin has millions. The number 2, Ethereum, has been getting hammered. So recently, the good news is for Bitcoiners, it's been showing divergent strength on a risk-adjusted basis. It's not going down as much as you'd expect. But I think the big risk is for that whole crypto space to continue lower with the stock market. And this is one of the key things that I think a lot of the ETF Bitcoin buyers are learning, that sometimes it's digital gold. Bitcoin is sometimes digital gold, and sometimes it's leverage beta. I think they're learning it's much more leverage beta. If the stock market keeps going down, it's a major pressure for all cryptos, Bitcoin, and it's a decent bid or decent tailwind. I'm sorry, yeah, a tailwind for gold.
I can't let you go without asking about some of the other commodities, specifically crude oil. What is the path forward for crude?
Yeah, I've been saying it for a while, John. You know, $40 a barrel. Pretty soon, when you got to hop on that New Jersey Turnpike, you're going to be able to pay $2 for gasoline, and you know who to blame if it doesn't work that way. It's certainly the trend. Here's the key fact about crude oil.
But I mean, it's going down for all the wrong reasons, right?
Well, that too. Well, the good, actually, it's called superabundance. The U.S. has a massive excess supply of energy. Remember when we were kids, that was a dream. We have an excess supply. We have a superabundance of grains and corn and soybeans and wheat. And that's just accelerating. If the stock market keeps going down, it's a normal trajectory for crude oil to get cheap after getting expensive. Right now, it's close to the U.S. cost of production. 40 is really takes it to really shut it off. And the key thing that's happening, we have increasing supply out of the U.S., excess supply, and decreasing demand out of China. See that tilt? That's a global deflationary trend, and crude oil's leading the way.
Mike, always a pleasure. Appreciate it. Mike McGlone, Bloomberg Intelligence. And right now, that brings us to 11:12 Wall Street time. As we quick look at the markets, S&P 500, 15 points lower right now. The Dow down 141 points. The NASDAQ 100, 48 points lower. Mirror, mirror on the wall, who's the biggest asset manager of them all?
And the stock is in the green.
BlackRock. Neil Sipes, Bloomberg Intelligence financials analyst, follows BlackRock. The metric we care about, is it the assets under management?
It is the assets under management. Almost more importantly now, the bigger that BlackRock gets is the organic growth. And that's sort of measuring the net new assets that are coming into BlackRock's funds. And that's the question investors have always had is, the bigger they get, the harder it is to continue to grow at the pace that they have been over a long period of time. And what we've seen is that sort of 5% growth that BlackRock has consistently put up, which, by the way, is well above the industry that's break even or 1% to 2%. That continues to be the case. In the first quarter, it was a little bit light. It does appear that a lot of that had to do with perhaps some institutional rebalancings to start the year and perhaps some impacts later in the quarter.
But AUM up 11% year over year, $11.58 trillion assets under management at BlackRock.
And who is it? Is it just like
what's driving
mooks
that?
like me or like the big guys? Whose money is that?
It's certainly both. It's institutional and retail dollars. You talked about the growth rate in assets under management. You know, they highlighted on the call today that 60% of that AUM growth is actually from new dollars, right? So if you measure markets versus a year ago, I think you're still going to see that we're up. But, you know, importantly, they're continuing to garner assets from their clients over time. And as we look forward in a much choppier environment into April and frankly, who knows what's coming down the road in the next few weeks, that organic growth becomes increasingly more important. And that's something that BlackRock has shown in periods of dislocation. You look back at 2020, you look back at the challenging environment in 22 when the Fed started increasing rates. BlackRock's 5% organic growth continued through that cycle. When you looked at competitors that have less of a breadth across the spectrum of asset classes and products, could not keep up.
Do they have like a fund for everybody?
I mean, they'll have a fund for everybody, pretty much touching any asset class, any region, any geography that you want.
And those are all no, they're not all ETFs, or are they?
They won't all be ETFs, but increasingly that's where investors want to allocate their dollars. Obviously, that's become a very price competitive product. The value for money, we know that's a trend that's been in asset management for the past decade plus, is the flows are increasingly traveling towards the funds that have the lowest cost associated with them. If you look inside the ETF category, over the past decade, we've seen, 2/3 plus of all flows into ETFs are going to that low fee bucket between 0 and 10 basis points. So increasingly, we're following the trend to 0 here.
Wouldn't that impact their margins eventually?
Are you saying that they're eventually going to have 0 fees? What? No.
So there already are some funds out there that are, of course, charging
how does
0.
BlackRock make money?
How do they make money if their fund is, 3 basis points?
As my ETF colleague Eric Balchunas likes to highlight, this product can sort of, at this scale, there's always going to be, profitability for someone like BlackRock. That is sort of why you don't see some smaller players being so successful making a foray into the ETF space. Is you have to compete with someone that's willing to beat you on price. And ultimately, as you think about, the trajectory of ETFs, yes, we're going to 0, but there are more thematic products coming out that can sort of charge that 40, 50 basis point fee that you would see akin to an active fund. And that's sort of, the push-pull and sort of the barbell strategy that you see across the industry is having scale in the large low fee products, but also pushing into those higher fee private markets areas.
What keeps Larry Fink up at night then?
I think, constantly.
Aren't you there with him?
Yeah,
He tries to
his
fall
phone
asleep?
calls.
Yeah. I wish I had the perfect answer for that, but I think, how to navigate sort of an environment like this is always something that he is going to be discussing with clients that he's meeting. He's talked about how clients are, sort of repositioning, how they added $20 billion or 2% growth to money market funds on BlackRock's platform in the past week plus in April. So they're increasingly sort of de-risking, taking a pause, reassessing where they want to reallocate their dollars. And ultimately, if there is sort of a seat change of the U.S. exceptionalism, which had been garnering all the flows and all the assets over time, if Europe and other regions become more attractive, we know that BlackRock has positioning with those types of funds as well. But we'll have to see how that shakes out over the next couple of weeks.
They're the biggest. Who's the next biggest?
You probably put Vanguard right next to them up there.
And Vanguard's cheaper than BlackRock. If you look across their
Is it
average
like,
ETF fees.
I mean, how close are they racing to
Oh yeah. I mean, I
They're always
think
in competition
if
to
you
be
stack
number
them ETF versus ETF, they're almost identical in the space, and increasingly that speaks to that price competition that we're talking about.
Thanks, Neil. Neil Sipes, the Bloomberg Intelligence financial analyst, who follows, among other things, BlackRock. And you are listening to Bloomberg Intelligence. I'm John Tucker, along with Emily Griffeo. S&P 500 right now, 34 points lower, down about 0.6%. This is Bloomberg.
It's 11:20 on Wall Street. We do check markets all day long here at Bloomberg. We are on track for a winning week, roughly a 3% gain on the S&P 500 index. This Friday, though, it is another down day. As a matter of fact, right now, very close to the worst level of the day on the S&P 500 index. Right to the numbers here. We have got the S&P down 25 at 52.41. That is a drop now of 0.5%. Dow Industrials down 233, drop there of 0.6%. And NASDAQ down 62 for the NASDAQ Composite Index, lower by 0.4%. The Russell 2000 Index of small cap shares particularly hard hit, down 1.4%. The VIX at 45, 10-year yield 4.55% with the 2-year 3.93%. Gold is surging another 2% right now with a 3,200 handle. 32.37 on the precious metal, up $62 now. West Texas Intermediate crude up 0.5%, 60.39 a barrel. And Bitcoin, 82,100 on Bitcoin, up by 2.8%. Tesla has stopped taking orders in China for Model S sedans and Model X SUVs, both of which are imported from the U.S. after the countries raised tariffs on one another in an escalating trade war. Tesla shares, they're slumping now by 3.3%. And Five Below, the retailer, is asking vendors to turn away products waiting for shipment in China before they set off for the U.S. This according to a memo reviewed by Bloomberg. Five Below shares, they are now down by 9.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Yeah, Focus on Munis brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. This is my favorite segment of the day.
BAM.
Very good, Emily. Can I pick up some good tax equivalent yields these days? Shruti Singh is with Bloomberg News Municipal Finance Reporting, joining us now from Chicago. Have municipal bonds become attractive? Do people even care about tax exempt status in these troubled times?
Well, there's a couple of different questions in there.
I know. I try to get them all out of the gate.
So tax exemption actually is a point of discussion right now in the markets, given that Congress is taking a look at the extending the tax policies from 2017 and how that could impact, what they're looking for in terms of pay-fors. And people have talked about whether tax exemption could be something that Congress looks at to get some revenue. Right now, it's really unclear. So that's a separate issue. But this week, there has been a lot of volatility in a market that's usually not accustomed to this kind of up and down. We had 3 days at the beginning of the week when cumulatively we had the 10-year munis, benchmark munis, rise above about 85 basis points, which is a really unusual move. And then yesterday we saw them come down about 48 basis points. So it's been a very volatile time. But in that cheapening earlier in the week, we did see some bargain hunting.
Right. So what is the buy thesis to buy munis right now?
Well, in terms of earlier in the week, there was a lot of bargain hunting, as I mentioned, because earlier in the year, munis were seen as fairly rich because a lot of times they're compared to treasuries. What are the yields that munis are providing compared to what the yields treasuries are providing? So earlier in the year, we saw that ratio in the 70s, and now we've seen it much higher than that. And so relatively speaking, munis were seen as cheap, and there were some buyers come in. We had reports of buyers such as banks and insurance companies that had kind of held back for a little while coming into the market.
Who's the buy? Why do they buy? Are you seeing buyers buy because of the yield? Buyers buying because the price gains?
Well, there's no one single thesis in munis because there are so many different issuers and the market itself is extremely diverse. So it depends on what you're looking for in terms of yields. If you're looking for example, in high yield, you're going to get much higher interest rates and income than, say, a triple A issuer. So it depends on what your fund, what your investment strategy is. But overall, yields were increasing earlier in the week because of just the turmoil we've seen in financial markets.
There is an article on the Bloomberg terminal about muni deals being postponed due to rising yields and market uncertainty. Tell us a little bit more about, I guess, the outlook here for deals and whether or not that's good for
Oh,
these
and
states.
issuance. How was issuance, too?
Yeah.
So answer two of those quick.
Yeah.
We asked two questions at a time, by the way.
Questions, John.
It's all
One at a
good, all
time.
good, all good. I can take those both. So earlier in the week, as interest rates, yields are basically interest rates, right? It's the cost that a state or local government is going to pay to borrow from the market. So earlier in the week, you saw the yields surging, which means that a state and local government, whether it's trying to fund a construction of a school or road repair or whatever the case is, that just means their costs were rising. So those issuers that were coming to market earlier in the week, some of them took a pause and said, well, we need to figure out if this is the cost that we want to sell our debt at, or we want to wait until the markets stabilize. So some of those deals were put on pause. Now, in terms of issuance, we had overall in 2024, we had a record year. And there are certain pockets of the market, many that I've spoken with, that have said that this year, even after this delay this week, this brief pause that some issuers are taking, this could be yet another banner year.
Okay. My investment strategy, by the way, is to swing in a hammock on a tropical island and collect
Sounds good.
a municipal bond that pays somewhere 9-10% with no risk attached to it. Thank you. We appreciate your time today. Shruti Singh, Bloomberg News financial finance reporter, joining us from Chicago today. Let's move on to the data. Plenty of it. And Mike McKee is joining us now from Bloomberg News. Mike, my focus was firmly on the University of Michigan sentiment survey at the 10 o'clock hour Wall Street time. Consumers are not in a happy mood.
You're the Gomez Adams of Bloomberg Radio here.
Even I don't. Oh, yes. Okay, I get that reference.
For those
now.
of you who are old enough to
Does that
remember
mean
the Adams family.
that mean Emily is Trish?
I don't know what any of this is.
She's Wednesday.
Oh, Wednesday. Okay.
Oh, okay. Now I know what it is.
Okay, no, yeah, the numbers are really bad. The sentiment number falls to 50.8, which is the lowest in a very long time. The second lowest, I think, ever. The expectations index falls to 47.2. That's the lowest since 1980. And it shows consumers are, as you say, John, very pessimistic about the economy in 6 months. But the number that caught everybody's attention is the one-year inflation expectations index, 6.7%.
And I think it was you who told
right
me
now.
that's sort of like a self-fulfilling prophecy in a way.
Well, that's the way the Fed looks at it. If people think inflation is going to go up, and the companies think inflation is going to go up, then they both act on that, and you end up seeing inflation rise, which is why they are always talking about their concerns about inflation becoming unmoored. And I think what we're seeing there is the rope being unwound from the pylon on the dock.
6.7% is much higher than what we're actually seeing in reality, right?
Yes. I mean, yesterday, CPI 2.8 on a headline basis. So we are seeing
So who takes this
significant
survey?
fear.
They don't.
Well, it's the University of Michigan. It's an online survey now. Used to be on the phone, but they have pre-organized panels, and you get on a panel and you stay for a couple months so that your answers are consistent over time. They can measure real change as opposed to random. It is. I talked to Joanne Shu, the director of Michigan Surveys, this morning, and she said basically this just reflects what people are thinking will happen. It's not just inflation. They are the number of people who think they're going to lose their job this year went up. The number of people who think the labor market's going to be terrible went up. The number of people who think that consumer spending is going to go down is up.
But I mean, how many times have I counted out the U.S. consumer and been proven wrong?
Well, sure. And that's why the Fed motto is we watch what they do, not what they say. The problem is some of what they said has been happening. People in the last couple of months have been telling the University of Michigan surveyors that now is the time when you want to buy a car or an appliance or some big ticket item that could be tariffed. And we saw big increases in sales of those items. Now they're saying it's too late. So are we going to see a drop-off? That's going to be the concern.
Okay, CPI was yesterday. Producer prices this morning. Yippee, prices are down. Are they down for the wrong reasons?
Not so much for the wrong reasons. This would have been great news for the Fed. The reason we saw a drop in the PPI headline was energy prices, big drop in energy prices. But overall, there were a lot of areas where we saw declines, and including the ones, everybody looks at PPI now because of the things that feed into the PCE, which is the Fed's index. And airline fares, portfolios, health care, all were very, very contained. And now the first predictions coming out from the nerds who spreadsheet all this stuff is that PCE is going to come in very, very low this month when we get to the end of the month, which would be ordinarily good news. But since this is backward looking, it's not particularly good news. And the one thing that stood out is the price of steel mill output went up 7.1%. Now, those are American producers raising prices because prices have been raised on their foreign competitors with tariffs, and they know they can raise prices and still undercut the foreigners, so everybody pays more. It's not like you just switch to Americans and you get a much lower price.
And I was struck by what economist up at the Tuck School was on Bloomberg Surveillance. I can't remember who it was, but just the idea of bringing production back to the United States, increasing jobs. He was like, no. This is like it takes one worker to produce a ton of steel as opposed to 10 years ago when it took 8 or some statistic like that.
And this is all part of the big debate over whether anybody should be allowed to buy U.S. steel. U.S. Steel has a lot of the old blast furnace, labor-heavy type of plants, and those are much less efficient, and they take more people, and they need to be modernized. And so everybody else has gone to the newer kinds of steel production.
So we can basically increase employment in this country by taking backhoes away from ditch diggers and giving them spoons?
Well,
I mean, I got like 10 seconds left, but you get the idea.
The problem is you can put the robots in the factories, but then somebody has to be trained to help the robots work.
We could just go on and on with this. I'm John Tucker, along with Emily Grafeo. He's Mike McKee, our Bloomberg Economics do-it-all kind of guy reporter. You're listening to Bloomberg Intelligence. Just ahead, we'll check the markets with Charlie Pellet. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Choppy session. We've got stocks swinging between gains and losses right now, looking at a 2-point advance on the S&P 500 index. Little change there, up less than 0.1%. The Dow in the red now, down 22, drop there of just about 0.1%. NASDAQ, meanwhile, holding on to a 37-point gain, up 0.2%. Russell 2000 index of small cap shares slumping by 1%. The 10-year yield 4.52% with a 2-year currently yielding 3.92%. Spot gold is surging almost 2%, up 1.9% right now, higher by $61 at $32.37 the ounce. And West Texas Intermediate crude oil up 0.7%, $60.51 a barrel. U.S. wholesale prices dropped in March by the most since October of 2023. And with that story, here's Bloomberg's Vinny Del Giudice.
Energy costs contributed to the 0.4% decline in the Producer Price Index. Excluding food and energy, core PPI barely budged. The data followed Thursday's report showing consumer prices fell. While inflation is expected to flare up as tariffs take hold, commodity costs may provide a cushion. A Bloomberg Metals Index is near a 5-year low. Vinny Del Giudice, Bloomberg Radio.
Vinny mentioned tariffs, and shares of chip makers with U.S. manufacturing plants fell after China announced new tariffs targeting semiconductor imports. Case in point, Texas Instruments, it is plunging now by 8.2%. Intel is lower now by 5.5%. Recapping, the S&P in the red, down 7, now down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks, Charlie. You're listening to Bloomberg Intelligence. I'm John Tucker. She's Emily Griffeo. Do you run and hide or keep calm and carry on in this market? Bolita Ong is chair at Dalton Investments, joining us from Santa Barbara. And I'm so jealous. It's like 10 below and raining in New York, and she's in Santa Barbara. How much hand holding are you doing with clients?
First of all, thanks for having me on the show. Hand holding. We work with large institutions, and so
we
it's
even have to
different.
hold their hand sometimes, right?
Sometimes it's more a matter of talking to them about where we think the opportunities lie. And so right now, with the tariffs bringing everything down in price, we're actually encouraging our clients to add to their positions in Japan, because we think this is a particularly attractive point to increase positions in companies that we like in Japan.
So that's just Japanese equities. Are there any specific sectors within that region?
We invest one company at a time, and it just happens to be that Japan has a lot of manufacturing companies, and a number of them we think are very attractive. The thing that's going on in Japan that's interesting, that's different from, the daily fluctuations to do with the news and more short-term developments, is governance. Governance has really made a difference to the Japanese market in the last, say, 5 years or so, to the point where you're seeing private equity deals double this past quarter compared to last year. And the reason for that is simply because the Japanese government is behind it. So they see very fully now that it's very much in the interest of the country, their companies, their people, to improve corporate governance in Japan so that the Japanese stock market is more viable and a better investment for their pension plan, which happens to be the biggest investor in that market. And so we're seeing some momentum in corporate governance that's leading to a better use of capital on the balance sheet, more rational investing by these companies, and just better governance in terms of the workplace. So, I'm sure you've all heard, and we've talked about this extensively over the months, of the scandal at Fuji Media. And that's blown up in Japan to be a Me Too movement there. And we believe will lead to a complete change in the way that the company is being run.
Well, that's interesting. I mean, it's sort of like, it sounds like almost governance arbitrage on your part.
You could say that. It's we look for markets and opportunities where the government is on our side. And, going back, it's almost, 15, 20 years now, when we tried to be activists in Japan then with other investors, it was a futile endeavor because the government was not on your side. And in Japan, if you don't have the weight and moral authority of the government, you can't really succeed. And this time, they are the #1 largest activist in Japan, the Tokyo Stock Exchange. And so it just, you're right, it's jumping on the bandwagon of governance reform in Japan. It's not just the governance trend, it's also because Japanese companies are just really cheap and they're good companies. You know, we know them, they've been around for a long time now. They're globally, the global leaders in so many fields. And yet they're so cheap. So many of the companies we're looking at trade at an EV to EBITDA of about 6, which means that the yield on your investment is something like, 16, 17%. Yet you can borrow long-term for about 3% in Japan. So if you're a private equity shop, you can essentially make this arbitrage gap profit leveraged, which is incredibly attractive. And you do so for companies that are good companies, that have good products, are run operationally well, and just need better management of the balance sheet and investment opportunities.
What about in the U.S.? Is governance on your side in the United States?
So we don't invest really in the U.S. We've been a specialist investing in Asian public equity since we started. But of course, the U.S. being the biggest market in the world forces us to have an opinion of some sort on how things are going in the U.S. And for a long time now, we thought that the U.S. market was very fully priced. And we're a value investor, so that would have made it harder for us to invest in the U.S. anyway. So what we have invested in the U.S. actually has been in energy, because we think that even with the green revolution, you still need a lot of these, traditional oil companies, oil and gas companies. And there are many times in the market cycle when they are under a lot of price pressure. So we've invested there. And then a number of the sort of firms that are important for the tech supply chain that we think matter as well. But generally speaking, we don't invest in the U.S.
Are you allowed to give individual names?
Yes, of course. So I'll give you an example of a name in Japan that we think is well positioned with all this tariff fluctuation going on. So if you recall, in the 80s, the Reagan administration put a lot of pressure on Japan to shrink its trade surplus with the U.S. And what Japan learned from that whole exercise, and what they did was they imposed voluntary export quotas on themselves. They started to put factories in markets where the demand was. So we are seeing, Toyota, Honda, Nissan factories in the U.S. And Toyota factories actually produce about 75% of the cars sold in the U.S. So they did that, and they also bought a number of foreign companies as they expanded their growth. So the famous example is that of 89 when Sony bought Columbia Pictures. So Japan has seen this playbook before. They know what to do, and they know what works. And as a result, it's insulating them somewhat from the effects of these tariffs, because they have local production, which is not affected. In the case of Rinnai, one company we own, which makes gas heaters, almost all the production is in the U.S. for the U.S. market. And even U.S. companies that have production in Mexico, so one of the biggest competitors is a company called A.O. Smith, and their factories are in Mexico. So if the tariffs are in Mexico, in fact, Rinnai, which is a Japanese company with factories in the U.S., does better, relatively speaking, than a U.S. company with factories in Mexico. So, you're seeing these developments that in the tariff picture that actually favor Japan in some ways, because they've done this before.
I want to get your perspective before you go on. Maybe a one-word answer. Is carry still a thing?
Carry is always a thing, but maybe right now with the volatility in prices, it's less of a thing because you can really get whipsawed. But it's definitely a thing, and the U.S. interest rates are much higher than abroad. So that's still a thing.
Belita Hong, chairman at Dalton Investments, joining us from Santa Barbara, California. Appreciate it. As we look at the markets real quick, S&P 500 is 10 points higher. That is up 0.2%. Dow Jones Industrial Average is up 26 points right now, up less than 0.1%. The NASDAQ 100, 53 points higher. It is up 0.3%. I'm John Tucker, along with Emily Griffeo, our subs today for Bloomberg Intelligence.
I think we're doing a good job.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Intelligence, we're in for Paul and Alex today. You're listening again to Bloomberg Intelligence. You know, there's another worry for Wall Street. The safe haven status of U.S. Treasuries and I'll add to that, even the U.S. dollar could be in question. Let's discuss now with Bloomberg Intelligence Chief Interest Rate Strategist Ira Jersey. He's joining us from our offices in Princeton, New Jersey. Hi, Ira. Is this really a thing?
So first, I'm actually working from home today. Someone has to walk the dog while my kids are on spring break because I had to cancel my spring break thanks to everything that's going on.
I have a feeling you're going to be working this weekend.
I have no doubt. I think it is a big worry, right? So,
Okay, anyone watching, be careful of the fake out. We're kind of, we tried for the short earlier. The short was there. I had the direction right. I just didn't get the entry and hold the trade as good as I could have. So now we went long straight into the VWAP. So we need to really confirm that we're going to go higher. You know, we're kind of on a trend line down. So if you kind of look at it this way,
a lot of this is speculative.
just something to think about. Like, look at this.
That foreign investors, particularly foreign private investors,
You know, that's a perfect trend line down.
dollar risk.
So this might be resistance and we're heading back down. We would have to break this trend line to go higher.
We'll be taking those actions.
So if you're thinking long here, I would wait until we confirm above.
Pretty rational, you know.
Here, let me mark it correctly as a trend line.
But I have to say, something I've been looking at this morning is comparing this to.
You would want to break that trend line, in my opinion, before you go higher.
What you see is
because you know the VWAP will suck it back into it. So we want to like confirm and then go higher and then look for the 20 to be up above the VWAP and kind of like make that move to go higher. That's kind of what I'm looking at.
2022 and 2013. So again,
We tried the short. The short was looking pretty good all through here. We kind of chopped through here and I got chopped up a little bit. Or was it this short?
So
Oh, it was
foreign
back here, I
investors
think. But
selling
anyway,
out of
you know.
treasuries. How big of
So,
a deal is that?
You know, if we come
much do
below
treasury
and we
holders
start
need to be
banging around the
concerned
20 and the 20 turns into resistance, then maybe we take a short. But that's kind of what we're looking for.
In U.S. Treasuries.
All right.
Yeah, so in aggregate, about 1/3 of the treasury market is held outside of the United States. Now, some of that's in hedge funds and the like, so actually the beneficial owners of those hedge funds might be Americans, right? But you still have a significant portion that's held by foreign central banks, by insurance companies, pension funds, and sovereign wealth funds that that these countries are going to make decisions, and the companies are going to make decisions that hold these securities as to what they're going to do in going forward. Now, I suspect a lot of the insurance companies and pensions that might hold U.S. Treasury securities, their first step is not going to be to actually go out and outright sell. But if they're not buyers, then someone else has to become the incremental buyer. And to become the incremental buyer, that means that the securities involved have to cheapen probably to lure in a new buyer base. So that means you have higher yields, lower dollar prices, and more volatility in the market. And I suspect that all of this is happening in very short order. Meanwhile, this is happening in a time when securities dealers, the large primary dealers, are very full of securities. In fact, just 2 weeks ago, they had held the most treasury securities they've ever held in their history. So another reason for some of this volatility, I think, is just that they're full, right? They just don't want to take more treasury risk without cheapening up the market because they already own a lot of them.
Well, what did the auctions we had 30s yesterday and what was it, 2-year
we had
notes?
tens and threes.
Tens and threes. Okay. What did the take up there tell you?
Yeah, so that was those were among the more interesting auctions that we've had. Auctions are really boring until they're not, and this week certainly did not have any boring auctions. So Tuesday we had a 3-year auction, and that was pretty abysmal, quite frankly. It was one of the worst 3-year auctions that we've had since 2020. And so I think what happened after that, and one of the reasons you saw the markets very volatile thereafter, was there were dealers and other investors who tried to make room, so basically manage their portfolio so they were able to bid for the longer duration, higher risk assets later in the week. And so the 10-year on Wednesday and the 30-year yesterday actually went really well. We have a grading system that we use, D to A plus. And yesterday's, while the 3-year got a D, the 10-year got an A plus, and the 30-year got an A. So really solid auctions. They had very good bidder metrics. There were a lot of people involved, but it also didn't stick. And I think that's another a worrying sign in terms of where the market might head to, and in terms of yields might continue to move higher, because even though you had strong auctions, a lot of times strong auctions turn the market, and that turn in the market to lower yields did not stick by any stretch of the imagination, and you're seeing the follow-on from that today.
That's the smart money. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Always a pleasure, Ira. We appreciate it. I'm John Tucker, along with Emily Grafeo, and on Sunday, Bloomberg TV has special programming to kick off the trading week from 6 to 7 p.m. Wall Street time. With investors on edge as tariff headlines spark volatility across global markets, Bloomberg Surveillance has the insight and commentary to give you a jump start in the trading week. Join hosts Jonathan Farrow, Lisa Bromowitz, and Anne-Marie Hordern for real-time insight from top economists, market strategists, and policymakers. Right now, we have the S&P 500 16 points higher. 2-year yield up 7 basis points. That is at 393 as we have this sell-off. The 10-year right now is up 10 basis points with the bond price down to right now the yield 452. You've been listening to Bloomberg Intelligence. Balance of Power with David Gore and Kaylee Lines next after this global news update.
This is CBS News on the Hour, sponsored by Steel.
I'm Steve Kathan. China boosted the tariff on U.S. goods to 125% and apparently has made no phone call to Washington to look for a way out of the escalating trade battle. CBS's Natalie Brand at the White House.
The president has signaled that he's open to talking, that he wants to make a deal. He even said that he has great respect for Chinese President Xi, but he said that he's still waiting for that call.
CBS's Weijia Jiang has more on some of the early impact on American businesses.
They're a boost for Matt Billings, who owns a metal manufacturing company that sources its supplies domestically and isn't subject to import tariffs.
We're more busy than we've ever been.
Billings says he can barely keep up with the demand.
We went to 7 days a week. We've added multiple shifts.
But for Sarah Wells, who owns a bag company targeted to new moms and imports tens of thousands of units from China a year, she's worried she may have to shut down her business.
Might as well be 1,000%. It's just insurmountable for small businesses. I mean, I can't do that. That exceeds the cost of the manufactured product.
In an hour, there's a court hearing about the Maryland man who was mistakenly deported to El Salvador. The Supreme Court says the administration has to work to get him returned. CBS's Scott McFarland.
The court has directed this lower court judge, Paula Sinis in Maryland, to come up with some clarification as to what the administration is to do to get Abrego Garcia out of that Salvadoran prison and back to the United States.
A small plane crashed this morning near the airport in Boca Raton, Florida, not far from a busy interstate. Witnesses reported the plane had trouble on takeoff and tried to return to land. Aviation expert William Shepard.
I-95 is right there. And so a left turn would have taken the plane very close to I-95, and you actually go over I-95 to come back to land. So that was what was underway when obviously something catastrophic happened and the plane went down.
The FAA is investigating a clipped wing incident involving 2 American Airlines regional jets at Washington's Reagan National Airport, scene of other incidents this year and the deadly collision over the Potomac River. New Jersey Democrat Josh Gottheimer was with a group of lawmakers on one of the planes.
How could this happen again at the same airport, let alone at any airport in the United States?
Health Secretary RFK Jr. says the government will undertake what he calls a massive testing and research effort to determine the cause of autism and finish work by September. Wall Street, right now the Dow is up 43 points. This is CBS News. Minecraft fans are making a mess at some movie theaters.
Chicken jockey!
Teenagers revved up by TikTok trends have been throwing popcorn buckets, spilling soda, jumping on seats, getting into fights, even bringing live chickens with them to screenings of the new Minecraft movie. The situation got so out of hand at a theater in Washington Township, New Jersey, they called police and then banned kids without a parent or grown-up from future showings of the PG comedy. Deborah Rodriguez, CBS News.
Two college baseball teams with epic losing streaks went at it in a doubleheader this week. Yeshiva University, losers of 99 in a row, and Lehman College with 42 straight losses. Yeshiva blew a lead and lost the first game to reach 100 straight, then held on to win game two. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
China slaps back with a 125% tariff now on U.S. imports, but they signal at least the tariffs won't go up from here. Welcome to Balance of Power. I'm Kaylee Lines alongside David Gura today in Washington. Joe Matthew is on assignment. And when we consider the words of the Chinese Commerce Ministry, David, the suggestion that Trump's escalated tariffs are a, quote, joke, and that it's not even economically worth it to raise tariffs anymore because it already has completely, essentially torn apart the trading relationship between the two largest economies.
China's saying they've raised them to 125%, don't intend to raise them more than that, but will fight back if this protracted conflict continues. We are all waiting to see if there is a phone call from Beijing to Washington. The White House desperately wants one, but no indication yet that that's on the way.
Yeah, unclear if she is willing right now to pick up the phone. And in the meantime, you're seeing markets take not so much equity markets today, which actually are staging a little bit of a rally, but bond and currency markets are really what we're paying attention to, David, with the 10-year yield right now up 10 basis points. We're north of 450 and the dollar weakening once again.
Yields rise, prices fall. We are seeing that sell-off in treasuries. I know that Charlie Pellet in New York is keeping an eye on the bond market, all markets. Let's get an update from him in New York. Charlie?
Hi, thank you very much, David Gura. Indeed, stocks are higher for now. Emphasis on for now. Been that kind of a day, swinging between gains and losses. We are on track for a winning week, believe it or not, on the S&P 500 index. What a week it has been. Right to today's numbers now with the S&P 500 index up 28. That is a gain now of 0.5%. We've got the Dow Jones Industrial Average up 152 on the Dow, a gain of 0.4%. NASDAQ up 134, up 0.8%. 10-year yield 4.52%. We have got the 2-year yielding 3.93%. Gold is surging above $3,200 the ounce, $32.44 on the precious metal, up 68 right now. Gold currently higher by 2.1%. West Texas Intermediate crude just above 60 a barrel, 60.60 right now. That is a gain of 0.9%. And Bitcoin up by 3.3%. 82,484 on Bitcoin. So again, the Dow, the S&P, NASDAQ all advancing. Yes, on track for a winning week, but what a week it has been. Dan Ives is a senior analyst at Wedbush Securities, and on surveillance this morning, he put it like this.
It continues to be, in my opinion, 25 years doing this job, from dot-com bubble, financial crisis to COVID. It's the scariest week and some of the scariest conversations that I've ever had in my career.
Dan Ives summing it up at Wedbush. So the Dow, S&P, all higher right now. Bank earnings today, mixed picture. We've got J.P. Morgan Chase advancing by 2.7%. Wells Fargo down 3.2%. Morgan Stanley after earnings down 0.8%. And BlackRock after earnings right now up by 1.1%. Again, recapping, stocks are higher. Balance of power continues right now. Back we go to Washington. Once again, your hosts, David Gura and Kaylee Lyons.
Well, Charlie, thanks very much. You mentioned those earnings from J.P. Morgan Chase. We heard from Jamie Dimon, who talked about stormy seas in the markets, in part because of the confusion, the uncertainty about these tariffs policies. We heard from Michael Faulkner this morning. He's the Deputy Treasury Secretary and was on Bloomberg Surveillance talking about what the White House is waiting for.
We are looking for China to pull back on its tariff retaliation and to come to the table. We are looking for them to work with us in order to create an environment whereby we can address these vulnerabilities, where they can come to the table and equitably address these long-standing issues that have given them an unfair advantage.
Not sure China raising its retaliatory tariff rate on U.S. imports to 125% could be easily classified as the pulling back that the White House was looking for. But that is indeed what we got today. And we want to get more now with Jordan Fabian, who covers the White House for us here at Bloomberg and is here with us in our Washington, D.C. studio. So, Jordan, the President Trump, that is, has made it very clear that he is willing to talk to President Xi. But the signals we're getting from China is not that they're ready to talk. They're still in fight mode, it seems.
That's right. You saw that with the retaliation. They put some restrictions on Hollywood films even and suggested they could retaliate against other sectors. So you basically have an unstoppable force meeting an immovable object, and there doesn't seem to be an end in sight. The president, in fact, indicating publicly that he wants Xi to call him first, and Xi is saying, no thanks.
Peter Navarro, one of the president's counselors, is branding this as 90 deals in 90 days, a name that would make Merv Griffin happy, I think, in terms of its tone. Where are we in this process? We've heard over the last few days there's been a lot of phone calls coming in. There are plans for trips, people coming to Washington, obviously the Treasury Secretary ready to leave on a trip. Where does that stand, and how are they prioritizing those conversations?
Well, I think we're 1 or 2 days past this, and we're at 0 deals. So that's quite the pace that Mr. Navarro has laid out. I want to remind viewers that these trade deals are extremely complex vehicles. I mean, these often take years. I'm thinking, I covered the South Korea-U.S. negotiations under President Obama. That's something that took years and years to hammer out. And so they have this sort of Damocles hanging over them, where these tariffs are going to go back into place for all the other trading partners on July 9th, which puts a tremendous amount of pressure to reach some kind of deal. So I would assume there may be some kind of deal in principle before maybe another specific deal is reached, but it's really unclear at the moment.
Well, and is it clear that other countries are taking the administration seriously in terms of the threat to enact tariffs on July 9th if there's no deal reached? I just wonder about the leverage the opposing sides will have against the White House, knowing how easily President Trump has proven to alter course on things like import taxes.
Well, this is the big problem, right, with President Trump's reversal, is that him and his allies are claiming, this is the art of the deal. He now has this extreme leverage over trading partners. But to your point, Kaylee, if he's proven to change his mind on a whim, in fact, he said to reporters he's judging this all on instinct.
Yeah.
If his instinct at July 9th is, I shouldn't go ahead with this, why should they believe he's serious about imposing those tariffs?
I don't want to make you look into a crystal ball, but on the campaign trail, we heard a lot from the president about a universal tariff. And it strikes me as I hear you talk about the difficulty and detail that goes into each of these negotiations, at least historically, it would be a lot easier for the president to do that. Is there any conversation, is there any way that this ends up with just a 10% across the board tariff, or are they really wedded to this idea of doing this, as they say, more narrowly tailored set of deals?
It could very well end up being that way, and I'll remind people that those 10% tariffs are still in place. I know the market reacted with euphoria with the climb down from these higher rates, but there's still an across-the-board tariff on all trading partners and 145% tariff on China. That's tremendous change. And so even if those could stay in place going forward, these are tariff rates that are 10 times the average U.S. tariff rate that existed last year. So I'm not sure how markets would take that, even if that were to take place.
Well, and that's before we even get to the sectoral tariffs. You still have 25% tariffs on auto imports, on steel and aluminum imports, and the president has made clear he's still looking at things like pharmaceuticals, chips, possibly lumber and copper. Do we have any sense, Jordan, of when that shoe might drop?
The president indicated this week that he might announce those pharmaceutical tariffs quite soon. As for the others, copper could come in May. I think that's when that investigation is going to conclude. But all of this adds up to uncertainty. It's more uncertainty about his tariff plans. And again, even if the higher rates don't go into place, let's see, you have that 10% baseline, you have this high rate on China, they're going to go up even more if he goes forward with these plans.
We learned this week what we've learned before, that is, it all comes down to the man who's holding the iPhone and issues this edict at the end. President Trump's the one who put that pause in place in a post on Truth Social. We kind of are looking to see who's leading these negotiations, who's doing what. Is that the Commerce Secretary, the Treasury Secretary? Is it the USTR? Why would a country want to, what is a country who's negotiating with the White House thinking if they're talking to a Scott Bessent or a Howard Lutnick, if it really is going to come down to President Trump? And what is your sense of his engagement with this process kind of writ large?
It's a great point, is that you have these people like Bessent and Lutnick who at least have some experience in the financial field at the very least. And you could have people like the Vietnamese Deputy Prime Minister who came in this week to talk to the Treasury Secretary. But at the end of the day, it's going to be Trump. Again, he said he's deciding this on instinct. He said this week that when he decided to issue that tweet pulling back on the tariffs, he did it from the heart, and there were no lawyers present. And so you're right. They could theoretically reach a deal with Bessent. Bessent gives it to Trump, and he says, no thanks. And so that's something very difficult for other nations to grapple with.
Just because you mentioned lawyers, and I don't even think we talked about this yesterday in the aftermath of the cabinet meeting the president held, but he alluded to this notion that the agreements he's making with all of these law firms who are trying to head off, potential retaliation from the administration to do hundreds of millions of dollars in pro bono work, that somehow those lawyers are going to be helping kind of craft these trade deals. Is that actually how it gets done? You recruit all the DC big law community to do this work for you?
An expansive definition of pro bono, I think, by the president.
Indeed. De facto government employees. No, it's not. I mean, usually these agreements are hammered out by the U.S. Trade Representative. The Commerce Department will get involved, and they have all kinds of subject matter experts on this. It's very unusual to turn to the private sector, big law, to do this. But listen, if he's hollowing out the federal government, maybe some of those people aren't there. I mean, he needs their help. Yeah.
A busy week when we had this pause. Obviously, we had the executive order on shower heads, all these marquee announcements from the White House. There's also this budget agreement on the Hill. What does the White House do now having that in hand? Sort of how does this process look going forward, the way that the White House is going to be working with lawmakers on advancing his kind of broader economic agenda as this kind of roiling tariffs issue continues?
Well, you've heard him keep haranguing House Republican or Senate Republican lawmakers, too, to get this, quote, one big, beautiful bill. The problem with that is that's a very complex endeavor, and he really needs that even more now that he's done this tariff move to provide relief for Americans who are about to get hit with higher prices as a result of these tariffs. Not to mention the fact that the debt ceiling is coming up sometime later this year, July, August. So that sounds like a lot of time. In Congress, that's not a lot of time. And so he needs them to come together quickly. The Republicans have proven they're fractious within their own ranks, so they really need to come to agreement on some of those key issues on tax.
But is it possible that for all of his rhetoric around promises made, promises kept, what he said on the campaign trail comes true in real life, it's really up to Congress now to decide whether or not a lot of that happens when it comes to no tax on tips and Social Security? There is a risk, right, that the president doesn't get everything he's asked for.
Absolutely. I mean, those are a lot of pie-in-the-sky asks, and some of them aren't popular with Republicans. There was this idea that he floated about raising taxes for wealthier Americans, which has been anathema to Republicans for decades. And so, he doesn't get as much as he wants. Revenue comes down. You have Americans paying higher prices. You end up running into a lot of problems. Not to mention these tariffs are really straining Republican loyalty right now. So for him to then come to them with these asks is a lot for them to take.
Jordan, great to speak with you. Thank you very much. It's Jordan Fabian, White House editor here at Bloomberg News. And Kayla, we have the president now making his way to get his annual physical. I guess that's on his agenda here before the plane takes off for South Florida later today.
Got to check in at Walter Reed, the first annual physical, of course, of his second term, though the president has long argued that he is in perfect health. I think he's called the healthiest president. Called himself, rather, the healthiest
medical
president.
explanation.
Yeah, we'll leave that to the doctor.
Headline crossing here. Iowa Republican Governor Kim Reynolds announcing she will not seek re-election in 2026. Continue to monitor that. Much more here as Balance of Power continues on Bloomberg Radio and on YouTube.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. In fact, right now we are very close to session highs. Been that kind of a day with the S&P swinging between gains and losses, but right now up 30 points. That is a gain of 0.6%. Dow Industrials up 161, now higher by 0.4%. And NASDAQ up 115 for the NASDAQ Composite Index, up by 0.7%. The Russell 2000 Index of small cap cap shares does remain lower by 0.6%. The 10-year is currently yielding 4.51% with the 2-year 3.92%. Gold is up 2.1%. 32.43 the ounce, while West Texas Intermediate crude up 1%, 60.71 a barrel, and Bitcoin up 2.8%, 82,150 on Bitcoin. Tariff news. Tesla has stopped taking orders in China for Model S sedans and Model X SUVs, both of which are imported from the U.S. after the countries raised tariffs on one another in an escalating trade war. Tesla shares currently down by 3.4%. And the retailer Five Below is asking vendors to turn away products waiting for shipment in China before they set off for the U.S., according to a memo reviewed by Bloomberg. Five Below down now by 7%. Recapping, stocks higher. S&P up by 0.5%. Balance of Power continues right now. Back we go to Washington, and once again, your hosts, David Gorup and Kaylee Lyons.
All right, Charlie Pellet, watching the markets in New York. Thank you so much. As the markets watch each and every True Social post and listen to every word uttered by President Trump, as this has been a wild week when it comes to tariffs. A lot has changed, but the thing that remains the same is that the focal point of this trade war seems to be between the world's two largest economies. This has come down in large part to the U.S. and China, after China today made the decision, after the White House's clarity yesterday, that 145% at least tariff rate is now in effect for all Chinese imports. China raised its own retaliatory rate to 125%, suggesting they won't even bother raising tariffs any higher than that, as any further escalation in their mind from the Trump administration would be considered a joke. The Chinese government, though, is still vowing to fight to the end, saying they'll use other countermeasures if necessary, even as President Trump suggests he wants to make a deal.
We'll see what happens with China. We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
With friends like that, who needs enemies? That President Trump there at the cabinet meeting yesterday. Christopher Smart joins us now. He's managing partner at Arbroath, and we're drawing on his experience both at the National Security Council and the National Economic Council during the Obama administration, where he worked an awful lot on trade issues. Thank you very much for being here. And I wonder sort of how you see all of this playing out. There is the kind of long waiting period we're in now, where we have the White House waiting for a call from Beijing, presumably. Looking at sort of how this is ratcheted up, where things stand, what do you see as the next steps in this détente?
Well, good to be with you. I mean, as you say, with friends.
Okay,
like that,
so we got a pullback happening.
Who needs adversaries? The
Maybe
thing
an
I think is with the
opportunity.
markets right now is
Maybe
that on
not.
top of all of the other uncertainty, we
Yeah,
finally
see
have
how
this
far
US-China
we want the
confrontation that,
stochastics to
frankly, we
completely
have
roll
been
over. They're
expecting
just at
since
the top
first
of their
day of the Trump
top of the
administration.
cycle now.
And with all of the
So the
distractions around
stochastics are up
Canada
here.
and Mexico was always
We
on the
want
back
them to
burner
be
until
down
all of a
here,
sudden
ready to roll
Wednesday,
back up.
These tariffs were ratcheted up
And
to
then,
sky-high levels.
you know,
And
maybe if we're
as our
down around
Chinese
this area down
counterparts
here
point out, there's
for
not much of a
that would
difference
be a good
between
place to consider
125 and 145. It's hard right now to see what the off-ramps are going to be on this particular bilateral relationship. President says he wants
Hey,
to do a
SM, what are you
deal,
doing your research
again,
paper on, buddy?
when it gets to, the other guy's got to call me first. It's not
How
quite
not to
clear yet
blow
who's
up
ready to
prop
do
firm
that.
accounts?
Well, to your exact point, Christopher, this notion
You can
that
run a
China
psychological
suggested any
report on
further
me. Oh,
ratcheting
child
up of
hunger.
tariffs
Okay,
would
that's
be
not as much fun.
permanently meaningless. Does that mean
That's
that
not
there
as
is a
much
ceiling
fun.
to hit there in
Oh,
terms of
man.
what would already be the complete destruction of the U.S.-China trading relationship, and we've already hit that ceiling?
Well, it's hard to imagine a product that is still
Did you take a
profitable
trade
shipped
yet
at
today? Or you took the
125%
one?
tariff
Have
that
you,
is no longer profitable at 145. So
you
I
still
think
on the
effectively,
Bullinox? Still
when
working the
you more
Bullinox?
than double the price of anything, it's very hard to continue that relationship. And I think you've already seen early reports of shipping companies shutting down, traffic diverted in midstream, and all of that is beginning to unravel right now. The real concern is if this goes on for more than a few days. President seems to be quite nimble in terms of changing his posture. But if this goes on more than a few days or weeks, we're more likely to
Okay,
get
cool.
locked into something that's
Oh,
going to
we
continue
tagged
for
the
some
20.
time.
I
Well,
have a
let's wait and see
definitional
what this
question.
candle
That
does
is,
because
are
we're
we
not really
seeing decoupling
oversold
happen
enough
now?
yet
Has
for
it
me to get
happened?
in. I
This
want to
is
see it down
a thing that by policy the last administration did
I
not want
like
to
this
have
zone
happen.
down here. We got all
Are we
kinds of
there? And if not,
resistance
when are we going
down
to know that
here
we are?
to bounce up back into these trend
Well, we're
lines.
getting there. You know, again, nothing. It seems very hard to imagine what you can still ship back and forth when tariffs on both sides effectively double or more what you're sending in both directions. Now, that takes some time to unravel. Maybe there'll be some negotiations that stop that. But I think your broader question is really to the point, which is when will these threats will continue to loom over trade going forward with China. And so the decoupling or the unraveling of the relationship that started in the first Trump administration, trade is down substantially since then, continued through the Biden administration. That's going to be a problem that's going to continue for a long time. And I'll just add, you know, anybody doing business with the United States isn't just wondering what's going to happen with this administration, but, you know, 2.5, 3 years from now, we get a new president of either party. What is that going to look like? It's going to be very, very uncertain compared to what they've been used to dealing with the United States over the last many decades.
Well, and to that point on the uncertainty of the credibility of the United States and the credit worthiness of the United States, Christopher, I wonder what you make of the increasing concern it seems we are seeing looking at the activity in bond and currency markets about the suggestion that whether it's U.S. Treasuries or the U.S. dollar as the world's reserve currency, that status as safe haven assets may no longer be applicable right now.
Well, I think those are the kinds of things that come unraveled over a long period of time. But I think anybody, including the president, who looked at markets on Wednesday and saw stocks, bonds, and the dollar all selling off together, I think that was sort of a moment of cold sweat if you're an investor, or maybe as the president described it, you know, the yips. But that's a sense that, as you say, global investors aren't looking to the U.S. as a safe haven anymore. And you're seeing bits and pieces of that as, for example, U.S. interest rate rise, but the dollar is selling off. There is a sense that maybe you want to put your money elsewhere as global tensions are rising.
As I mentioned, you worked on the NEC and the NSC, and I'm curious sort of what form this conversation, should it happen, is likely to take. We're kind of dispensing with the usual back and forth that would be done, drafting a trade deal with a country like China, all of that shuttle diplomacy, all of the work that would go into crafting something down to each and every nuance. What has to happen on that phone call? Is it the phone call itself that's most important here to markets and to policymakers, or does it need to be substantial? Does there need to be something substantial that comes out of it?
Well, I can tell you from your earlier conversation in this half hour, it's not going to be lining up a whole bunch of pro bono corporate lawyers who are angry with you to begin with. These are agreements that are very difficult, very technical to iron out over a long period of time. I think just a phone call will do a whole lot.
That was a strong move off the 20 EMA.
And
Look
maybe
at
a
that.
framework and a team going back and
Take it
forth,
pretty
and
good.
something that will show goodwill towards on both sides, that a deal is possible, or a limitation of the tension is possible. Just putting it in a box would be a big step forward at this stage.
Well, to your point on pro bono work, I would just note that
All
President
right, I got a
Trump
phone
has
call. I'll
announced
be back.
another $600 million worth of pro bono deals with a number of law firms, including Kirkland and Ellis. This just crossing his True Social feed. So I guess we'll see what role, if any, they play in these many, many negotiations that have to happen. But to the notion that there are other countries that are in this game as well, obviously are actively talking to the White House with a 10% levy still in place, Christopher, which I think we all largely are overlooking due to the dramatic figures we're seeing when it comes to U.S. and China tariffs. What will that 10% flat rate alone, as long as it applies, which we assume will be the duration of this 90 days, what is that going to do economically speaking?
Well, I think you're absolutely right. There is so much going on right now and so much news piled on top of news. You guys are doing a great job trying to make sense of it all for us. But we've all been distracted for what is a wrenching readjustment of the terms of trade with the United States. The average tariff the U.S. has applied to imports has been 2.5% for decades. And now it is jumping to 10%. And that's the expectation that will remain in place. Now, that's not necessarily going to mean a 10% increase in all prices. But as you saw from the consumer consumer surveys just now, people are expecting those prices to jump. That will lead to a reaction in the Fed at some point. And we're going to have to absorb all of that over a longer period of time.
There's something that we hear from the president, but also his economic advisors, that this could be kind of cured instantly, that we could go back to the way things were. There could be an evenness to all of this. And I want to ask you about kind of the horse out of the barniness of all of this and this conversation about American exceptionalism. You talked about the kind of reconfiguration that we've seen of geopolitics and economic relationships around the globe. As you sit and look at all of this and assess the damage that's been done here in terms of confidence and reputation, how difficult will it be to snap one's fingers and return to the way things were, or have the comedy that was there just a couple of days ago?
Well, I may actually steal the horse out of the barniness effect that you just referenced, because I think the horse is out of the barn. It's one of those things that takes years and years and years to build up confidence and a sense of transparency that you can rely on another trading partner. And as I mentioned before, the shifts and mixed messages that we've been getting from this administration have been very disruptive to our trading partners. But I think, again, as you look over the last 10 years, and again, it was the Trump administration the first time around, the Biden administration kept some tariffs in place and added some tariffs, which is very different from the way the United States has done business in the past. Anybody who wants to just look past this administration has to keep in mind that we're dealing with a new United States that is turning more inward, that is more likely to apply tariffs than take them away. And that, I think, creates some longer term uncertainty about what adds to the costs of doing business with what has been an exceptional economy.
Christopher, finally, before we let you go, we just have a minute left here. I'm sorry, this may be an unfair question, but would you say the odds of a recession occurring within the next year are now greater that it happens than that it doesn't, even with this 90-day pause in place on the higher rates?
Oh, they have to be greater, because nobody is feeling more comfortable right now that any decisions that were on hold a few weeks ago or even last week can go ahead with them. They're going to want to see what kind of deals come together, how they come together, how many countries sign up, and then are they likely to stick? And then after that, there are the sectoral tariffs that may or may not come and go. Yeah. And then after that, there's this whole U.S.-China relationship that is going to evolve over months and years. So I think that uncertainty has to create higher risks of recession towards the end of this year.
All right, Christopher Smart, it's always great to have you. Former Special Assistant to the President for International Economics during the Obama administration, now managing partner at Arbroath Group, here with us on Balance of Power on Bloomberg Radio and on YouTube as well. Right now, we are looking at some rising equity markets, though. The NASDAQ 100 just crossing 1% gain territory. We'll have more on the latest for you on the other side of the break. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Best levels of the day right now. A sudden leg higher for the Dow, the S&P, and NASDAQ. Right to the numbers here. It has been a whipsaw session, but the Dow right now up 380 points, up by 1%. S&P 500 index on track for a winning week, up 59, now up by about 1.1%. While the NASDAQ Composite Index higher by 222 points, up by about 1.4%. The 10-year at 4.49%, with the 2-year currently yielding 3.93%. Spot gold up $55 the ounce, $32.29, up by 1.7%. And West Texas Intermediate crude 60.86 a barrel, up by 1.3%. Bitcoin right now is surging 3.5%, 82,657 on Bitcoin. Again, that's an advance of 3.4%. Right now, we have got the S&P, keeping it all in context, up 1.1%. The consumer outlook dimmed across the U.S. in early April. And with that story, here's Bloomberg's Vinny Del Giudice.
Consumer sentiment tumbled to an almost 3-year low, rattled by tariffs. Inflation expectations reached multi-decade highs. The share of Americans expecting higher unemployment in the coming year rose to the highest since 2009. They also see an increased chance of losing jobs. The data are published by the University of Michigan. Vinny Del Giudice, Bloomberg Radio.
On an update for the U.S. equity market, chip makers are declining, especially chip makers with U.S. manufacturing plants. They are lower after China announced new tariffs targeting semiconductor imports. Beijing will raise tariffs on all U.S. goods from 84 to 125%. Right now, Texas Instruments is down 6.6%. Intel lower now by 3.6%. Recapping, stocks higher. S&P best level of the morning, up by 1.1%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, David Gorup and Kaylee Lyons.
Well, Charlie, thank you very much for that update. Continuing to watch markets this afternoon as we see some relief, some enthusiasm in the equities market, but again, keeping an eye on Treasury markets in specific. As earnings season gets underway in earnest as well, we heard from Jamie Dimon for, I think, the third time this week on that conference call with investors. Of course, he did an interview earlier in the week with Fox Business, one that was of keen interest to the President of the United States, and preceded his pause on some of those tariffs and reached out in a lengthy memo to JP Morgan investors as well. Because the conversation here still revolves around this uncertainty, even as we've seen the tit for tat between the U.S. and China, wondering how all of this winds up.
Well, and that was exactly what Jamie Dimon was speaking to after JP Morgan's earnings. This notion that, yes, he could see how there are good things coming in terms of deregulation and tax cuts, but there's also the uncertainty that comes with these tariff policies and more widely the economic outlook. As we look to what Charlie was just describing, UMich consumer sentiment data, for example, today. So it kind of speaks to the volatility we have all experienced over the last week, as the market maybe has some things it wants to look ahead to, but can't seem to get past a lot of the immediate headwinds when it comes to the tariffs that are still in place right now.
And that data that we got from Michigan is so crucial because we see kind of the primacy of that soft data, that sentiment-related data. Yes, we got a lot of hard data this week on inflation. And while the president did take credit for the fact that it hadn't moved that much, he said no inflation, just a little inflation. Of course, backward-looking data, and this sentiment gives us some insight into how, yes, consumers are feeling about the future, their savings, their prospects, but small business owners as well.
Yeah, well, and that souring sentiment may be giving Democrats something to seize on here as they try to use a message that arguably helped Trump win the White House, which is about the economy, now against him. And that is the note we begin today's political panel on. Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino are with us. Rick, of course, is a partner at Stone Court Capital and Republican strategist. Jeannie Sheehan Zaino, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Jeannie, as the Democrat, I will start with you on this, as we're hearing messaging now from Democrats on Capitol Hill about this being chaotic, even if President Trump pulled back on tariffs, reciprocal tariffs, that is, for the time being, that the chaos is really what the name of the game here is. Is that a message that works for them?
It should be. I feel, Kaylee, like if Democrats can't use what has happened over the last week against this administration and against Republicans, they ought to hang up their hat and go home. Because Donald Trump won last November on the back, really, of a really heterogeneous group of voters who came together to support him because they were disgusted by the economy that Joe Biden had created, whether that was deserved or not. and particularly the rising prices, particularly inflation. And Donald Trump, in less than 80 days, has made all of that much worse. So if Democrats cannot use that to their advantage as we go into 26 and again to 28, they really don't have any hopes. But I'm hopeful, Kayleigh, I'm going to be optimistic on a Friday that they can use it to their advantage politically, because this has been quite a shock, and not just to Democrats, but Republicans and Trump supporters. And we've heard the discontent from all areas.
Capitol Hill a bit quiet on this rainy Friday in Washington as lawmakers make their way home for recess. But before they did, the Minority Leader, Hakeem Jeffries, spoke about the pause that we saw put in place, all of the undulations related to these tariffs policies. Let's take a listen to what he had to say.
What, if any, advanced knowledge did members of the House Republican Conference have of Trump's decision to pause the reckless tariffs that he put into place? There are several members of Congress who will be aggressively demanding answers and transparency, particularly as it relates to stock purchase decisions that may have occurred over the last few days.
Well, one of those members was Mike Levin, congressman from California, who joined us last night on Balance of Power. He was a signatory to a letter to Republican leadership in the House wanting an investigation into sort of what trades may or may not have happened on the day that that pause was announced. Ginny, how resonant is this call that we're hearing from Democrats as we talk about what their messaging should be, is going forward here? Yes, there is the kind of calamitous rollout of this tariffs policy as we saw it play out in the markets. Is this something that's going to resonate, do you think, with voters, this focus here on what may or may not have happened in terms of market manipulation?
I think it's absolutely going to. Even before this happened, we had Bernie Sanders, Alexandria Ocasio-Cortez out there saying that Trump and the Republicans are all about the super wealthy. And, you know, one of the astonishing things for me, David, was to have the president sit in the White House and brag about how his friend made $2.5 million today, $900 million, he said about Charles Schwab and Penske. You know, to have a president sitting in the White House saying that is an underscoring of the fact that this is a president and a party about the uber wealthy. He's celebrating publicly that fact. By the way, on the same day that Bloomberg called the best day ever for billionaires, there was our billionaire president celebrating that. Absolutely, again, something Democrats should be able to underscore. Whether they do or not is another question, but Sanders and others are out there doing it. Now the moderates have to take up the reins, and I think that's what Jeffries is calling for.
Yeah, I believe it was a $36 billion swing in the net worth of Elon Musk.
All right.
Wednesday during the rally. Obviously, it didn't stick yesterday, even if
Yeah,
we're seeing,
no. We got, look at it. We got a
stocks
huge bounce
today,
off
Rick,
that
but
20
it
if we
comes
were
back
brave
to
enough
what
to take the
political
20.
liability is for President Trump around the volatility in the markets. As he tried,
If you were
at least
brave
to a
enough
certain
to
extent,
sit on the
work through it.
20, you'd been
Obviously,
looking really
maybe
good
couldn't
right
get
now,
past
for
some of the
sure.
activity we saw in the bond market a few days ago. But how much does
Just
it
the
matter when people are
rollover. I was
panicking,
afraid
looking
of
at
the
their
rollover.
401ks?
You know, I didn't want to
look,
risk
I
it
mean,
because
you know, some of these
I'm so
issues
close to
have real
making this
resonance
account.
with
I just
voters, and
all I need is
some
one
don't
solid
have
trade
much
and
of
I'm
a
golden.
partisan
So I
edge.
just
This idea that somehow
I missed the move
members
though,
of
didn't I?
Congress, you know, that there's a difference between Republicans and Democrats insider trading. It's pretty clear in the polling we saw.
I mean, I
before
guess
the
you could
election
have.
day,
You
last
could
year
have
that
you could have went in on
basically
this
voters think
candle if you were being
everyone's,
aggressive. This,
insider
you know,
trading in Capitol Hill, and you know they can't pass a
and then
bill
boom.
that outlaws it, and so.
But now you got these fair value gaps.
And
So if
so
it
I don't
drops
think
back
it's
to the
really a
20 in the
partisan
fair
issue, but
value gap, that's
we
going to
do see a
provide
collapse
support
of
to go
the
higher.
consumer sentiment
So I feel better about
around
it. See, we didn't
the,
really have anything but the
swings
VWAP
in the
below us
markets and the,
on this pullback.
the
There's no fair
uncertainty
value
that's
gap. There's
created
nothing.
around this tariff regime.
You know, it could just
And-
run. It could have went down
you know,
and just
you're
tagged the
seeing
VWAP.
record drops.
So I was just, I don't like that
10%
move.
in March, more in February.
But we're pinned
you know,
right to the ceiling on
30% since
stochastics, that's
December,
for sure.
in consumer confidence. That's a real poll, right? Those are the polls of consumers telling you whether or not they're optimistic about the future, and it's only grown worse since election day, which, by the way, was at one of its highest points in the last, 5 or 6 years. So we've fallen a long way in making sure that our consumers have confidence in our economy, and that's on the president himself. His vacillations and incredible sort of rolling the dice with this massive tariff regime has consequences, and we're now seeing those with consumers.
Rick, put yourself in the position of a Republican lawmaker going home to his district for the next 2 weeks. Maybe he'll have a town hall, maybe he won't. He'll likely encounter a constituent who's going to ask him, why is this happening? Why is the president doing this? Is there a clear message from the White House down to those backbench lawmakers about the rationale for doing this that they can kind of easily, succinctly explain to constituents on the right or the left who just wonder what's going on here and why we've seen the kind of undulations we have?
No, that's part of the problem, is that we don't have a set of talking points that members of Congress on either side can adequately address the current situation. I mean, what guidance has the White House given, Republican officials going home, as you point out, for Easter recess? And undoubtedly, they're going to be communicating with their voters and constituents. And what are they going to tell them? Like, well, we got a 90-day pause. That's probably the best news that they can talk about the tariffs, is that nothing, really extreme is going to happen. The fact that we're at I'd say a trade war with China right now sort of cuts both ways with their constituents, but the lack of certainty, the lack of sort of the kind of communications guidance that you would want from the White House. Tell us how to go sell this, right? Give us the end game. Tell us what's the upside for our constituents. They're just not getting, and I think that we've always seen White Houses have trouble communicating their own plans. Certainly, the Biden administration had a horrific time communicating how they were going to try and solve inflation. They went through denial, and then sort of Bidenomics. None of that stuff worked. The Trump administration seems to have a totally different approach, which is like, we're just not going to talk about it. Right? We're just going to kind of tweet our way through this thing and in a spasmodic fashion. And the reality is, it doesn't leave these members of Congress with any real good guidance that they can survive a town hall, which is no wonder why they tell people, don't do town halls. You don't have anything to tell them, and they're all going to be mad at you.
Yep, we've seen some pretty cringeworthy videos emerge over the last few months of these town halls, to be sure. But of course, one of the other things, in addition to the messaging around the economy, we've seen a lot of focus on, Jeannie, from both Republicans and this White House, is progress when it comes to issues of migration and efforts of deporting criminals. Of course, a lot has been focused on of those who were deported to this notorious prison in El Salvador. And Jeannie, I know you are a watcher of the court, so in our final few minutes here, I wonder your reaction to the Supreme Court decision that the administration does have to return the Maryland man, Kilmar Abrego Garcia, who was admittedly wrongfully deported by the administration. He has to come back, and I wonder what you make of the ruling.
Yeah, it's such an important ruling. His 27th day today, Kaylee, in a supermax prison, and the government admitting he is there by accident, but saying, sorry, essentially, we can't get him back. And so now this judge gave them a 2-hour delay. They're still supposed to meet today. A very strange petition by the DOJ, I think, today, to ask the government, or ask the court rather, to postpone a hearing. And the judge came back essentially and said, how could it take you so long to read a 4-page ruling by the court, the Supreme Court? So, the government has to go before this judge and has to say, what are their plans to get him back? And of course, I think this is very much in sync with what we're seeing on the tariff issue. Even if you support the president's policies on immigration and on targeted tariffs, it is the execution in every case which has been a disaster. And I always go back and say, reread Federalist 70. I like the Federalist Papers, Kaylee. What does Hamilton say? A bad government is one that executes the law and the legislation of the country badly, and a bad president is one who does the same. And this is a trap. And Joe Biden fell into the same trap with Afghanistan withdrawal. We're seeing it again. They have to execute well. Otherwise, on immigration, you lose a supporter like Joe Rogan, it's over.
She and Zaino recommending the Federalist 70 there on this Friday afternoon. Really appreciate that. Senior Democracy Fellow at the Center for the Study of the Presidency and Congress, of course, a Bloomberg Politics contributor, along with Rick Davis, partner at Stone Court Capital, a Bloomberg Politics contributor, as well as some insight there about the path forward here for the White House and for lawmakers as they look ahead to the weekend and recess to follow. No shortage of things for them to talk about while they're back home in their districts, Kaylee, including the bill that they managed to pass, the House managed to pass earlier this week.
Yeah, which seems to be just a footnote in the week that has been, given all of the volatility we're seeing in financial markets. Though equities are swinging to the upside today. We're right around the highs of the session, up about 1.5% on the NASDAQ 100, 1.4% or so on the S&P. The 10-year yield right now at 4 basis points at 446. We'll have more ahead in our second hour of Balance of Power here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
We made it to Friday in the wildest week that ever was when it comes to tariff policy and resulting financial market action. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lines, live in Washington with David Gura filling in for Joe Matthew as we round out this week in Washington with more escalation in the trade spat between the U.S. and China. China responding to the now 145% tariff rate on Chinese imports the U.S. has imposed with a 125% levy of its own. And yet they suggest, David, it's not going to go up from here because it would be economically meaningless to do so.
Yeah, the Chinese Ministry of Commerce characterizing this as a joke from the White House, but indicating that if this continues, they will hold their own. They will retaliate. They'll fight this to the end, I think, as they put it. So the uncertainty remains here in Washington that's existed since the president put that pause in place just a couple of days ago. The White House indicating they're waiting for a phone call between President Trump and President Xi. So far, no indication that that's in the offing.
And yet it seems that equity markets are at least finding some reason to have some risk appetite into the weekend. We're just off the highs of the session on the major benchmarks. And interesting to see the action in treasuries today, which is really the bond market where a lot of the so-called queasiness the president was talking about has been centered. Right now, we're only up 4 basis points on the 10-year yield. We've kind of come right back down from the highs we hit earlier in the session.
Very much the focus over the course of this week. Of course, it's what precipitated that pause, as we understand it from the president, him looking at the bond market going into the morning of that announcement, seeing the queasiness that you described, seeing the yippiness that I think he said he saw as well when he was outside the White House. And of course, we've charted these auctions over the course of the week, the 3-year, the 10-year, and the 30-year. Charlie Pellet up in New York has been following all of this as well and has an eye on the markets for us this afternoon. Charlie, give us an update if you will.
All right, we are higher across the board, David Gura. Do want to begin with the weekly numbers because we are on track for a weekly gain on the S&P of 5.2%. To put that in context, the previous week, the S&P was down 9.1%. So here's where we stand right now. As you both mentioned, very close to session highs on the S&P, now up 57. That is a gain of 1.1%. We've got the Dow up 386, now up by 1%. NASDAQ up 212 for the NASDAQ Composite Index, up by 1.3%. The Russell 2000 Index of small cap shares now higher by 0.3%. The 10-year 4.46%, with the 2-year that's currently yielding 3.91%. Spot gold up $52 the ounce, up 1.6%. 32.28 the ounce on gold. West Texas Intermediate crude 61.10 a barrel, up 1.7%. And Bitcoin ripping higher now by 3.6%. Bitcoin 82,757. Bank earnings fast and furious. Things kicked off this morning. JP Morgan Chase up 3.2%. Wells Fargo, though, heading the other direction after earnings, down 1.6%. Morgan Stanley up 0.6%, and BlackRock up by 2.5%. So again, recapping, the Dow, the S&P, and NASDAQ are all moving higher. Right now, the S&P is up by 1.3%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, David Gura and Kaylee Lines.
Charlie, thank you very much for that update. You mentioned those bank earnings, and I was listening to what we heard from the CEOs of those companies, Charlie Scharf in particular, and Jamie Dimon of JP Morgan. And there was a question from Mike Mayo, the longtime bank analyst, to Jamie Dimon about whether he's worried that JP Morgan be caught in the crosshairs of this trade war. And Jamie Dimon said, yes, he thinks that's likely, but the bank is prepared for that if it does happen. And I think that kind of encapsulates the rhetoric that we've heard from Jamie Dimon over the course of this week, sounding the alarm about the long-term prospects of the situation that we're in here, but kind of reaffirming confidence in the institution that he leads in light of all of that. But
20 EMA has proven to be support.
In the financial sector as well, as they kind of wait and see, as we all are, for what happens next, Kaylee.
Yeah, certainly we've seen a lot of that uncertainty borne out this week. We also have seen it borne out in consumer sentiment. We've been tracking the UMich consumer sentiment readings incredibly closely, and remarkable to see it dropping today to 50.8. Not only did that miss the average estimate, it's the lowest we've seen in some years, and inflation expectations ratcheting dramatically higher to the highest levels actually we've seen in decades really gives us some insight as to how all of this uncertainty around tariff policy is actually impacting the consumer engine of the U.S. economy. And that is where we begin with Mike McKee, who's, of course, Bloomberg's international economics and policy correspondent. So you put together the UMich data with the incredible oscillations we have seen in terms of policy and resulting market activity this week. Mike, doesn't exactly paint the prettiest picture.
It does not. I got to turn on the button. The Chinese say the Trump policy is a joke, but Americans aren't laughing at this point. The expectations index for the economy down the road in about 6 months fell to 47.2. That suggests people think we're going to have a recession, and that is the lowest since 1980. So we are looking at some really bad numbers here for overall consumer sentiment. And according to Joanne Shu, she's the director of surveys at the University of Michigan, everything's down. People think that the odds of losing a job are much higher. The odds of finding a job are much lower. The odds of inflation are much higher, as you mentioned, and the outlook for business is terrible. The outlook for their own finances is terrible. There is a lot of fear among Americans out there, and the question is, do they follow through on that? You know, we saw a lot of buying ahead of tariffs, and people told the Michigan survey takers they were going to do that. Now, Joanne Shu says that people are saying it's probably too late. So does this mean they all stop spending and a recession becomes inevitable?
Mike, I want to ask you how you look at these data and you report on them. I don't expect you to defend them, but I can give you a taste of what I think the rhetoric's going to be like surrounding all of this. And we've heard it over the last few times this index has come out. Complaints that it's perhaps leans one way in a partisan fashion. More people on the Democratic side are surveyed than on the Republican side, et cetera, et cetera. How do you see this in kind of the panoply of data, yes, that we got this week? You can complement it with the hard data that we got on inflation, but even more broadly still, if
ASM, I just saw your response, Ozzy.
how much importance do I give these?
I'm a little worried about that fair value gap, and I'm worried about this right here.
Well, it's kind of two different questions.
We got the fair value gap and a historic trend line.
And you asked the question, what are consumers?
So I'm not going to do anything into that. I'm going to wait. I'm just going to sit here and wait for my full rotation. I want the slow stochastic to finally roll over under the 20 and pull that price like down into here, like the 50. I'm going to wait for that. And if it doesn't come, I'm okay with that. But I'm kind of waiting for this. Kind of waiting for this zone and then a confirmation and then take the long all the way back into here. I think that's what I'm going to wait for. Now that may never come like that, but I don't see any point in going long from here to here. We would have to confirm above that and head higher for me. But the long is over for me. I'm not going to do it. Well, the long here is over. I need a pullback. And I need to have it confirmed. But I want a full rotation of the stochastics to feel good about it. I'm just too close to my. I don't want to like take a hat, I want to make sure that it's as high as percentage as I can. I just want to be profit.
Republicans who were approving of all of this,
that's what I'm thinking.
99% are now down to about 71%.
If you got that.
So even Republicans.
But because up above here, what do we got? Not a lot.
The economy.
Okay. So if we blow this zone out, this fair value gap out here.
This is not a political poll that's going to result in anybody getting elected or not, but it does suggest that people are concerned no matter their political party.
Well, I wonder what else the Fed is looking at or will have caught its attention this week, Mike, specifically when it comes to the activity we've seen in the bond market. As we mentioned and Charlie ran us through, we're off the session high on the 10-year yield. We're now only up 5 basis points at 447, but there was a point today where we were looking at the worst weekly sell-off move higher in yields going back to 2019 when problems in the repo market with the actual plumbing caused the Fed to intervene. Do we have a sense of how close we might be, or are we on the precipice of that kind of moment again?
Sorry about that.
No, it doesn't.
So I would want to confirm above this.
A lot of Fed officials, myself,
and then go into this resistance line or this fair value gap for a long at this point. Oh, we're getting a pullback now.
What we're hearing is that they're monitoring this very.
Let's see how far this one goes.
With all kinds of people in the markets. And while the moves have been extreme,
so I would like to see the 50 EMA and then a
of
confirmation. See, we're starting to get that rollover now.
Trade. It's that people at this point are shunning U.S.
All right, I got to make a call. I'll be right back.
There's not as much worry as some might have you think about the basis trade unwinding. There's a feeling that people who had been long leverage have had time to deleverage, so it doesn't look like a hard stop coming. That could always change, of course, but as long as the market is functioning, the Fed is not going to worry about it, and that'll be the big question and the thing to follow. Do watch bid-ask spreads. If they blow out, you've got a real problem if nobody wants to trade. But if the market is functioning, then, as I've said before about the equity markets, doesn't care if you lose money.
I keep coming to this question of whether we're seeing decoupling in its beginning stage or where we are in that process. And I wanted to ask you, Mike, just about the kind of voracious appetite China has had for U.S. Treasuries over the last many years, and sort of what happens if that seizes up, if China begins to turn away from them or sell them. Just help us kind of play out what that would look like here in the global market.
Well, obviously, if China were to dump bonds, that would be a major problem and would cause major dislocations just because they own so many of them. But at the same time, if they started dumping bonds, they're going to lose a lot of money because, of course, the price will just collapse the more they put into the market. So there's a lot of skepticism that the Chinese would do this. Now, they can buy a lot less. The problem we have in tracking that is that what we're looking at is official government purchases or purchases through official channels, and that has flattened out. But Chinese state-owned banks and other state-owned enterprises have apparently been absorbing a lot of the U.S. securities that the central bank used to, and so they're still holding an awful lot, which is one reason they can keep their currency at about the same level. And so it's going to be hard to know unless they really go into the market, and that, of course, would destabilize everybody, but also them.
Well, I'm glad you mentioned Chinese currency because I want to focus on what's happening in the currency markets as well. Not trying to make you an FX analyst, Mike, but you would think that higher tariff rates, at least traditionally economic theory would tell you, that might lead to a stronger dollar. And yet that is exactly the opposite of what we have seen this week. The dollar today weaker against everything in G10. And I wonder what we should make of that weakness and whether that is actually something that is likely to be persistent.
Regulators.
It's really hard to
Regulate any
say.
stealing of his
You're
property.
right.
We're
Theory would
damn
tell you
good, too.
that we'd get a stronger
But you
dollar
can't be
out
any
of
geek
tariffs.
off the
Now,
street.
Tariffs have only
Gotta be
just
handy with the
aligned,
steel,
so
if you know what I mean. Earn
we
your
can
keep.
see what the currency demand, the demand for dollars is, pay those. But if the U.S. stops trading with China, which at these tariff levels there would be virtually no trade, then there's no reason for the dollar to strengthen because Chinese wouldn't need dollars. But if this continues, it could be that we're seeing people start to move away from U.S. assets. And when you need, what we have done is we buy stuff from other countries, send them our dollars, and those countries buy treasuries. Well, maybe they're going to buy German bunds instead, or French oats, something like that. So we could see that having an impact on the dollar as well. It's a little hard to tell how this is going to play out in the long run, but it's definitely not going by the book, and it is worrying some people. There's always the question about whether the U.S. is going to lose its reserve status. I don't think that's going to happen because there's really nobody who could pick it up. But we could certainly see a lot less dollar usage if countries really want to do that.
Michael McKee on this Friday afternoon. Mike, thank you very much. Mike McKee, of course, our chief international economics and policy correspondent here at Bloomberg News, kind of giving us the tour here, yes, of how the Fed is thinking through all of this, what we're seeing in the currency markets, in the bond markets as well, and giving us the latest sort of assessment of that sentiment survey from the University of Michigan that we got this morning. I want to turn now to Joe Livornia, who's a managing director and chief economist at SMBC Nikko Securities. He was former special assistant to the president, chief economist at the National Economic Council during President Trump's first term. Joe, great to have you with us. And I'd love to start just by asking you sort of how you see these next few months proceeding here. You've been in the room with the president as he's thought about trade, no doubt thought aloud about trade and sort of how he sees policy. What do you expect is going to happen here, aside from hopefully, I imagine, the president thinking the phone call, the phone ringing? How does he approach these deals? What's he looking for in terms of just the mechanics?
Hey, Joseph, thank you, man.
We had those.
I appreciate that.
As you know, April 2nd, and I was pretty confident that
Got to be handy with your entries, if you know what I mean. You got to earn your keep around here.
So we got to the 9th, and then when the 9th, of course,
Forecast traders. I don't know. I got to make my own song for that. I appreciate that, my friend. You trade futures? Kind of eat my lunch, so.
These tariffs that were very high, very aggressive, and then in the process that was bringing people to the table, and now
this is a 20 EMA you're looking at.
to me, the maximal amount.
It's
of
been
uncertainty
respecting
since
it, but
tariffs
I'm
was
kind of
early
looking
this
for a
week when
bigger
that announcement
pullback
occurred,
before I go
and
long.
now we could just go forward. And my guess is the president is going to make deals with various countries, and that will be to the U.S. advantage, and we're going to kind of clean up this uncertainty.
If
And
you
then
got
we'll
any
move on
questions on the
to
chart,
next thing,
Joseph,
which
just
is
shoot them in the
budget
thing. I'll
inputs that,
go
you know,
over
it's going
whatever
to
you're wondering.
how it'll impact or help the economy. But I do think this tariff uncertainty will pass. I think the market has, I understand why the market's reacted the way it has. I don't expect it to continue. I do expect volatility to subside as progress in trade negotiation moves forward.
But it's not just about the market activity, right, Joe? It's also about consumer and business activity, who, while they're waiting for clarity to see what the outcome is 90 days from now, they still have to make decisions with their own purchasing power now, decide what they're doing in terms of inventories, where they're sourcing the supply, what purchases they're making, how much damage realistically can be done, even if you think ultimately we end up at a better place at the end of the day, or at the end of this period, I should say. We still have the whole period to get through.
No, absolutely. And this uncertainty, even as it relates to tax policy and the budget, is also a factor. Right now, it's been a very relatively short period of time. If we're looking at the labor markets, the jobless
Oh, hey,
numbers are
yeah,
low. If we're
no
looking at the
problem, man.
consumer spending
I
side, the
appreciate
change
following.
numbers look pretty good.
But you're looking at the
If in
ES
the next
futures
week or
right now. This is the
there is
S&P
progress on that
500
trade, I don't
futures
expect this
contract.
uncertainty to really meaningfully have
Oh,
any long
press
lasting
briefing.
appreciable effect on the economy. The economy is very resilient.
All right, be careful. No
But
trades.
come back.
Hold on, let me
If
go
we go
find it.
90 days or we're day 89,
I've
and
been
there's still
watching
no
the news. I've
progress
been
made, yes,
busy. Hold on.
absolutely. That'll be a problem, but I don't expect
There
that
she
to be
is.
the case. I do
Let me
think
turn
we're
it
going to
on.
be, my hunch and guess, gut tells me we're
She
going
is
to get some good news
spicy.
somewhat soon.
More than 75 countries.
Joe, about the kind of inherent inflation
that have exploited America and hurt our.
All right, let's see what happens.
The phones have been ringing off the hook to make deals, and these countries.
She's talking about the tariffs.
And as a result, they were rewarded with a 90-day pause and substantially lower reciprocal tariff rates during this period, so potential solutions can be achieved. Past presidents just willingly accepted the failed status quo on trade that ripped off our workers and our companies. But that's not who this president is. He creates his own leverage in negotiations.
You want to be careful on your entries right now. It could pound 30 points in any direction.
On another matter, the deadline
She lets some news slip.
Alien Registration Act is today. All foreign nationals present in the United States longer than 30 days must register with the federal government. Failure to comply with this is a crime, punishable by fines, imprisonment, or both. As President Secretary Noam both said, if you register and you leave now and choose to self-deport, you may have the opportunity to return later legally. But if not, you will be arrested, fined, deported, never to return to our country again. The Trump administration will continue to enforce our nation's immigration laws. We will not pick and choose which laws to enforce. We must know who is in our country for the safety and the security of our homeland and for all American citizens. I also have a note from the First Lady to share with you on this Friday. On Tuesday this week, First Lady Melania Trump celebrated the advancement of the Take It Down Act in the House Energy and Commerce Committee. The important legislation passed the committee with bipartisan support, and as you may remember, the President talked about this bill in his address to a joint session of Congress last month. The First Lady remains dedicated to her championing child well-being, ensuring that every young person can thrive, and, of course, championing her Be Best agenda. We urge Congress to swiftly pass this important legislation. Here in our new media seat today, we have Jordan Berman. Jordan is a social media content creator and influencer and a lawyer who grew up following breaking down the news from a neutral perspective. Jordan is the host of her own podcast called Unbiased Politics, where she dissects the top stories from the week from a legal perspective. Jordan focuses on bringing back real journalism from a nonpartisan perspective and has mastered explaining complex legal decisions to a mass audience in the short-form context. Her two biggest platforms are TikTok and Instagram, where she has roughly 500,000 followers on each. With that, please kick us off, Jordan.
As you know, yesterday the House passed the SAVE Act, and many married women, soon-to-be married women, are concerned that the new voter ID requirements may inhibit their access to the polls. What assurances can you give women voters in America to ease their concerns?
Sure. Well, the SAVE Act, as you mentioned, was passed by the House yesterday. This is the Safeguard American Voter Eligibility Act. I believe I'm getting that correct. And this act is a common sense measure. It would require proof of citizenship for voting in our elections. The Democrats have been fear-mongering about this bill, have been saying that married women, if their name has changed, they didn't change it on their identification, would not be able to vote. That is complete fallacy. There are outlined in the bill about how to avoid that. The president very much supports a common sense solution to ensuring that only citizens can engage in our elections. This is critical to improving the integrity of our elections and also the trust that American citizens need to have in our electoral process. So the president supports this bill, and that is a myth that has been proven wrong by the text of this bill. And I believe some of the co-sponsors of the bill have been very vocal in addressing that. And certainly, I myself, as a married woman, would not stand before this podium if the president did not support such a common sense measure.
Thank you. For my next question, I actually want to give a voice to the American people. I sourced a question from one of my listeners. Her name is Bryn. She is from Oregon. And she asked, what, if any, plans do you have, the administration, for the money that will be generated by tariffs imposed on foreign goods? How will the administration facilitate the development of American industries when many critical components, labor, parts, etc., are much cheaper and more feasible from foreign entities?
It's a great question from your listener, and I want to thank her for submitting it to you to ask. That's the part of the new media seat is so that everyday Americans across the country have a voice in this room. So thank you again for being here. Thanks for the question. The president's point about his trade and tariff agenda is to bolster our manufacturing industries here in our country, to bring down the cost of living here in our country, and to ensure that we are maintaining critical supply chains here in America. We cannot be dependent on countries like China if we want this country to be strong and wealthy. So the president wants to restore wealth to America by shoring up these jobs here at home, which will result in good paying jobs and higher wages for the American public. And so Americans should trust in that process. He effectively implemented tariffs in his first term while driving down the cost of living in this country, and that's what he's focused on doing again. Thank you.
As a follow-up question, could I just ask, are there any specific ideas that the administration has as to what that revenue, specific tariff revenue, will be used for?
Yes, to the heart of your question, the president has spoke about the trillions of dollars that he expects in revenue from tariffs and how we can use it to pay down our debt and to ensure that we are no longer faced with a crippling national debt in the trillions that is going to bankrupt our nation for future generations. So that money coming back home will make America in the green rather than in the red, which any small business owner across the country, I believe, can appreciate.
Thank you so much.
Thank you. Kelly.
Tomorrow there will be negotiations between the United States and Oman. What are the president's chief goals for that, and is he satisfied with how Iran is responding to this? They don't want direct face-to-face negotiations, instead sort of old-school shuttle diplomacy where they're in separate rooms and messages are...
Okay, we almost got a full pullback.
Comfortable with the arrangement there, and what is the chief objective?
Well, I have spoken both to the president and also his national security team who will be engaged in these discussions. These will be direct talks with the Iranians, and I want to make that very clear. I also spoke to the president just last night about his goal when it comes to Iran, and he has reiterated repeatedly to all of you publicly and also privately to his team here at the White House, his ultimate goal and the ultimate objective is to ensure that Iran can never obtain a nuclear weapon. The president believes in diplomacy, direct talks, talking directly in the same room in order to achieve that goal. But he's made it very clear to the Iranians, and his national security team will as well, that all options are on the table, and Iran has a choice to make. You can agree to President Trump's demand, or there will be all hell to pay. And that's how the president feels. He feels very strongly about it.
And can you update us on Mr. Witkoff in Russia and what's happening with direct communications with Vladimir Putin?
I can confirm that Mr. Witkoff is in Russia to have direct communications with the Kremlin and with Vladimir Putin. This is another step in the negotiating process towards a ceasefire and an ultimate peace deal in Russia and Ukraine. As these negotiations are ongoing, I obviously will not get ahead of the president or his team, but I think the president has been quite clear that he's been continually frustrated with both sides of this conflict, and he wants to see this fighting end. He wants the war to end. We believe we have leverage in negotiating a deal, to a peace deal, and we're going to use that leverage, and the president is determined to see this through.
Thanks, Caroline. President Trump has said China wants to make a deal on tariffs. The president says he has a great relationship with Chinese President Xi. He's willing to speak with him directly. Why doesn't the president just pick up the phone and get this ball going?
All of the things the president just said are true. The president, as I said from the podium just a few days ago when I was up here, would be gracious if China intends to make a deal with the United States. If China continues to retaliate, it's not good for China. The United States of America is the strongest, best economy in the world, as evidenced by the more than 75 countries who have called the administration immediately to cut good deals. So the president wants to do what's right for the American people. He wants to see fair trade practices around the globe, and that's his intention and his goal.
So is he waiting for China to make the first move here?
I'm not going to comment on communications that are happening or may not be happening, or either way. We'll leave it to our national security team to get these discussions underway. And as always, in the effort of transparency, we will provide updates moving forward. But the president has made it very clear he's open to a deal with China.
Why is he optimistic that China's going to make a deal or wants to make a deal? If they're not talking, where's that optimism come from?
He's optimistic.
Hey,
Sean.
why would any of our allies work with us to isolate China in a trade war if we're treating friend and foe alike?
You'll have to talk to our allies who are reaching out to us. The phones are ringing off of the hooks. They've made it very clear they need the United States of America. They need our markets. They need our consumer base. You saw Prime Minister Benjamin Netanyahu in the Oval Office with the president saying that he was going to bring down all of their monetary tariffs and their non-monetary tariff trade barriers as well. We've heard from South Korea. We've heard from Japan. The president has spoken to Vietnam. We have Italy coming to the White House next week. There's a reason for that, Sean, and it's because they need the United States of America and our business model and our markets to survive, and the president is using that leverage to our advantage. Michael.
Hey, thank you, Caroline. Two-part question on China. Beijing says it will simply ignore any further tariff escalations from the U.S. Does President Trump see this as China backing down? And as a follow-up to that, what do you say to people like Shark Tank's Kevin O'Leary who say, you guys simply haven't tariffed China enough?
Look, the tariff rate on China remains where it was yesterday at the 145% level. The president made it very clear when the United States is punched, he will punch back harder. And he hopes to make a deal that benefits the American worker and our companies that have been ripped off for far too long. And he's finally taking bold and courageous action to do that. You know, taking on China is, in the terms of trade and tariffs, is something that both Democrats and Republicans alike have spoken about for decades. President Trump is finally doing it.
Caroline, real quick, the president of El Salvador is coming to the White House on Monday. Does President Trump want him to bring Kilmar Abrego Garcia with him?
The Supreme Court made their ruling last night very clear that it's the administration's responsibility to facilitate the return, not to effectuate the return. I believe the Department
Oh, sorry guys, I don't know what happened. I'm getting it back. Give me a second. I gotta go in and find it. There it is.
In Turkey, any plans?
I don't have any details about the president's overseas trip other than to say he was surely going to Saudi Arabia. And there could be more countries as part of that trip.
But the chart, I'd be real careful. This looks like that's going to go into a short. I was originally looking at, I can't even get in here. One sec. That zone I drew underneath the 50, I don't think that's really valid anymore. I think we're going into the short. If we go into the short, I don't like shorting straight into the VWAP. So while she's on the stage, it's kind of a wait and see for me. Maybe we can get something good near the end of the day.
As I have said, the president is undergoing his long-scheduled physical. It's a yearly physical that every president receives, and we will provide an update on that by the president's position as soon as we possibly can.
And about the former president and transparency regarding his health.
Well, I can tell you there was certainly a lack of transparency from the former president, from the entire former administration, and frankly, a lot of people in this room when it came to the health and the competence of the former president of the United States, Joe Biden. There was one of the greatest cover-ups and frankly political scandals this nation has ever seen. It's been unraveled in some recent books that are being written by journalists who engage stage did that cover up and scandal, which is quite ironic. But this president is clearly committed to transparency. You in this room see him and hear from him on a daily basis. You in this room know from covering him, it's hard to keep up with him. He is a machine working around the clock every single day. And the physician, after today's physical, will provide an update on the report in the effort of transparency.
If I could ask about tariffs, there have been big swings this week in the Treasury bond yields. There's a theory that it might be because of China dumping these as leverage, driving up costs for U.S. loans like mortgages. Does the White House have evidence that this is in fact a result of Chinese dumping? And if so, is there a message on that?
Not to my knowledge, but I would check in with the Treasury Department on that. I can tell you I know our Secretary of Treasury, Scott Bessent, is keeping a very close eye on the bond market. He spoke about it at the White House this week, and I know he's keeping his eyes on it day to day. Ed.
Thanks. Thank you, Carolyn. So the administration, I have an administration source who's telling me that we're weeks away from the first deal with a country over tariffs. Where is the administration? How soon can we see that? And what country is that first one?
I won't reveal or get ahead of our trade team as these negotiations are obviously ongoing, but I can tell you very good progress has been made. Jameson Greer was on television this morning, and I spoke to him, and he confirmed that more than 15 offers are already on the table, which is remarkable in just a mere matter of days. And as I said earlier, we've heard from more than 75 countries around the world. This is a team effort. The president has a team of great, brilliant advisors who have been with him every step of the way, and all of them will be divvying up the workload. And I just want to give the president and his trade team credit for taking this on. This is a massive undertaking. There's no doubt about it. We take it very seriously. The president is determined to renegotiate global trade on behalf of American workers. And again, you've seen people on both sides of the aisles calling for this for years.
Okay, so this is about to go into a full-on short. Once the control EMAs, you see the solid green. Once that crosses below the solid orange, then we're looking at going short. So we need to be careful here.
What would the president need to see in order to extend that?
We could blow this fair value gap out. So, like if we bounce off this trend line inside the fair value gap, if we work that and kind of confirm to go higher, that would be a nice long, right before this zone, right up here at a double top. But we kind of got to wait. We got a lot to, we got to confirm, and we got to see the stochastic start to roll up. So I might consider, I want to be careful of the drop down to the 200 EMA, which is right here. We kind of got a trend line down here. But if we can confirm and gain a little strength, then that might be a good long into this gap up here. So I'm going to wait another candle or two. I'm not sold yet.
So I'm hoping somebody checked in on that, as I'm hoping it doesn't run up here and distract me. That would be a good way for all of you to distract me, actually. Have a mouse come run up here. So I'll get an answer for you on that, out of respect for our good friend Peter. Jeff.
Why is American consumer confidence so low?
Look, I think there's a great optimism in this economy, great optimism for the American people, a lot of reason for people to feel optimistic. The president is, as I just said, trying to renegotiate the global trade agenda that has ripped off the American people for far too long. As he said, this is going to be a period of transition. He wants consumers to trust in him, and they should trust in him. Look at what he did in his first term. And I just want to reiterate all of the reasons to be confident since you asked, Jeff. For those watching at home, yesterday the CPI report, inflation declined massively. Consumer prices are dropping for the first time in years. Energy prices are down. In fact, oil prices are down 20% since this president took office. Wholesale prices fell again. There have been trillions of dollars in investments into this country. Every day, the president is signing executive orders to cut regulation, especially when it comes to Environmental Protection Agency, our energy industry. That's going to unleash the economic boom in this country that we saw in the president's first term. So trust in President Trump. He knows what he's doing. This is a proven economic formula.
What is he asking of Americans at this time? He talked about transition costs, transition problems. Is he asking something specific for Americans to do?
No, I think the president is asking for Americans trust in Trump, as I just said, trust in his economic agenda and formula. It's a proven formula that works. And by the way, clearly American people do in fact trust him because they did just overwhelmingly elect him to this office. Jennifer.
Is he going, I'm asking about the physical, is he undergoing any general anesthesia? And can you outline any of the other tests that he's doing today?
He is not. He is undergoing quite a few tests, imaging. Again, it's a it's a yearly physical, so there's quite a lot that goes into it to make sure the president is accomplishing all of his goals, and we will provide a readout of that as soon as we can.
And will you be committed to releasing all of the results, as many of the results as possible?
Of course, yes. The president's physician will do that. I spoke with him this morning.
Sure. Will you guys also consider releasing the president's fitness plan? He actually looks healthier than ever before. Healthier than he did 8 years ago, and I'm sure everybody in this room could agree. Is he working out with Bobby Kennedy? And is he eating less McDonald's?
I can confirm the president is in very good shape, as you see, on a near daily basis here. And in that vein, thank God it's Friday. It's been a very long and busy week here at the White House. We will see you all on Monday, and we will release the results of that report as soon as we can. Have a great weekend, everybody. Thank you.
Have a great week.
Order submitted.
effectiveness of all of this. I'm curious sort of how you're looking at this. John Williams is speaking at the Puerto Rico Chamber of Commerce right now. He says that his expectation is that these tariffs are going to boost inflation this year to 3.5–4%. We've heard from the president's economic advisors during this term a sort of more greatly reduced sense of the inflationary impact this is going to have. What's yours? How do you marry your kind of forecast with what I just mentioned there, what we heard from President Williams of the New York Fed and the White House team today?
We've been of the view that energy prices will come down. That'll be a very powerful offset, especially to any what I think is still likely to be a modest impact from tariffs. So, for example, if you had a 10% across the board tariff, 60% on China, as the president had proposed on the campaign trail, that doesn't even lift in price level terms your CPI more than a point. And of course, it'd be offsets from the currency and offsets from the margins. But on the inflation side, the fact that oil is down at 60 is very encouraging. That might have been due to the administration pushing the Saudis in particular to increase oil production. That will provide an offset. So, I mean, the inflation outlook right now is still, I'm still uncertain, it's still sticky. The Fed is, I think, looking too much in the rearview mirror on this stuff, because if you look at the markets right now, they're telling you, looking at break evens, there's no inflation problem. And that's also, I think, one of the reasons why the market is behaving, that risk assets have not behaved as well today, is they've listened to Fed commentary from President Williams and think that the Fed might be making a mistake by harping too much on the inflation side and less on the potential growth side, meaning the economy could be slowing. That's what more investors are worried about right now than inflation.
Well, have you changed your own expectation, Joe, for the kinds or the scale of Fed rate cuts we could see this year, the number of them?
No, we've actually been pretty stable. I mean, we marked our growth down based on what will be the weak Q1. We've got GDP around 1.5%, and with most of that weakness concentrated in the first quarter. We did raise our inflation forecast a bit, but not massively. And we kept the Fed basically not cutting until the second half of the year, which is where we've been for a while. I don't think the Fed needs to cut in the short term. I don't think the Fed should cut in the short term. And therefore, we see no change. You've got two cuts, one 25 in September, another 25 in December.
I want to ask you about dollar weakness, and Kayleigh just a moment ago kind of running through a number of the pairs indicating we're seeing softness in the dollar today. And again, drawing on your experience during the first term, I wonder sort of what insight you can give us into the way in which the president looks at the strength of the dollar relative to other currencies. Of course, there's this conversation maybe swirling in the background still about this prospective Mar-a-Lago Accord, getting folks to the table there. It seems like in this current environment with the lack of communication between the U.S. and China, that would be a difficult thing to pull off, to say the least. But what's your sense of the outlook here from Washington?
All right. Sorry, guys. I had a call. I missed that long, didn't I?
So
I missed the long.
If you look at the
I should have just marketed in.
Broad trade-weighted dollar, it's close to a 40-year
Trying to
high.
be too
So the
careful.
notion that the dollar is
I missed that
expensive,
motherfucker. SM, did you get a piece of that, man? Because that was pretty clear right off that 50. Look, we had two candles we could have got in on that with.
very narrow, nominal
And then you had the 20 you could have got in on.
Over time, I could see the dollar
Did you get any of
perhaps
that?
softening a bit,
No.
but for good reasons.
I know.
Things like the Mar-a-Lago
Pretty fucking clear though, wasn't it? That was the best call we've had all day.
privy to those discussions.
I got in too late.
The president's love of
But my rule is I don't take a trade while I'm talking on the phone. So I was like, all right, I'm going to be conservative. If it gets me, I'm okay, but I'm not going to chase it because I'm on the phone.
Right now, we're clearly in a very
Because you watched me blow an account up while I was on the phone.
and I wouldn't be surprised if some of this selling just naturally burns itself out, especially
I just can't
as
shake
we
this
get
real
towards
job
Saturday.
stuff
Look,
until-
the administration with its trading partners is making some progress.
Till I got
and
this a little
ultimately, my
further
base
along.
case for the economy, because I'm still an optimist, is that there will be a deal reached with China as it's in both countries' best interest. And I think the Chinese will want to negotiate, and the president, having had some successes with other countries that will precede those actions, will basically push China to do so.
I want to ask you about the bond market as well, though.
I'm
Joe,
checking to see
because
if any news
obviously that
drops
is-
since.
We understand what caught the president's attention.
Okay, so we
enough
got
that
Fed's
he was
calling-
actually inspired to do a
Fed
little bit of a policy
absolutely
shift with this
ready
move
to
to,
help
pause
stabilize
on
market
reciprocal
if
tariff
needed.
rates. When you see the kind of activity we've
Okay,
seen in the
so
bond
now
market,
they're talking about, well, you know what, maybe we will reduce rates.
mostly to this back and
I was
forth
I was
tariff
trying to. I put a buy order in, but I didn't.
whether or not U.S. U.S. Treasuries are
But
seeing
it didn't come down. I had a buy order. God damn, the screen is locked. It doesn't like YouTube on the
United States
ES.
is still grappling with, knowing
Hold-
we have a debt
hold
ceiling
on.
fight
So I put
potentially
in.
ahead of us, that we're going to be looking at a tax package that could
Oh,
increase the deficit.
you were talking to
There's not
SM.
enough,
Me,
spending cuts to
I put in a
offset it,
buy
which is not
order.
factoring into
If it would have came down and filled me, I would have went long. But it pretty much hit our zone.
I don't know if I can remember everything, but
Dang, this
on
is
the 90
pissing me
days,
off, man.
Just
there was
explain
a
the bond
story that-
market to us, Joe.
Okay, so I think so. On why did the administration
My computer must be
make
using
a
more
very
memory
quick
than
pivot? And
usual.
to me, what this is my own 2 cents. I'm just
Maybe I
trying to
gotta
figure this
reset
out,
my
piece
router.
the puzzle together. But Kevin Hassett was rumored to have said a 90-day extension.
Yeah,
on
and
Friday.
I
That was well before
I
the
have a
bond
rule
market
because I
started
work
sharply.
full time
And then
from
Monday
home
morning,
while I
the bond
do
market,
the
the 10-year
stream.
was at 385.
So my
And then
rule
since
is
then,
like,
things
you know,
have
SM was doing his
I think
homework,
once
but
there
my
was
rule
threat
is I don't take trades while I'm on the phone with a client or a customer or whatever,
negotiations starting.
working a deal,
My guess is
because
the
I'm in
administration
sales.
said there's no point at
Because
this
then,
point in not suspending
what
for
happens
those countries that
is
want
I
to
don't talk
negotiate
through the
with us
trade
now.
and I
What are
don't.
we gaining by
I just
waiting? Now,
put an entry in and
I
then
don't
I
think it
do
was the bond
stupid
market. I don't
things.
think it was necessarily the equity
And
market. I think it was just a whole
so
array of
that's my rule.
factors. What are we getting? What are we benefiting from? If we're having a conversation, let's try to provide some clarity by having that
I'm waiting for the
negotiation
memory
now.
here to
In terms of the budget,
catch up because
what
I
I'm
can't
interested in
get
seeing
I can't
is,
get on
does
this
the
chart
Senate
with my mouse.
parliamentarian,
This is
how
pissing me off.
does she attribute the scoring? Are we going to go with current policy, or are we going to go to current law? Because those deficit numbers the CBO has,
Yeah.
we could debate what the number will be, but the numbers they have on paper simply do not make
Yeah,
any
I'm with
sense
you,
because the
SM. I
policy has
really
been in
am.
place for over 7
I'm
years.
with you,
that has
man.
given us revenue share of GDP.
I'm blowing up
China
a
was
funded
somewhat
account a
dramatic,
week over
is
here,
not going
and
to
it's just
create
all
by
because of
itself,
stupidity. I'm just not
a shortage
following
of
the
revenue
rules
and
I've
larger
written down a
deficits.
million times.
What will
But
be is if we have
but
current
if I
revenue
was
sessions,
not
we
on
go
the
into it.
phone and we
And
were
then what happens,
talking
of course, on
through
the
the
spending
candles
side,
and the trade,
that's
I
what's
would
gonna
I would
do.
have
I
made
have
sure
no
I got
agreement
in
on
on
the
that.
spending
I
side.
know I
I'm
would have.
hoping we could find some common ground and
But
make
I
some
can't be
cuts,
doing three
but,
other
you know, that
things
we
while
don't
I
know,
enter
and
the
we
trade.
won't
It's
know
just
anything until Congress comes
it,
back in 2
it's
weeks following the
you
Easter
know
holiday.
you gotta be thinking about what you're doing.
All right, Joe Lavorgna answering my multi-part question. We appreciate it,
Ably
as always.
doing so.
Former Special
I wonder if
Assistant
I
to the
should just
President,
get
Chief
out of
Economist for
Ninja
the
Trader.
NEC in the first Trump White House, now Chief Economist for SMBC Nikko Securities America. Always great to have you here
Restarted.
on Bloomberg TV and radio to help us make sense of the activity we have seen in financial markets this week across asset
give it a
classes, just
minute.
as Charlie Pellet does for us each and every day here on Balance of Power. We'll head to him now for
Watch
Chicago
the
markets
NQ
in
for a
New York.
minute.
Hey, Charlie.
Hi, thank you very much, Kaylee Lines. We're looking at a lot of green on this Friday.
That
We are on
ES
track
chart
for a
is
winning
being
week here with the
difficult.
S&P on the week, up by 4.8%.
Let's see how that trade looks on the end. This is the NQ, which is the NASDAQ
About 9%. But here's where we
futures
stand now on this
contract.
Friday. S&P up 58,
Joseph.
gain of 1.1%, 53.26.
See
where
how
we
that
stand
trade
now
looked
on
here.
the S&P.
I haven't been
The Dow
trading the
Jones
NQ
Industrial
lately
Average
because
up
it's too volatile. It
378,
moves
up
so
by 9/10
fast
of 1%.
that
The
it'll take
Nasdaq
your
is
stop
up
loss rate out on your
181
ATM
points. That is a
strategy.
gain of 1.1%.
Like
The
in
Nasdaq
one wick,
100
in
index up
one
1%.
wick,
The Russell
you know, it'll
2000
move
index of
15,
small
20
cap
points, and you
shares
just
gaining now by
you can't have that kind of static
0.1%.
when you're trading
The
margin.
10-year yield at 4.47% with a 2-year that's
See, it was
currently
pretty.
yielding
See, it hit the fair value gap here,
Spot gold up
and then
$15
rejected it.
the ounce, 32.26,
This
up
was another good call.
0.6%.
You
And
could have
West
got in
Texas
on either one of
Intermediate
these
up
candles here and
1.7%.
got the run.
61.07 for a barrel of WTI. Bitcoin surging 3.8% now at 82,900 on Bitcoin.
There, now the
Tesla
ES is
has
on it.
stopped taking orders in China for Model S sedans and Model X SUVs, both of which are imported from the U.S. after the countries raised tariffs on one another in an escalating trade war. Tesla shares today on a day when the rest of the market is advancing. Tesla is down by 2.4%. And the retailer Five Below is asking vendors to turn away products waiting for shipment in China.
You did some charting,
before they set off for the
and if I
US.
played it out, I would have. Yeah.
Reviewed by Bloomberg, shares of Five
Are you still
Below
playing with that
down
indicator you were talking about, SM?
So again,
That sounded
recapping
pretty
equities
interesting.
higher, the Dow, the S&P,
How
Nasdaq
it worked.
solidly in the green, on track for a winning week, a 1% advance right now on the S&P 500 index. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Kaylee Lines and David Gura.
Charlie, thank you very much. David Gura here in for Joe Matthew, and I just want to do some market geography here, look at what's driving markets. Obviously, it's what's happening in Washington, the level of uncertainty that we've seen over the course of the week.
I can only paper trade it because I don't want to spend to get real. Okay, yeah. Yeah. I get it.
Watching what's going on in Ann Arbor, Michigan, where the University of Michigan does its survey of consumer sentiment. We got
The fact that you can trade it all
the lowest it's been, second lowest it's been in history.
on a limited budget is amazing. That's why I like prop firms, man. You don't have to have a lot of money to be able to get good and get funded and make payouts.
Consumers
And,
are,
you know,
are
and turn
in
it into
a
something.
very much a wait and see situation. They're really.
I wish
bracing for the
I
other
wish I
shoe
would
to
have found
drop
this when
in
I was way
terms of
younger, but I'm
trade
not even sure if
policy,
it really worked the same way.
leading to eventual price hikes and higher inflation.
I always wanted to trade the pit live.
So you have kind of
But
these
where I'm
competing
from, that
things
was
where
like
people are trying to beat future
that was only
price
on
increases.
TV. It was like a dream where I'm from.
So for more, we turn to our political panel as we consider what consumer sentiment means for political
What you
capital
talking about?
in Washington for the president and the party in power, which is
Yeah,
the
work
Republicans.
overtime.
Rick Davis is with us, Stone Court Capital partner and Republican strategist, half of our Bloomberg Politics contributors panel, the other being Jeannie Sheehan Zaino, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. For those of you
So
who
we're
don't know,
moving
here
up
on Bloomberg
1%
TV and
now?
Radio, you
We're in a
Mitch
buy?
sentiment is Rick Davis's favorite economic
Right now, there's
indicator.
too
We know
much
he's read
volume
this,
for me.
in its entirety today. And Rick,
The
I do
box is
wonder what
grayed
it's
out.
telling you about where the American
Yeah, I do
electorate
too.
is and whether or not they're still feeling
I wish I would have got
encouraged
in here,
with
man.
the
That was
president's
just look at this.
policy
3
priorities.
candles, perfect off the 50, and then it held to 20.
Obviously,
That was
some
like
of
the
it
perfect
depends
call,
upon the
man.
party that you
We had the
identify
fair
with.
value. Well,
Democrats
the fair
are
value
the
gaps
most
weren't there.
gloomy.
This one was there.
Independents have been becoming more and more gloomy.
We had everything.
But I think the real wake-up
Except for
call
I was on the
this
phone.
report out of Ann Arbor is that Republicans are getting gloomy. Their focus on the future has dimmed significantly. That they believe that inflation will continue to get worse, and by larger and larger numbers. And so that's the part that this administration needs to be paying attention to. David Gura asked me earlier what's going to be like for these members to go back home and hold a town hall. And really, I mean, it's the Republican members we're talking about because they're going to get the brunt of the negativity that is present in this consumer sentiment index. I mean, these are the people who go to town halls to call their members up and complain. And they're going to get very loud over the course of the next few months. And this report indicates a real slide for people of your own party if you're a Republican.
Rick, of course, this is sentiment data. It's based on anecdote, and I note here that survey was conducted between March 25th and April 8th, so before we had the pause that was put in place by the president. Since it's anecdotal, I'll turn to you, get your sense of how you're feeling about this. But do you think that it's likely to change now? Sentiment has improved because the pause has been put in place. I think that's what we're being told to believe here by this White House, that this pause kind of gives us some breathing room, gives the White House the latitude and time to broker some of these deals. The circumstances have notionally changed as a result. When you think about sentiment, how consumers and small businesses are looking at this moment, how much does that pause matter, I guess, is what I'm asking.
Yeah, I think the White House is trying to believe their own press. I mean, you've had a slide in consumer sentiment since December, right? I mean, it was at one of its peaks for the last 5 years on Election Day. And ever since then, there's been nothing but sort of trouble within consumer sentiment. It's down 30% since December. That is not something that gets then reversed by pausing what is expected to be additional tariffs being levied on these trading partners. So I think that unless there is a clear case being made by the White House for
I don't know what to do now. I missed my trade.
To these consumers as a result of this policy, then they're going to be troubled by the chaotic nature of the policy making. And that's by definition, right? We have to go through 70, 80, 90 negotiations to come out with what is going to be the plan. And consumers are not going to be very patient about that.
Well, of course, the administration also is telling consumers they just need to be patient for a little while longer until Donald Trump's tax package can be passed. Jeannie, tariffs are just one part of the economic picture that this White House is trying to paint. The other being, of course, his sweeping policy he'd like to see implemented, not just on extending his 2017 tax cuts, but implementing no tax on tips and Social Security and overtime, maybe deducting car interest from your taxes as well to offset the pain of auto tariffs. Are we going to find that patience is not that long in duration, that people aren't willing to wait to see that at year end or whenever that kicks in 2026? They need answers from the White House now?
I think so. You know, the danger of this consumer sentiment, it's very much like when I went to college, my dad said, you know, make sure you keep a 4.0 because once that GPA goes down, you'll never get it back up. And of course, I know, Kaylee, you and David know that full well, and you kept yours up. But that's the same thing with consumers. That's the same thing with consumer sentiment. Very, very hard for an administration to turn it around once it starts to dip. And the problem for the administration here is they say, you know, just hold on, the pain will be worth it, and Congress is going to come in and save the day. Well, number one, I'm not sure they've been watching Congress the last few years, but coming in and saving the day by passing legislation is not Congress's strong suit. And number two, to Rick's point, now you've got these people going to these town halls and hearing from Republicans. You know, I was listening earlier, your great conversation with Mike McKee, and David, you asked about the methodology of this survey, and I'm a social scientist. I love to talk about that. The problem for the president is even if you discount this, which they shouldn't, look at all the rest of the data. It is all coming in negative as far as Republicans' views of the economy under Donald Trump. And so that's the problem they face. Congressmen and women, senators are going to hear from their constituents. So unless they get this thing passed in Congress quick, which again is not Congress's strong suit, it's going to be a problem for them. So, you know, I would never say wait and see for Congress. They'll save the day. That's not a good thing these days.
I do want to mention for our audience here on Bloomberg TV and radio that there's currently a briefing underway by the White House Press Secretary Caroline Leavitt, who is talking about where we stand in these trade negotiations. She's citing progress, very good progress in her words, being made in tariff talks, though she also notes the retaliation we saw today from China, saying that Trump will punch back harder if the U.S. is punched, and that if China continues to retaliate, it won't be good for China, though she does reiterate, David, that Trump remains open and optimistic about a deal with Beijing. But again, no understanding yet that Beijing is picking up the phone.
Well, Rick, let's pick it up there. I'm curious what you think the administration still has in its quiver. So we've seen China show a distaste here in recent hours for continuing to ratchet this up. They say they've reached a ceiling.
All right.
They're going to continue to fight this. But given what we've seen over the course of this week, those tariffs imposed by the U.S. going up to 145%.
All right, another
the pause
pullback.
that the president has put in place here.
We got
what's left in
4
the toolbox here
fair
for this
value
president? Should there be
gaps
concern among him and his
for
advisors that
support.
They don't have a whole lot left here, much leverage left.
My
here as this goes
opening
forward.
P&L.
Yeah, it's kind of interesting, you know, because I think that what Donald Trump has shown is that he'll use all kinds of public policy mechanisms
Oh,
to try
I know what
and
you're asking. Hold on.
you know, create that leverage you're talking about, David, to get what he
Network,
wants
yeah.
on the tariffs. Remember, when we first got introduced with tariffs only a few months ago, you know, in this administration, it was all
That's
about
what the
fentanyl.
account is.
I haven't heard the word fentanyl used in the last 30 days.
Well, cash value, net
And so we
liquidation.
were going to be imposing these tariffs on our closest trading partners.
I don't
Mexico
have
and
opening
Canada,
P&L there. I'm
because they
down.
weren't doing enough to
I'm
stop
down
the flow of fentanyl.
475.
And
So if you
and
added
the
475 to
so,
this, that's what I
so
started
that
with
was
today.
a good example of Donald Trump dipping into the policy bag and finding
Yeah, no
things that
worries.
he could
Trade
do
of 8
to
is like,
leverage
this is
in
Ninja Trader. Yeah, this is like the
and that got everybody
alternative to
scratching their
Trade
head
of
saying,
8.
oh, well, then if
I'm on a
the
prop firm
fentanyl
account. This is a
problem,
prop firm.
the steel tariffs
Top
and the
Step.
other tariffs and
I use
things
Top
that
Step.
were applied go away. And now we find out
I was
no, not
looking
at all.
at through P&L
You
on the
actually
right.
don't need to have
Oh,
fentanyl to
right here?
come across the border to have
This is just the
so
yeah.
I think that you're going to see more of that policy debate.
TPT.
You're going to see you know, all kinds of issues from national security.
Yeah, so that's just what I'm negative for the day.
Filling up
Or that's like what I am
Rick,
for
thank
the
you very
day.
much. That's Rick Davis, along with Gina Shi and Zeno joining us here.
On the
contributors here on Balance of Power. On this
over here
Friday
is the
afternoon,
control
as we look ahead to the weekend,
center,
recess.
and this gives the more details. But all that is what my current P&L is. So when I'm in a trade, you'll see that. You'll see this move when I'm in a trade. Oh, okay, sorry. I found a way better paper trade strategy with trend meter with no delays. Oh. You sound like nutty bar trades. Nutty bar trades. I can do stocks too. Oh, Nutty Bar. Oh, he is? Oh, okay. I broadcast on YouTube too, but nobody watches it. I only started it a few weeks ago. Nobody knows it's there yet. What does he trade? Nutty Bar trades. And if I do it to SPY, which is similar to... Oh, okay, I see what you're saying. You know, yeah, I get what you're saying. Yeah, that's what I have here. You're looking at the ES chart right now. I watch the ES and the NQ. So what we do here is I just call out the trades. This is the NQ. Based off my strategy, it's called, I call it the trading the forecast. But I'm having this whole chart developed as a strategy so that people can download it through NinjaTrader and just upload the whole thing with one click and then start using it. So it's kind of geared toward people who are getting into it, don't know where to start, but they just need something to be able to track it without taking 2 years to figure it all out on their own. So I'm gonna have a subscription to it. I'm having a programmer finish it now. It's taking forever though, but this, see right? So I think EMAs, this is the 20 EMA, the yellow dot dash. This is the 50 EMA. These are fair value gaps to the positive. And then the solid lines are control EMAs, and they're all tracked in the reading the forecast box. So we're in a long right now. You're only taking longs. We're just waiting for a pullback to an entry zone. So our entry zones are typically like the 20 EMA or the 50 EMA, or if we have a trend line coming through, maybe down here. So we got to see where the pullback is and then pick an entry point. This is the 200 EMA. So we're waiting for a pullback to go long. I don't short into the VWAP typically. But there's no reason to short. So we're just waiting for a nice pullback confirmation candle. See, we got it right here. It just didn't take it. I was on I work from home. So, but this is a perfect, we hit the 50. We just missed this. I don't know if you were here like 20 minutes ago, but once I got the second candle confirmed, I sat in here with a limit order, and it didn't get me. It stopped at the 20 EMA and then headed up. So that was a big miss. I try not to trade while I'm working on the phone, so I go back and forth. But that's kind of what we're doing here. So I just call trades out all day, keep track of news, talk about when's a good idea, when's not a good idea, watch volume, volatility. And just try and, pick our entries based off the forecast. Hey, can you follow Justolo? If you haven't.
Regulators. Regulate any stealing of his property. We're damn
there you go.
good, too. But you can't be any geek off the street. Gotta be handy with the steel, if you know what I mean.
Thanks, man. Mount up.
It's 1:40 on Wall Street. We do check markets all day.
No, I don't.
Bloomberg, we are looking at the S&P 500 index trading close to session.
I'm all self-taught. I've never taken a series test.
This Friday at 53.50.
I've been trading about 4.5 years or so. I started with nothing, and then I've developed this over time.
Composite index up 272 for NASDAQ. That is a gain of 1.7%. The Russell 2000 index of small cap shares up
What do you mean?
0.6%. The 10-year 4.44%. The 2-year 3.90%. Spot gold now.
I'm not giving advice. This is all entertainment.
Precious metal. West
Yeah.
Texas Intermediate
Yeah, I know how it works, but this is not. I'm not giving advice. This is all entertainment.
And Bitcoin up now by 5%, 83,861 on Bitcoin. Shares of chip makers with U.S.
This is not,
plants are
listen,
lower
this
after
is
China
not
announced new tariffs.
advice in any way, shape, or form. So if you want advice, this is not the place to go. If you want to hang out and try and guess some entries, you can do that. But you're responsible for your own stuff.
Semiconductor Industry Association to issue an emergency notice. Right now, shares of Texas Instruments are down 5.5%, while Intel is down by 3.3%. Stocks higher, S&P up 83, now up by 1.6%. And Balance of Power continues right now. Back we go to Washington once again. Your host.
Yeah, we're just hanging out, having a good time. We're not really spending any money. We're doing prop firms. So, you know, it costs you from 100 to 150 for a practice account. And honestly, a prop firm is paper trading anyway. They're just giving you a chance to earn a funded account and make payouts if you can prove you can do it. So it's not even like real trading. You know, it's not, you know, you can put your own, I could put my own cash in here. I've done that in the past. But I don't need a license to do that. You know, but I've always wanted to get my license. It wouldn't be hard to do. Or at least maybe, I think it's a Series 3. That's the basic understanding of the market. That would be a good one.
This weekend for those meetings that the U.S. is going to have with.
This is like watching a video game. If you want to participate on your own screen and do your own thing, you can.
But they certainly stand to be pivotal, perhaps. Chris Wright, the U.S. Energy Secretary, the 17th U.S. Energy Secretary, was on Bloomberg Surveillance this morning talking about the importance of that.
Like when I was younger, I always wanted to like get my series and be able to trade like in an institution and things like that.
Summarized as prosperity at home and peace abroad. Lower oil prices help both of those. And the peace abroad that's of most concern right now in the region where I am.
You're done for the day? How'd you do? 5K? That's a good day.
During the Biden administration,
I did 51 yesterday. I only need 1,800 to qualify this to a funded account. I'm just trying to get one good trade. I just need to get this to, well, actually, I'm back $400 today, but I just need to get that to 59.
It's peace through strength.
So 2,400 now.
Cannot and will not accept a nuclear-armed Iran.
Well, when it comes to Iran, we saw even more sanctions on the regime yesterday when it comes to these oil sanctions.
Yeah, I do the 150s because it gives me more room, and I can't trade the MES. It doesn't, you know, it's not enough money to mean anything to me. It gets boring. So I trade the minis.
Well, fortunately, just from the United States production itself and the size of the global oil market today, absolutely we can tolerate squeezing out Iranian exports.
I can afford it. You know, you don't want to do anything. If you can't afford a subscription to an indicator or a strategy and a prop firm subscription, then you shouldn't be here anyway. Because it's not very much money for what the potential that can come out of it. You know what I mean? You can start with almost no money and generate a nice little trading account for yourself and make an income. You know, that's what we're trying to do here. We're trying to start with nothing and turn nothing into something using, you know, using this strategy. That's my idea.
From Iran, we've never had a better chance to reduce Iranian power, reduce Iranian tyranny in the Middle East. And we don't want to miss that opportunity.
Mr. Secretary, the president has said a lot, even recently to me.
Any news? Let's check the news again so it doesn't sneak up on us.
Do you and the president have a price in mind?
No, I think my whole life I've avoided predicting prices or dictating prices. You know, we have a wonderful free market economy. That's what makes the world wealthier. That's what allows consumers to continually re-express choices in every direction. So no, there's no formula for a good oil price.
Insightful conversation with the Energy Secretary Chris Wright earlier today on Surveillance with our colleague Anne-Marie Ford-Dern as we consider the prospects of the talks happening tomorrow between the U.S. and Iran and what implications they may have for global energy markets. We turn to Ellen Wald, non-resident senior fellow with the Atlantic Council Global Energy Center and president of Transversal Consulting. Welcome back to Bloomberg TV and Radio. Ellen, when we consider the moment at which we're having the conversation, or the U.S. and Iran is entering these conversations in global oil markets, knowing OPEC Plus is suddenly putting more supply onto the market despite weakness in prices, what difference does the supply of Iranian crude, whether it is more constrained or potentially more available on the market, how does that impact the overall picture?
That's a really good question, and I think there are a couple key points here. And it's interesting that the U.S. Energy Secretary thinks that getting rid of all Iranian barrels from the market is something that the market could tolerate. I think he's probably right, but
if any pain in the consumer economy, it'll probably still take a few quarters to play out. But where you're seeing an immediate effect is because of the lack of confidence and because of the uncertainty, it is going to impact portions of the market that banks that are tethered to the investment bank and the investment banking business are going to see that effect. Which is
What do you think, SM? Is this going to be the big rollover, or are we going to tag the 50 again
even in the
and
last
move
10 days,
back
we've seen
up?
a little bit of weakness in that stock
That
relative
moved
to its
over.
bigger peers. I want to see if that lasts or not, or if earnings completely changes the narrative on that.
And maybe just one thing throw out quickly.
I do too. I think this is the short.
Morgan, they built 15 billion in the pandemic.
I think this
in a couple
is
of
the
quarters.
short, but I'm not going to short
there is
into these fair value
uncertainty,
gaps.
but
You know what I'm
just keep in
saying?
mind- And people look at the market and different measures, but I would just point to that for the bank.
Yeah, I'm not gonna, because I don't like shorting into the VWAP, and I'm not gonna short into these.
And Bloomberg Intelligence
I'm gonna see how far we go and find support, and then I'm just gonna follow the forecast box. Every time I trade against that forecast box, man, it almost really never works out unless it's a violent turn, you know.
Facing. And in the words of someone that we just talked about, JP Morgan CEO Jamie Dimon, he has said on that earnings call earlier today, it's going to be tough for the C-suite to give those outlooks.
You're going to hear 1,000 companies report, and they're going to tell you what their guidance is. My guess is a lot will remove it. They're going to tell you what they think it might do to their customers, their base, their earnings, their costs, their tariffs. It's different for every company, but I assume you'll see that. And anecdotally, a lot of people are not doing things because of this. They're going to wait and see.
That, of course, was Jamie Dimon earlier on the earnings call. Let's talk about public companies, the overall market environment, the Treasury sell-off that's got longer dated yields toward their biggest weekly surge since the 1980s. We've got a killer voice on this, well known to the Bloomberg audience.
Yeah.
He's going to be super jealous.
Well, honestly, the short, it looks like a tasty short, man. I got to be honest with you. It's just
It is good to have you here. You've been writing
every time I find that there's resistance. I would want to be on the resistance side of the 20. You know what I'm saying?
I don't think it's.
So, like, if this candle closes and then we continue down, then I would say, like, between the 20 and 50 might be a good short, but you got to be careful because the 50, like, the 50 will reject it. You know what I'm saying? It's a long road to go through all of this resistance.
All that stuff does is accelerate the move.
But on a large time frame, like a 15-minute time frame, it probably looks perfect on a 15-minute, but I'm on a 2-minute time frame. You know what I'm saying?
Last Friday. If we have a slowdown in the economy and we have sticky inflation,
If that makes sense.
we're going to worry about sticky inflation. Restated, we're not going to be Arthur Burns and cut rates when inflation's going up. We're going to be Paul Volcker, and we're going to hold rates up in the face of a slowing economy. And then when we started to see these tariffs, we started to realize we're going to get tariff-driven inflation. And that changed the attitude on Wall Street. We're going to get inflation, and we're maybe going to get a recession. And we're not going to get the Fed to help us here with this because they're going to be so worried about inflation. And that's what started the sell-off, I think, in bonds, which then got exaggerated by all these other things that we've been talking about. And that scenario is still there. We're still talking about tariffs. As Jamie Dimon just said, a lot of people are going to be saying, I don't know what to do, so I'm going to do nothing until I figure it out. So we're talking about a slowdown in the economy. And as we're talking right now, I looked a few minutes ago, there's only a 30% chance the Fed is going to cut rates in 3 weeks. If this was any other period, we'd be talking about a 70% chance today, not in 3 weeks.
Jim, on the move that we're seeing in the bond market and that we've been seeing in the bond market, there was this narrative emerging that investors outside of the United States are staying away from buying U.S. assets.
Not enough signs.
dollar,
Yeah. So what I see for signs here is I see we're rejecting, this is the slow control EMA. So this is your slow control EMA. We just rejected it. Now, and now we're on this trend line. So if we ping back and forth,
But the one
If we start
thing
pinging
that's kind
back
of
and
interesting
forth,
about the
it's
data,
going to coil up,
lately, I'm talking about the last 2 or 3 days.
and it may go to the upside, or it may come down. You know what I'm saying? Your stochastics are rolling over. So if we ping back and forth, and the stochastics bottom out and start to roll up, that's when I would be at the bottom of this zone, and I would take a long. But that would be a little bit of that would be a lower statistic trade.
Question is which
Because when it starts to coil,
I'll remind everybody, I'm not saying that this is
you want to be on the right side of the stochastics, but it could go either way. You know, it's not, this was like a no-brainer. Like the trade off this 20 was a no-brainer. I just didn't get in on it in time. But here, this is a harder one to see. See, we 2 candles, 3 candles, 4, like we're working on 4 candles have held this resistance or this trend line. And then we've had 3 candles hold support. The slow control EMA has supported 3 candles. So, and we're on a downward volume run for, you know, we're in a sell stochastics, you know, we're rolling over. So, I mean, it's a coin flip for what I see right now. And on a coin flip, I go with the forecast box. So it's like, if I'm going to do something, it's going to be a long, but I need to be at an entry point where I can't really get hurt if it goes against me, you know? Yeah, I see a coin flip. Yeah, totally. This is gambling right now.
I guess the question is a problem for who?
You know, like a bias. And you know what I say about biases? Don't fall in love with your bias.
We're going to take a big loss.
Yes, you would be super tight. As soon as you got green, you'd want to get a couple ticks to the positive and see if you were right. Then if it comes back to get you, it comes back to get you. And the reason you do that is because if it starts to go against you, you need to get in as close to your entry as possible and get out of the trade. Because this is where you get trapped into a bias where you're like, man, I know it's going long. I know it's going long. And then you get in, say right here, and then all of a sudden you start breaking down and you're like, oh, I know it's going to bounce off the 50. So you start leveraging in and buying when you're in a loser, trying to average down, and then boom, it barely holds this, and then it's a free-for-all now. You know, where you could have just got out at a small loser. So it's totally, this is not a good place. And this is like when I'm on the phone, these are the mistakes I make because I'm not thinking about it. These are the mistakes I make. I'll be like, man, this looks good. I think it's going long, and I'm talking to people, I'm doing emails, and I'll take a trade here. And then boom, it'll go against me and be like down here. I'll be like, okay, I'm going to average in. I'm going to average in. I'm going to average in. And then all of a sudden I get a big spike, a liquidation spike, and then boom, I blew my account for the day. So, you know, so this is a danger area. You know, I don't like it when the stochastic is against the forecast block.
The fiscal year for the U.S. government. U.S. government runs in a September calendar.
If that makes sense, you've been watching it for a while. I think that made sense for how we look at it.
That's what it was when we were panicking in the middle of the financial crisis. It was 10%, and we had 10% unemployment, and we were handing out money with TARP. Now that's what we're doing when we have no problem. The budget deficit is unsustainable. We cannot continue to do this. This being this unbelievable amount of government spending and government intervention in the economy. So we're pulling back from it. What are we trying to do to replace that? We're trying to boost American business by using tariffs to bring back American jobs. Maybe that's not the right idea, but that's the goal of doing that. We've got some other things that we're trying to do, sovereign wealth fund, making Europe pay for defense, and some of these other things to try and bring down the budget deficit. What I'm trying to say is, let's say you say, well, the tariffs aren't the right policy. That's not going to work. Okay, fine. We can't go back to 9% deficits. So you don't like Trump's radical policy? give me another radical policy that we should.
Yeah,
do.
but you have it
And
right.
that's really
Oh,
what the
look, we
realignment
just
is.
snapped down.
We have to go forward.
See, right now I would be like, oh shit, average in, and I'm going against myself as a
Tariffs are
loser,
big part
and
of
it's
it,
and it's
but they're
multiplying, and
also
I'm
in
fucked.
flux, and
I'm
that's why you're
fucked.
seeing
Well, I'm
the
so
market
fucked. I'll just buy again now.
So yeah, we
Wow,
can-
I'm
we
really
can point
fucked.
screw
All
this
right,
up.
let's just push all my contracts in and hope it goes back up.
So that we are set for the next generation to be the preeminent country that we have been for the last generation.
Ask me how I
So
think
it's a
about this
high-stakes
trade.
game. It's a very high
Oh,
stakes
no
game.
question it's high stakes. When you talk about these potential radical
You know?
policies, tariffs being among them, is there a
So we need to
different radical policy that you
confirm,
believe could address
have the
the problem?
stochastics roll back up, and then maybe we can take along in this zone if we confirm a candle and we start breaking higher.
In such a haphazard,
But then I would keep it really
way,
tight too, and I'd be looking to get out one contract at this trend line and probably be out totally by this trend line. So that would be the trade
was an
I
idea
would
that people
call.
could understand. They put
So we got
taxes,
48
such as a
seconds
tax.
till
I
the
know
next
Trump doesn't
candle.
believe it, but they are. They put a tax on our products going into their country to make it uneconomic.
Doesn't mean
for us
I'm
to
right,
export to
but that's
them.
just what I'm calling from what
And
I
we
see.
don't do the same to them. So we're going to do tit for tat. Okay, fine. If you explained it that way and you laid it out why you had these numbers, but instead you come up with some arbitrary equation and you throw out these numbers, and then Trump just tweets out, I'm going to add 25% more to China, and nobody knew, not even Scott Bessent, that he was going to do it. The way they're doing it is, you know, I understand the argument of strategic ambiguity, that you want to be looking like you're a little bit wildly and unpredictable to get them to the table. But maybe we've gone a little beyond this, you know, and that we've just gone to wild unpredictability. And so the idea of using tariffs as leverage is not a bad idea. It's just the way that we've been going about it right now hasn't been a good idea. And I get the argument that we need to try and bring the global order back in. And the other thing is if he was to say, look, I'm going to punish you unless we all agree to bring down tariffs, that would be a political winner too, and also an economic winner. But he seems to be saying, I'm going to keep these tariffs on forever and maybe get rid of the income tax because we're going to pay for the government through tariffs. But the problem is, I don't think we can raise enough money to do it with the way that our government budget deficit is right now.
Hey, Jim, super appreciate this. 30 seconds left here. How are you thinking about next week? Are we going to just see more of the same, the volatility, you know, kind of living and eating on every word out of Washington, although we also have earnings, you know, coming, and we're counting down to a Fed meeting?
Okay, so now we
Yes,
tag the
I think
50
next week
EMA.
The big thing is going to be is there going to be a
We're
deal?
completely
Scott Bessent
sold
said
on the
he's got 10 to 15
stochastics.
countries
You've
that are
got the
very
slow
close on a deal. They've got to see
stochastic
one
rolling
deal that
over.
could potentially
So
be a
we need some
roadmap for other
confirmation
countries
if we're
and
going to hold
finally
the
get
50 or
something
not,
on that front. That would
and
be
then
probably
start
the
to
big
see a little roll
All right,
up,
great
and
stuff.
then I
Have a
might
great
be
weekend. Jim
okay
Bianco, President
with
Founder of Bianco
sneaking
Research.
in
When
for
we
a
come back,
long
we're
at the
gonna talk
bottom
about,
half
is
of
the
this
world
candle, like
gonna start
halfway
voting
between this fair value gap.
No, we're back.
based on what we
But
see
not
in terms
yet.
of the
I
Treasury
don't
market?
feel good
Okay,
about
that's
it
a good
yet.
question.
This is a
Let me
trade I
ask
would
if
make
the
if I was on the
sell-off
phone
in
and
U.S.
not talking
intensified
through it
as
because it
investors
looks
continue
good
to pull
for
back from US
a
assets.
move
We're gonna
back
talk
up,
about
but
that in just a minute. First
there's
up, though,
I need
check
more
today's trades
confirmation
on
for
Business
me.
Stories. Here he is, Charlie.
All right, I thank you very much. 2:22, the time now on Wall Street. The Dow, the S&P, NASDAQ all gaining. Stocks are rebounding, extending their best weekly advance since 2023. The S&P 500 index up now by 1.4%, jumping after a Federal Reserve official said the central bank is ready to help stabilize markets if needed. Boston Fed President Susan Collins told the FT the Fed would, quote, absolutely be prepared to help stabilize financial markets if conditions become disorderly. So the S&P up 1.5%, up 76. The Dow now up 526. That is a gain of 1.3%. NASDAQ up 263, up 1.6%. The 10-year at 4.48%, with the 2-year 3.94%. Gold up $58 the ounce, 32.34, up 1.8%. And West Texas Intermediate crude oil up 2.3%, 61.46 a barrel on WTI. Cannot ignore the move right now in Bitcoin, up 4.8%. Bitcoin at 83,728. Shares of chip makers with American manufacturing plants are lower after China announced new tariffs targeting semiconductor imports. Shares of Intel down 3.4%. Texas Instruments right now down 5.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, so we really have been kind of asking our just does the world kind of hate the U.S.? It's been, you look at U.S. Treasuries, the ultimate safe haven in times of turmoil, but it does feel very different the last week or so. The sell-off in U.S. Treasuries has intensified. Investors continuing to pull back from U.S. assets overall, sending longer-dated yields toward their biggest weekly surge since the 1980s.
All right, we
Everyone
got a
talking about
full
the US Treasury
rotation
market.
starting
It's
to
something both
happen.
President Trump and U.S. Treasury Secretary
Let's see if the 20
Scott
turns
Bessent
into
addressed
resistance
earlier in
or
the week
not.
after the U.S. market turmoil.
This was driven by the president's strategy.
Watching the bond market is very tricky. I was watching it.
He and I had a long talk on Sunday, and this was his strategy all along.
I saw last night where people were getting a little queasy. They were getting yippy, you know? They were getting a little bit yippy, a little bit
I got a Zoom call in
afraid.
The
6
market
minutes.
didn't understand. Those were maximum levels.
But if you look at it now, it's beautiful.
All right, of course, U.S. Treasury Secretary Scott Bessent there with President Trump. The back and forth that we have heard on the Treasury market. Let's get into it. Bloomberg News, international economics and policy correspondent Mike McKee here in studio. Will Hoffman, Bloomberg Intelligence Senior Associate for U.S. and Canada Rate Strategy, is out there at BI headquarters in Princeton, New Jersey. You know, Mike, I think we continue to talk a lot in the newsroom and trying to make sense of what is going on in the Treasury trade. Are global investors turning their back increasingly on the U.S.? We just talked with Jim Bianco, who said, you know, we're still trying to figure it out. You know, Europeans seem to be selling, but he said China holds some of their treasuries in Europe, I guess European institutions. So we're just trying to find out what's going on. What's your read on it?
Well, I asked, and they said that the world does not hate Carol Massar or Tim Stenovich.
Oh,
Everybody else
depends on who you ask.
That is true.
But I'm going to defer to Will on exactly what the mechanics in the markets are, but I know that there does seem to be some aversion.
All right.
To
So you see,
US
this is
assets.
what I was worried
Could be a
about. You
number
got to
of
be
different
careful
reasons
in
for
here.
that. It's also very,
You don't
very
want
hard
to chase
track
it up.
what
We kind of
China's
want to
doing,
make
because
sure
not
we
only
definitely
do they
are
hold
going to go
assets in
higher.
other places, but
Got a lot of
we
support
report
underneath
what their
it.
official assets are, but
I think we do have a
in the
chance
last
at
couple
double
years,
topping, but the
they've
20,
transferred a lot
the
of
20
their
EMA is
treasuries
very,
buying
very
to
powerful.
state-owned banks and enterprises to try to keep it sort of
Yeah.
off the books. And
Would
not
you
look
say
like
your
they're
job
so
is
dependent
stressful
on
because
us.
you're dealing with a lot
But
of people?
They have to keep buying.
Well, I deal with a lot of
everything
people,
currency
and
where
I've been in
they
sales my
save,
whole
buy
life.
less. They have to keep
As an
buying. So,
adult, I've always
keep their
been in
Right.
like high
And
pressure,
Jim made the
high
absolutely
commission
correct
sales,
point that if
and
they
it's
would've
just it's about the process. So once you have the process down, you can zone the
I
people
don't
out,
know, but
and it's
I'll let.
and honestly, man, I'm tired of the grind. I'm tired of
Well, come on in, Will. Is the turmoil
I'm tired
and
of
the
people, to
sell-off
be
in the
honest
bond
with you.
market, the rise in yields
It'd be
that we're
hard for me
seeing,
to
how do you explain
go
it?
out and do face-to-face demos
It's
anymore.
important to note, and we've heard this question a lot over the last few days from clients, is this foreign official or foreign private
It'd
selling?
be tough. I'm just
And
tired of the
as,
grind. I'm tired
Mike
of
alluded to, the data is very messy, so we use something called the tick data, which does
with
sorts-
Intuit.
so
It's
if you
I'm
look
on
at-
I'm on
if you look
total
at
cruise
country
control.
holdings
I
of
maybe
treasuries,
I
that's
maybe
not actually
put
the
30% of
treasuries
my
held in
actual
that
effort
country, it's
into
just the
doing this
location
job,
of the custodian
and
themselves.
I think I'm
So
tied
hence
for
why you
number
see
one for the
Cayman
quarter in
Islands and
my
Luxembourg and Belgium, for instance,
in
given
my
the clearing
group
businesses that run out of there.
or my
Have very high
my
treasury holdings.
team or
Ireland,
group or
given
whatever
corporate tax
whatever
or
corporate
cash
term
over
they
there.
call it is.
And that said,
like
the foreign
15,
private
20
sector
salespeople.
is really the ones who hold a lot of the long end duration here in the U.S. market.
Yeah, I can't
Foreign
imagine
official
dealing
sector
like when
tends
you
to
tell
stay
somebody they have to
kind of
pay in and
3
they
to 2
don't think. I
years
can't
in
imagine
because they
what
wanna
kind of shit
hold
show that
less
is.
duration risk for the
Fuck
exact
that.
same reasons that Mike was just alluding to.
Be like, well, I'll tell you what,
because in case they
motherfucker,
need to
go
step in
write
and
some
defend their
receipts in the
currencies
next
they sell,
room.
They want to mitigate that price risk so they can do it.
Don't call
effectively.
me if you get audited.
And that's something that fears really popped up about a wholesale drawback in demand from foreigners at the 3-year Treasury auction on Tuesday. That was pretty weak. But following that, we saw one of the strongest 10-year auctions I've seen in a very long time. And we won't know until April 23rd whether or not foreign private, or we won't see private or official, but foreign bids themselves pulled back at these sales.
But you know
it was
what?
a
You can
plus
make a
10-year
living.
auction,
You
and
can
an
make a
incredibly
living as a
solid
tax
3-year auction
preparer in the
yesterday as
tax
well.
world.
And if
And that's the
anybody
thing,
is
man,
wanting
is
longer
I make
duration,
really
whether
I
it
make
was
really good money
blowups of
for what I
trades,
do.
or we just saw quite a bit of action in swap spreads, not so much the cash.
Some of the
futures
things
basis.
I've had to do over
But
the
given
years to make the
volatility,
kind of
it's
money I'm
unsurprising
making
that they're gonna
now.
stop that of directional trades.
It's just
Frankly,
like
King's been
these
pretty
people
orderly
don't
so far.
understand how good they have it.
Even so, Jamie
So it's
Dimon,
like I
keep going
can't let
back to
that.
him,
I
feel
can't
like
let
it's the
this
Jamie
go
Dimon
until
hour.
I've
And rightfully
completely
so, I guess.
replaced
You
the
know,
income
he's certainly
reliably.
a voice on Wall Street that
And then
everybody
doing this every day and not
listens to.
having to
JP
work a
Morgan
real
Chase
job
CEO
would be
Jamie
like
Dimon said
retirement
he
for
expects
me.
a kerfuffle
I'm
in the
liking
US
this
Treasury
now,
market
dude.
that prompts
I
a
think I'm
Fed
just gonna put an
intervention.
entry right here.
He says when that happens, the Fed will step in.
I
But
think I'm gonna
markets
take a
start
chance right
to
here.
panic a little
I'm kind of
bit.
liking it.
Mike, what possibly does a kerfuffle
I like the
look
higher
like?
high.
That's a technical term.
Let's
I
see
know
if we
it's
pop
going
back
over
down
your head.
and
You
I
got to
get
go to
picked
school
up.
for years
I
to,
know,
to
I
learn
know.
about that.
I
I
didn't
might
know
move
about
it up
this.
to here.
But what could a possible problem in the
See
Treasury
what
market?
happens.
What we've seen in the past couple of instances where the Feds ended up stepping in is everybody's trying to sell and nobody's buying, and so the markets cease to function. And if you had a very over-leveraged situation and people were really scared, that's probably what would develop, and that's what would cause a Fed. You know, that would be more than a kerfuffle, but it would cause the Fed to step in to provide liquidity. And what they've done in the last two instances, the great financial crisis and COVID, is become the buyer of last resort. If you can't sell anywhere else, we'll take it. Now, they have standing facilities now that they didn't have before. I mean, the discount window's always been there for banks, but for other funds and money market funds, et cetera, they have the standing repo facility. If you have treasuries that you can't sell, you can just give them to the Fed and they will give you cash, and eventually you'll reverse the trade. So they're hoping that that takes a lot of the fear out of the market in the same way sort of that deposit insurance takes the fear of bank runs away.
Maybe a good time to bring in Susan Collins' comments to the Financial Times. She said, quote, markets are continuing to function well, and that, quote, we're not seeing liquidity concerns overall. Yet the Fed does have the tools to address concerns about market functioning or liquidity should they arise. No indication, Mike, at this point, any of that has arisen.
No, she was saying what other people have said. Bloomberg News talked to Beth Hammock the other day, who obviously knows what she's talking about, being the former treasurer at Goldman Sachs, now the Cleveland Fed president. She said exactly the same thing. I think the story got misinterpreted on Wall Street briefly, and we saw a market reaction as people thought maybe there was a signal that the Fed was going to be stepping in now. But there's a real jumpiness on Wall Street. Everybody looking for this Fed put, and so they glommed onto something that wasn't what they hoped it would be.
Kind of like the tweet earlier this week.
Yeah. Well, you know, and what's interesting is too, I mean, this idea that, you know, I'm looking at some of the Bloomberg terminal stories. I mean, just so much on the Treasury trade, yields climbing, Treasury suddenly trading like risky assets in a warning to the president, Treasury sliding worse since 2019. We'll come on back in here.
I'm going to get right up in behind it.
Says we're still at inflation watch. And so, you know, when you see headlines like that, it feels it's hard not to make you nervous as an investor. Like, wait, the Treasury market, this is supposed to be calm and
all right, I'm in behind
the safest haven out there. So I don't know what are the worries that you think about as we move forward into another trade?
Took me out. That's okay.
I think we just saw the real result of what everybody's.
I think this might roll over now. I don't think it's going to hold the 20.
Reform in the banking sector is for moments exactly like this.
It's not Just Stolo. I don't trade Mycos because it doesn't mean like it's not enough money to mean anything to me.
Since COVID, and the funding markets haven't quite kept up with it.
And the commissions sneak up on you, so I just go to minis.
When volatility spikes like this, it's natural for the intermediation capabilities of the banking sector to step back a little bit. And what we were talking about earlier in this year, as Bowman
I'm going to
made
go
her,
again.
Announcement for
if it gets me,
and had her hearings these last couple days, is that some change or carve out to something called the supplementary leverage ratio seems to be one of the first tools that the Fed may want to hit.
It tags me.
I'm in. To step in. They made it clear that those levels are far from here. And then this has been relatively orderly as we priced out a lot of the growth and Fed reaction scare that got priced over the last few weeks. I want to say Sunday night we saw 125 basis points of cuts kind of expected by year end. And now we're down to right about 75. The Fed's been clear from Fed speak, whenever it's that uniform, they're usually trying to get a message across. And that's that we're on our hands until we know what is going on.
So you don't want to get in now. You want to be in at the bottom of this candle. It's gonna see the forecast cloud means there's more selling.
I really think it's.
That means there's more. I'm going to get out of this. I'm not going to do it.
Should tariffs continue to unwind and
Order
growth
canceled.
continue
Forecast
to
cloud
go
is,
back
that
to
means
where it
there's
was
more
earlier this
selling
year.
than buying.
But
So when the
there's plenty of
forecast
tools
cloud
that
is
can,
red, you've got more selling
basis trade
volume
facilities that were
right now than there is
back,
buying volume.
some form of carve out.
So that's the leading indicator. This might be a rollover, so I'm just not going to chance it. I'm going to get out. I got to hop on my my conference. I've got a Zoom call with my team, so I'll be back in about an hour, guys. I'll talk to you in a little bit.
Hey, speaking of survey data, Mike, we got to end with you when it comes to University of Michigan and those ugly results that we got today. Year ahead expected inflation at 6.7%, the highest going back to 1981. What does this mean to you?
Just quickly.
It means that people are nervous out there. I talked to Joanne Shu, the director of surveys at the University of Michigan, and it's across all income levels and all political leanings. People are worried about what tariffs are going to do to the economy. They think jobs will go away. They think incomes will go down. And so they're reflecting that in what they're saying about inflation.
But that can become a self-fulfilling prophecy.
Well, that's what the Fed
challenge.
worries about. That's why they worry about becoming unmoored. And I think you'd have to say 6.7 is somewhat unmoored, but they would want to see it repeated for a little bit.
All right, guys, thank you so much. Really appreciate it. Michael McKee, of course, international economics and policy correspondent here at Bloomberg News. Will Hoffman, thank you. BI, Bloomberg Intelligence Senior Associate for U.S. and Canada Rate Strategy. Still to come, bringing supply chains and manufacturing back to the U.S. Can you really do it if you're the iPhone? We're going to take a look. That's next on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ are all advancing. We are on track for a winning week for U.S. stocks. On the week right now, the S&P is up by 5.5%. Best week since 2023 as the bond rout eases right to the numbers, because now the S&P is higher by 1.7% again, holding close to session highs, up 88 at 53.56. The Dow Jones Industrial Average at 40,210, up 613 points, up 1.5%. The Nasdaq Composite Index up 296. That is a gain of 1.8%. The 10-year at 4.49%. With a 2-year, 3.95%. Gold up $60 the ounce, surging to a record $32.36 now, up 1.9%. West Texas Intermediate crude up 2.6%, $61.62 a barrel. Briefly, Tesla has stopped taking orders in China for Model S sedans and Model X SUVs, both of which are imported from the U.S. after the countries raised tariffs on one another in an escalating trade war. On an update for the rest of the market, Tesla shares, they're down now by 1.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. So one goal of the current trade war, you guys know this. We talk about it, the president talks about it, and that is to get companies to manufacture more in the United States. It's all about bringing the supply chain back home here to the U.S., specifically to the Trump administration has talked a lot and would love to see Apple do just that, Tim.
Is it even possible? We've talked about this a lot with Bloomberg's Mark Gurman, who understands what it takes to build an iPhone and understands the extensive and well-oiled machine that is the Apple supply chain, and it is global. So let's head to Los Angeles and to Mark, who's Bloomberg News managing editor for Global Consumer Tech. Mark, remind our world what the full Apple supply chain looks like, where it's all happening, and how long it took to get there.
We don't have enough time for me to outline the full supply chain.
Where's the whiteboard?
It's a book.
Yeah, no, we need a whiteboard. We need actually probably multiple whiteboards, all sorts of stuff. It's global, really. And just to get this out up front, it's not moving in terms of the iPhone from Asia, right? They're not going to be able to build plants in the US, as Trump has said, to build the iPhone. That is a dream that is not going to get fulfilled. People don't realize you have to go to China to see this. The facilities where Apple makes its devices, they're not just factories, they're cities unto themselves. Hospitals, schools,
yes,
gyms, dorms. You have hundreds of thousands of people working on getting a new iPhone in every fall. It would be like taking the city of Boston, having everyone dropping what they're doing and starting to build phones, right? It's not going to happen. The other part here, you've had some people suggest, why doesn't Apple move into automation? Why can't they spend a few $1 billion building a fully automated robotic facility somewhere in the United States, in the middle of the country where they have a lot of land for cheap, and just automate the process? Take the humans out of it. If you say humans in the United States aren't educated to build these devices, fine, just have robots do it. No, that's not going to happen either. The manufacturing lines to develop iPhones need to be retooled every year, because the iPhone changes every year, right? The iPhone design hasn't changed, but that doesn't mean you don't have to retool the whole thing. New cameras, processors, manufacturing techniques, batteries, cases, colors. 1 millimeter change is a retooling, right?
Wow.
That's not going to happen with robotics. You can't go in and rechange the whole robotics situation every year, right? That's going to cost too much money. That's not possible. So the Apple supply chain is not shifting to the US. It is shifting, though, at least for US sales at this point, to India, where they've been rebuilding and trying to replicate the Apple manufacturing facilities there for about a decade now.
You know, I was a little puzzled on Wednesday, Mark, when we saw this pause announced and Apple took part in this historic surge in US stocks. And I was curious, why is Apple participating here, given so much of its supply chain is still in China and it would be subject to the higher tariffs that we've seen since then on China, even though it, the rest of the world is not subjected to those tariffs? Is it because Apple could successfully build iPhones that are headed for the US in India or another country?
Well, I don't think the investors that made the initial trades to get back into Apple because the tariff pause would have been able to realize that as quickly as they did, right? So I don't think that India factor took it into account. I think what investors realize is that the reason the stock went down by so many hundreds and thousands of points when the tariffs were announced in early April was because they expected a big, splash with the Chinese tariffs. What they didn't expect was a big splash on tariffs for everywhere else also, right? And investors knew that Apple was diversifying. They don't probably know the exact details of their diversification or how they're doing it or where they're doing it, but they know they're doing stuff out of China now in Asia and in other parts of the world. And so removing the tariffs from the other parts of the world, I think, shows that Apple has some wiggle room here and there's some stuff they can do. The other comments that Trump made around the pause time frame were that some companies with special attachments to places like China, they're going to get some exemption. So he opened the door, left it just a little ajar to exemptions being made.
But could Apple actually build US-bound products outside of China? Does it have that capacity right now? Not in the US,
Yes.
but outside of China.
Yes, it can build 30, 35 million phones in India. That number is only going to go up. And so they're able to mitigate the issue, at least for now, by taking as much supply from India as possible. And right now, India obviously is on that 10% tariff.
Hey, Mark, one thing I also wonder, part of the reason global multinationals, U.S. global multinationals, set up shop in China and wanted to be there is because they wanted to sell there. So does Apple have to have some sort of significant presence, taking out the importance of the supply chain it's built over years, many years there? But does it have to also have a significant presence so that it can hopefully continue or sell in that market?
Well, I think Apple's going to continue producing products in China forever. And I think they're also going to continue producing products in China for the U.S. China operations are going nowhere for Apple. In fact, I think they're still only going to grow as Apple grows. The U.S. is just one slice of the world, right? And so they're going to continue using China for everywhere else, plus some of the U.S. These tariffs are not permanent, right? Apple has enough cash in the bank to withstand whatever they have to for the next few years.
Do Apple execs feel that way? Are they just like, yeah, this is a bad time? No doubt about it. We're just going to kind of find our way. We're going to stay quiet. We're going to find our way through because they aren't going to stay.
I think they're terrified.
They are.
No, I think they're terrified. I think the scariest thing for Apple is the inability to execute a plan. Apple likes to come up with a plan and execute it. And this is not a time where you can come up with a plan and execute it because you don't know how these policies are going to change. Right now, the plan is India. What if India gets hit by a big tariff? It's the unpredictability of what's going to happen and what policies are going to put in place that makes this so frightening to the business and investment communities.
What could Apple do? What could Tim Cook do to satisfy President Trump?
He can build iPhones in the U.S. But that's never going to happen.
That's not going to happen. You told us that. Short of that, Mark, what could he do?
Second choice.
Honestly, second choice, he can tell Trump that he's going to build iPhones in the U.S.
Is that what that investment was? Like you kind of gave us some clarity about that.
Yeah. He tried to do that, right? But it didn't really do much. Like they knew this was coming, right? Why do you think Amazon spent $40 million on the Melania Trump video project, right? All these companies are trying to buy their way into currying favor with Trump. The big difference between Trump 1.0 and Trump 2.0, referring to the administrations, is that it felt like during the first administration, he could be bought by big tech to get what was needed. It feels like so far, big tech is trying to buy their way into currying favor, and they're not getting very far.
I'm having flashbacks to Texas in the first Trump term. 30 seconds left, Mark. Is there something that Tim Cook could offer the president to satisfy him? Like, I don't know, not making AirPods, but like making some peripheral, making something here.
It's going to have to be about the iPhone. I don't think making a peripheral product is going to do anything. They probably will need to come up with some component, some final assembly, something that they can do in the US. Maybe they move their packaging facility, like FATP, final testing, assembly, packaging, right? Maybe they split the packaging from the assembly and testing. They bring the iPhones unpackaged to the US and package them in the US. So they maybe can say, iPhone designed in California, assembled in China, packaged in the US.
Oh my
maybe
God.
That'll do something.
Maybe.
And I just came up with that on the spot, so I'm sure Apple will come up with something better. We have more than 30 seconds.
We love when you come up with stuff on the spot. Mark Gurman, have a good weekend. Bloomberg News Managing Editor for Global Consumer Tech. Check on the trade when we come back.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we've got just about a little over an hour to go until we wrap up the trading day and the trading week. Amid all the volatility, let's not forget, we had quite a rally on Wednesday, which when I was kind of reading the headline that stocks are eyeing their best week since 2023, I was like, well, how did that happen?
And then I said, remember what happened on Wednesday?
I didn't. It's just been that crazy.
It feels like a month ago.
It does.
Order
It does. This whole week
submitted.
feels like a month. Let's take a look at some stocks on the move this week. With us is Bloomberg News Managing Editor for Markets Live. Joining us is Christine Aquino. Christine, what do you got?
Well, Carol, I'm looking at JP Morgan, still top of the stack in terms of the banks that reported today. That's up more than 4% in the afternoon session. And investors really liking that record stock trading revenue. 48% increase to $3.81 billion. That volatility in markets that we're seeing really paying off for JP Morgan. Net interest income also $23.3 billion. That's a 1% increase. So investors really loving that. But of course, we also saw CEO Jamie Dimon warning of considerable turbulence coming in markets, and looks like they're preparing for that as well with the money that they set aside for sovereign loans. That has also increased way more than analysts had predicted, $973 million set aside for that.
I was also earlier today watching what's happening in the chip space because we got some news out of China today that really moved U.S. stocks.
Yeah, absolutely, Tim. I mean, we got some clarity from a Chinese semiconductor body, and they're emphasizing that the government will put tariffs on chips based on where they're manufactured rather than where they're shipped from. And so this is very relevant for any companies in the U.S. that are importing these chips. Texas Instruments is one of them, and we're seeing that stock down in the session. It's actually the biggest laggard on the S&P 500 today, down more than 4%, because I think that stance just really makes it clear that whatever the cost of importing these chips now, that's going to go a lot higher.
When you have a fabricator like TSM making most of the chips, right?
Can you just move that thing to Arizona, Carol?
Hey, TSM, just pick it up, boom, cross the ocean.
Just take those machines and...
Tain't so easy,
No.
Mr. Stenovec. No.
It's not. I've driven... So years ago, I've told you this, I drove, I think, 2022?
Yeah.
Driving in Arizona outside of Phoenix and seeing some of these facilities that were being built. And that was several years ago.
But it's tricky.
Very,
it's tricky. And this is a big
extremely
deal.
tricky.
And this is why you see it playing out here. So glad you're looking at Newmont. It was one of the names that I talked about yesterday, and it chosen as a gainer because we've seen gold just...
Yeah, absolutely.
Record
Carol.
after record, it feels like.
Yeah, exactly. I mean, we're seeing that pay off for this gold miner, UBS upgrading that company from neutral to buy now. And UBS also upgrading its gold forecast to $3,500 in 2026. I mean, remember, we hit a record just over 3,200 earlier today. Gold really has been one of the most reliable havens in this sort of turmoil. I mean, a lot of the other havens that we've traditionally looked at, the treasuries, the US dollar, all seem to be breaking down, but gold still going strong. It's up 23% this year.
I'm looking at the chart right now. It's remarkable to see this. I mean, it seems like every day, Carol, we're talking about a new record for gold.
Yeah, I mean, I kind of get it because, right, in terms of safe havens, right, and that is another one of the ultimate safe havens, and we've seen gold on a tear this year. When you were thinking about stocks on the move, before we wrap up, there was a lot to choose from?
Oh, yeah. A lot to choose from.
It's a different tone, right, today?
Yeah, exactly. And, you know, I think we got some late-breaking news in the afternoon from several Federal Reserve officials. We did get some comments via the Financial Times from Susan Collins saying that the Fed is ready to step in. I mean, that's their default stance anyway, but I suppose...
Not that they're ready to.
Exactly.
It's just like, this is what we do.
Exactly.
And to be fair, she did say that markets are continuing to function well and that we're not seeing liquidity concerns overall.
Exactly. But you can just tell from the market sentiment, right? The reaction to that really helping those gains in the afternoon. It's just something that markets probably are wanting to hear at this particular point in time.
Yeah, super interesting that we are holding on to gains. We'll see what happens in the last hour of trading, whether or not that holds. Christine, so appreciate it. Bloomberg News Managing Editor for Markets Live, Christina Aquino. For more conversations, hey folks, check out our new Stock Movers podcast. It's 5-minute episodes on the biggest winners and losers in the stock market at any given time. Listen to Stock Movers. You can find it at Apple, Spotify, or anywhere you get your podcasts.
One thing I wanted to talk to you about very briefly, Carol,
Yes.
was just a little how the sausage is made inside baseball. Call it what you will. The way that late yesterday, our show for today and what we had planned kind of fell apart a little bit.
Totally blew up. And what's interesting is, folks, we were going to have two CEOs on. One from a really iconic brand that you would know. They've been around for a long time, seen a lot of market cycles. Another one, big market cap. I think it was about $45 billion market cap, plays into the industrial space. Both of them pulled their plans to join us. And I think it speaks to what Jamie Dimon said, the corporate environment, people, I think, and certainly CEOs, a lot of uncertainty out there. And it's really hard to talk about this environment. And certainly they probably expected we're going to say, hey, what's the outlook? And it's hard for them to really pin that down. And that's something that Jamie Dimon said, essentially watch on those earnings calls. You're going to have a hard time, CEOs getting there.
There's a great story on the Bloomberg terminal by a trio of folks. It's tariff chaos creates an information vacuum in the stock market, and it includes information about all the companies that have just so far really revised what they're saying to investors for the remainder of the year, because they don't know, because there is so much uncertainty.
Exactly. Very, very difficult. For those on TV, the close coming your way. Tim and I continuing right here on Bloomberg Business Week Daily.
Order submitted. Order canceled.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The financial markets are feeling more confident today despite the escalation in the trade war between China and the U.S. Beijing announced it's raising tariffs on U.S. goods to 125%. Correspondent Anna Corin in Beijing.
It comes as President Xi made his first public comments on the escalating trade war, saying his nation is not afraid. He said, quote, "There are no winners in a trade war, and going against the world will only lead to self-isolation."
White House Press Secretary Caroline Leavitt.
The president made it very clear when the United States is punched, he will punch back harder, and he hopes to make a deal that benefits the American worker and our companies that have been ripped off for far too long.
But CBS's Weijia Jiang reports there's been no direct response from President Trump yet.
President Trump wants to negotiate this deal directly with Chinese President Xi Jinping. He doesn't want anyone under him to be doing the legwork, which usually is what happens.
The president's envoy Steve Witkoff is in Russia for talks on Ukraine. Our Charlie Daggett reports from the Pentagon. President Trump is growing impatient for a deal.
This doesn't look like they were gaining ground towards at least a temporary 30-day ceasefire. Putin kind of moved the goalposts. He made further demands. He's demanding the loosening of U.S. sanctions. At the same time, Russians have just been, we've been watching it, been bombarding Ukraine up and down the front line.
Trump wrote on his Truth Social today, Russia has to get moving. Witkoff will later travel to Oman for talks this weekend with Iran. The administration continues to insist those will be direct talks. There was a hearing today in Maryland where lawyers for the Trump administration were supposed to provide information on the status of a man wrongly deported to El Salvador. They argued they didn't have enough time. The attorney for Kilmar Abrego Garcia.
And the district judge appropriately was not willing to accept their vague and unsubstantiated assertions that, don't worry, Judge, we'll take care of this all in due course.
CBS's Katrina Kaufman was following developments.
And why does this government lawyer not know anything about where Mr. Abrego Garcia is, or why can he not share that information with the court? Which is why she's requiring that, she said, even if it's just a little bit of insight, or even if the daily report is zero, she needs it on the record each day, what efforts they're making for Mr. Abrego Garcia's return, where he is, whose custody he's in.
Checking the numbers on Wall Street at this hour, the Dow Jones Industrials are up 528 points. This is CBS News. An Iowa man has been arrested for allegedly stealing some valuable Pokemon cards. Michael Wallace has the story.
Police say Alex McClellan broke into a collectibles shop in Perry and swiped up to $40,000 worth of cards. Store supervisor Justin Estes alerted other local shops.
We pretty much wrote everything off. We just thought it was gone.
Police say 3 days later, McClellan tried to sell some of the cards at a shop in Des Moines, where manager Raven Voorhees grew suspicious.
It was just some specific cards, and we were really just keeping an eye out for the value.
McClellan is being held on burglary charges. Michael Wallace, CBS News.
Researchers think they've pinpointed why cancer patients experience fatigue and a lack of motivation near the end of their lives. They say there's a direct link between inflammation and a loss of motivation. Inflammation can suppress a chemical in the brain, and that results in apathy. They hope their findings will improve the quality of life in late-stage cancer patients. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just under 55 minutes away until we wrap up the trade on this Friday and certainly for the week overall. We've got a little bit of a rally on the equity side of things, holding on to gains and more than 1%, about 1.5% on each of those major equity averages. We've talked a lot about the Treasury market, though, in the last hour, and rightfully so. We've got yields up on a day when we got a UMich sentiment report that was pretty negative. And so we continue to watch the Treasury market. The Treasury market's had an interesting week as well.
Oh, it has. Going back to the equity market and the week on the equity market, Carol, look, we do have an hour to go, or 54 minutes until the close, but we're on track to have the best week since 2023. The S&P 500 this week up more than 5.4%. We're going to have much more from Charlie Pellet in just a second. In the meantime, though, once again, we're all in on trade, tariffs, and markets for the next 2 hours from pretty much every angle. No, there's nothing else. No, there's a champagne story that we're going to get to. But yeah,
this is a
there's a tariff angle.
We're going to get to it in just a moment. All right, let's get to Charlie with an update on the trade. Hey, Charlie Pellet.
Well, hello there, and here's what's going on. 54 minutes until that closing bell. Clang, clang, clangs on Wall Street. The Dow, the S&P, NASDAQ solidly in the green right now, on track for a winning week. Let's begin there. For the week, the S&P is looking at an advance of 5.5%, but right now the S&P is up 90 to 53.59 on the S&P, and a gain right now of 1.7%. We are holding close to session highs, no late day swoon. Right now the Dow is up 637, up 1.6%, and NASDAQ up 306 for the NASDAQ Composite Index. That is a gain of 1.9%. NASDAQ 100 Index up 1.8%, Russell 2000 up by 1.3%. The 10-year 4.48% with a 2-year 3.94%. Spot gold up 1.7%. $32.31, trading at a record up $55 an ounce. West Texas Intermediate crude $61.68 a barrel, up 2.7%, and Bitcoin now up by almost 5%, 83,798 on Bitcoin. Bottom line, an update: Savita Subramanian is head of U.S. equity and quantitative strategy of BofA Securities, and on surveillance this morning, she told us there are reasons to be optimistic about stocks.
I think there is actually potentially more upside than downside risk to the S&P 500. And I know I sound a little bit, out of sync with everybody else here. But, again, I see this as a market environment where you want to follow the money. The money is not going into U.S. Treasury bonds. There's a buyer's strike on U.S. Treasury bonds. Where is the money going to go? I think it's going to go into inflation-protected income.
Savita Subramanian of Bank of America on Bloomberg Surveillance. Briefly after earnings, J.P. Morgan shares up 4.6%. Wells Fargo after earnings now down 1%. Morgan Stanley up 2.1%. BlackRock after this morning's report up by 2.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Worth repeating some of what we just heard from Charlie because of this rally that we're seeing. Solidly in the green, the S&P 500 up 1.8% right now. Stocks wiping out losses to extend their best weekly rally going back to 2023. What a difference a couple of days makes. It's been a chaotic few days. They really underscored fears of foreign investors are beating a retreat from American assets. This is after we saw a sell-off in longer-term treasuries and the dollar abated. One person we've been going to regularly for his wealth of experience is our own Ed Harrison. He's Bloomberg News senior editor and author of the Everything Risk newsletter. Early in his career, he was a diplomat at the U.S. State Department. He's kind of done everything, which is one of the reasons we like to talk to him. He joins us from Washington, D.C. Rumor has it, Ed, you also speak like half a dozen languages. True or false?
That is true, actually, yes.
Okay.
Is that from the diplomatic
Yeah,
work?
kind of. Well, no, he can't comment, okay? I'm not going to make him comment on that. It's for a different time. Look, I did want to get you on, and we all wanted to have you on the program today because what a week it's been. Stocks certainly one thing, but the Treasury market is sending a couple different signals. I'm wondering what you're seeing when it comes to the Treasury trade.
Yeah, Tim, there are three signals I saw sending, and luckily we're ending the week with a pretty straightforward signal. The one signal was that we were going into a recession, and that was when treasuries were rallying across the curve. Then there was a second signal, which I think was the most ominous, and we saw that at its worst today with the yield curve steepening and the long end really selling off. That was that people were doing this sell America trade. The final place where we've landed just as the week is closing is that the Fed is not going to cut except in the most dire of circumstances. That means that the swaps market is pricing out cuts. We have 3 cuts through the end of this year, down from 4 or even 4.5 earlier in the week. And we can see that with the 2-year actually underperforming the 10-year or the 30-year. That's where we've landed at the end of the day, is stagflation as what the bond market is telling us.
Yeah, it makes me, right. It's just, I gotta say, Ed, like to see this move and then see what's going on in the equity markets, like none of it makes sense to me.
I mean, we're all looking around for a place to. Well, I thought it was interesting that Savita Subramanian was talking about equities, places that you can hide out that were inflation protected. We're all looking for that inflation protection. It does seem that now, we've gotten through a lot of this. That the core message is that stagflation is going to be the price that we pay for these tariffs. And then the question becomes, how much of a price do we pay? But at a minimum, we're going into a much more stagflationary environment than we left.
Roll on top of this, I'm just looking at the dollar index. It's down about 3% this week. And I think I heard on this with the surveillance gang on radio earlier this morning, either one of the guests saying that basically every currency was up except for the dollar. We are continuing to talk about whether or not how much investors, global investors, might be pulling back on anything to do with dollar-denominated assets. And that would be such a switch. Have we, though, been seeing a little bit of that over the last few years? I mean, certainly China has looked to maybe do some diversification, but I'm just curious how we put kind of what we're seeing today in context of over the last few years.
Yeah, I think that, this whole concept of American exceptionalism was very much a driver of assets flowing into stocks over the last few years. And what's taken on water there, when you think of like three different things, there's the fact that, American markets are large and deep. There's also the concept that the rule of law is very much in effect, more so than in many other countries. And then finally, the concept that there's more growth, especially when you look at tech stocks. Those last two have taken on water. And that's, I think, where we see the difference between where we were before January the 20th and now. And I think the big key factor here is tariffs. Not only that they're large, much larger than a lot of people thought they were going to be, including Larry Fink, but they are, it's been off and on that no one knows what's actually going to happen. There's a sense that we have to wait until everything calms down before we know what the new regime is actually going to be.
Well, and I guess what I want to ask too is it feels like the market, the equity market today is trading one way. When I saw those UMich, I thought, oh my God, yields are going to drop, right? So I feel like the equity market today, at least, is telling one story and the Treasury trade is telling a different story. Is that right?
I go back to what Savita Subramanian was saying, and I think that she may be onto something. Two things are, one, that this sell American trade has sort of stopped itself out. We were oversold on that trade. People are starting to come back in. And remember, this is like 1 hour before we're about to close for the week. Right. So it's very positive that we're seeing that. But they're saying the same thing in the sense that stocks are up, particularly in places that are more recession resistant, more inflation resistant. And perhaps that's going to be a theme that lasts for some time until we have another change in the tariff regime that we're running with.
Well, in your view, Ed, is there going to be a change in the tariff regime? Does it seem like markets have priced in, okay, these baseline 10% tariffs across the board, that's going to stay, and all we're waiting for is what ends up happening with China?
Yeah, I think what ends up happening with China will be the big key. I take a much more bearish view probably in general, because I think that recession is a more likely outcome, just as the bond market is saying 3 cuts, which you're only going to get in sort of a more severe downturn. But I think that China is not going to back down. Donald Trump thinks that he has all the cards. He doesn't have all the cards. China has many cards to play as well. And ultimately, this is going to be a tete-a-tete that they're not going to back down from. And it's going to be ugly. And as a result of that, we're going to see high inflation and low growth and potentially a recession. And that's going to be the regime that I think stocks and bonds will trade for.
Like how ugly, though? I mean, in your view, you see this tit for tat as it stands right now, lasting months or years?
I think that, number one, we're not going to get a bilateral Xi-Trump conference until Trump shows that he's willing to relent in some degree. Because, I think Bloomberg Intelligence did a great job in terms of talking about this. They've seen how they act. They're playing the long game, the Chinese, and ultimately they don't want to lose face either. They have their domestic constituency to deal with, and Xi is not going to give concessions, and he's not even going to have a bilateral talk with Trump until he knows that Trump is serious about specific preconditions. So we're going to have to go through, lower level people coming up with something that they can then ratify together and present, okay, we've ratcheted this down.
Ed, just real quickly, otherwise I'm going to get yelled at by my producer. 25 seconds. 10-year note, is it more likely a 5% or back down to 4%? What are you hearing, just quickly?
I think it's going to go closer to 5% before it goes to 4%. That is that stagflation means that that's the path of least resistance until we get the negatives in terms of growth.
Got it. Got it. You were quick. Thank you so much. Ed Harrison, Bloomberg News Senior Editor. Thanks for all your time that you gave us this week. He's author of the Everything Risk newsletter. Coming up next, rare earths, China, and the U.S. What's at stake? We've got a roundtable you will not want to miss. This is Bloomberg Business Week Daily.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until we wrap up another wild and chaotic And yes, historic week. The Dow, the S&P, NASDAQ all advancing right now. We've got the S&P higher by 97 points. That is a gain of 1.9%. The Dow now higher by 649 points, up 1.6%. NASDAQ up by 2%. The NASDAQ 100 index up 1.9%. And the Russell 2000 index up by 1.4%. The S&P 500 index, by the way, on track for a weekly gain right now of 5.8%. The 10-year currently yielding 4.47% with a 2-year 3.94%. Gold is up $53 the ounce to $32.29, looking at a record up 1.7%. West Texas Intermediate crude up 2.8%, $61.72 a barrel. And Bitcoin now up by 5%, $83,855. So indeed a wild week with the volatility seen continuing next week, according to Cameron Dawson, Chief Investment Officer at New Edge Wealth, who was interviewed on Surveillance, and during that conversation, she invoked Greek mythology.
If this was Icarus flying close to the sun, the wax certainly started to melt on the wings on Tuesday night when we saw the bond market gap out and yields really spike higher. Now it's spreading into FX markets, which just suggests to us that liquidity is leaving this market, and we cannot rule out that these big moves continue.
Cameron Dawson of New Edge Wealth interviewed this morning on Bloomberg Surveillance. We're keeping an eye on U.S.-based chip companies. Shares today of both Texas Instruments and Intel, they are both lower. Beijing is going to be raising tariffs on all U.S. goods from 84% to 125%, leading the China Semiconductor Industry Association to issue an emergency notice. Texas Instruments right now down 4.6%, Intel down 1.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Do appreciate it. Well, Chinese exports of rare earth minerals are all put on hold as producers grapple with tighter permit requirements following last week's new restrictions on the critical materials in an escalating trade war with the U.S. We want to go deep on rare earths to understand how they fit into the trade war, if there are alternatives, how much leverage it gives China, and more. And we've got a great roundtable.
So we're going to just tell you, sit down, pull your car over, maybe grab a drink. Well, not if you're in the car.
Get your shovel and dig in.
Well, because this is going to be,
you're going to learn mining reference.
You're going to learn some stuff.
Gracelyn Bascarin is director of the Critical Minerals Security Program at the Center for Strategic and International Studies. And a name familiar to our audience, Bloomberg News metals and mining reporter Joe Doe. Gracelyn joins us from New York. Joe is here in our Bloomberg Interactive Brokers studio. Joe, rare earths on the surface sounds like they're rare, but I'm learning that they're not actually that rare.
Right. They're not rare.
They come from the earth, though.
They come from the earth.
That part is true.
It's hard to find them in density, right? So the rare earths are like literally in your backyard. If you just like dug up some dirt, you could be like, oh, there are rare earths in this. But you know,
we live in New York.
Right, but it's the same as like, oh, well, I take zinc as, you know, a vitamin or whatever, you know, whatever it might be, right? It's but in terms of industrial scale, right? Because you need rare earths to create things like permanent magnets, and permanent magnets allow for wind turbines to keep moving and for electric motors to keep moving. I mean, that's really all like the main thing regular people should know. To find the density is quite difficult. It's not like they're just in your backyard.
Mm-hmm. Like a huge pile. Gracelyn, come on in. Your background's pretty incredible. A mining economist, critical minerals and trade. You began your career in South Africa's Platinum Belt, spent 5 years at the World Bank in South Africa. So tell us a little bit about, like, what don't we really know about rare earth minerals? And then we want to kind of roll into this, how the U.S.-China trade war plays into all of this. But come on in and welcome, welcome.
Thanks so much for having me. So, you know, as Joe said, rare earths aren't rare, they're everywhere. But why we're really vulnerable for them is that once you dig them out of the ground, you have to separate them. And those separation facilities are primarily in China. So for heavy rare earths, they actually separate over 90% of the world's heavy rare earths and about 80% of light rare earths. Now, the problem is that that means once they go to China, China can apply any sort of export restriction to them. And they actually started doing this about 15 years ago when China first cut off Japan from rare earth exports because they got into an argument about a fishing trawler. So we have seen minerals and even rare earths at the very beginning be weaponized over time. For us, it's a national security challenge because rare earths go into almost every form of defense technology, from fighter jets and warships to missiles and tanks.
Graceland, can we build the facilities here in the U.S. that could process those rare earths so then the United States gains control over some of the share?
Absolutely. And we are building them. The problem is that none of these facilities come online overnight. So over the last 5 years, the Department of Defense, through something called the Defense Production Act, has given out over $300 million to build these facilities in Texas and Canada. And for some rare earths, it'll be the first major facility outside of China.
Canada, that maybe 5 years ago that worked. We're not going to talk about that right now, but that made my ears perk up because of what's going on between the U.S. and Canada right now.
But can we produce enough, and Joe, come on back in here, enough in terms of to meet the demand that we need here in the U.S. for things?
Not right now.
Yeah.
No. I mean, this is, what Graceland's getting at here is very similar to the story of steel and copper and like all these other things, anything manufacturing, right? Like this is the approach of the Trump administration is bring all manufacturing back to the United States of America. To maybe take a phrase from our president, sounds great, doesn't work, right? Like you can do it, but as Graceland says, it's going to take you a while. I mean, MP Materials is like the big critical minerals company in the United States.
Yeah.
And they're still shipping a significant amount of their rare earth pulled out of the ground to China to be processed. Yes, they're currently working on integrating everything and having their own processing, but you talk to anybody in the market and they're like, that even when they get fully scaled up to what they say they want to do, it's just not enough on their own.
Graceland, so it sounds like China has a great weapon in this trade war to get the U.S. to maybe bend a little bit. Is that fair?
Absolutely. So let's talk about the export restrictions that just came out this week. So they're not actually a ban. If you think about restrictions, you start with something that we call non-automatic licensing, which means you have to apply to get a permit to be able to export the minerals. Then you have tariffs, you have quotas, those are your mid-tier, and then you have a ban. What China did this week was the lightest form of restriction, for lack of a better word, is they put in the non-automatic licensing. But if the trade war continues to accelerate, they can continue to tighten those restrictions. And ultimately, because there are so few facilities that can give us the rare earths that we need outside of China, that's going to undermine our national security. It's in things like semiconductors, so it's going to affect our economic security, and it's going to affect our energy security, given that they are in many forms of energy technologies.
So is your read on what China did by taking the easiest measure or the least punitive measure a strong diplomatic sign to the U.S. that we're open to negotiating?
I think it's a sign to both China and the U.S. Like, ultimately, these companies are all Chinese, and cutting off exports altogether would be economically consequential to them. So it's a sign there that, look, there is room that, like, we need to get ready. We need to buffer, be ready for potential changes. But it is also a sign to the U.S. that they didn't go all the way to the very end and ban exports immediately.
Joe, how long, in your view, do you think the U.S. will have to rely on China for processing?
Forever?
A long time. I mean,
we're talking one hand counting, or
not anywhere in the near term. And to jump off what Graceland just said, they didn't put an export ban or an export control on everything. Like the two most common rare earths are untouched by this, right? So the way I've heard this described from Graceland and from other people in the rare earth space, right, the critical mineral space, is like Chinese policymakers are incredibly sharp. They know the score. They know what impacts what. And when this came out, this export control came out on Friday morning, initially people in the market were saying, oh, whoa, okay, they're going to restrict these, 7 or so rare earth critical minerals. But then what they started realizing was, oh my gosh, this includes like actual magnets. This also includes actual products that are shipped to the United States. And that's when, especially in the defense community, people were calling up and saying, whoa, hold on, this is an interesting shot across the bow. Because you might remember gallium and germanium had export controls put on back in the fall. And that was like a follow-up to prior year where China had said they were looking at it.
Right.
I mean, we had reporting a year ago that said when the gallium germanium shot came from China, that was the panic button that went off across the DOE, the DOD, and all the other departments. So we had one very high senior White House official who told us that was the moment when everybody finally got it and understood how serious this was.
And that was under the Biden administration?
Biden administration. So this isn't new, right? Like China,
Yeah, it isn't.
My point of they know the score, which is they'll roll out something here, they'll roll out something there, and it's a warning sign, right? It's like, hey, we're doing this, and we're making the people that matter most realize it first.
Graceland, contextualize this for us, because in the negotiations between the U.S. and China, which do not exist right now, but will ostensibly have to exist when it comes to resolving this trade war, that's the whole idea here. How important is the card of rare earths?
Rare earths will be important. Minerals will be important. If we take a step back, and what Joe has said is how this has escalated even from the previous administration of germanium, gallium, antimony was banned in the fall. We saw tungsten came at the start of this year. Is that we are actually vulnerable. We kind of sometimes throw all minerals into rare earths or rare earths into minerals. But when I go beyond rare earths, we're getting increasing restrictions coming out. And all of these commodities that we're being hit by are ones that we often don't have alternate supply of, but we may have limited stockpiles of, and that we need for our fundamental security. So expect to see minerals, I think, feature very strongly in the conversation, including rare earths, because of the fact that we're dependent on China for close to 24 critical minerals.
I have no idea.
All right, so final thoughts here. Just got about a minute and a half here left. So, Joe, I don't know. I guess to watch the negotiations between U.S. and China, right, and what they say specifically in this area, this is a really, really important sign in terms of what's happening.
Yeah, we've all focused on tariffs for the past week.
Right.
And for the past 2 or 3 days, we've really focused on the China tariffs because everything else apparently is on pause, 125% or whatever the latest number is.
Right.
And what we've seen from China in this context of rare earths, of what they've done, is they have different tools to respond to punitive tariffs from the President of the United States. Because on some level, when you're just saying 125% tariff on all imports coming from your country, it's like the market's like, well, what does that actually mean?
Right.
And China's response, they come back in very specific ways. And this is one of them,
Very
which is
targeted.
like very targeted. Right. So like, great, you hit us with a big tariff. Guess what? We're going to do this one very specifically here. And maybe initially nobody in the market notices it, but people like Graceland and others are like, whoa, hey, let's take a look at this.
All right, so it sounds like the advice is let's watch and see how this plays out, this one in particular. Hey, guys, I wish we had more time. This was so smart, so good. Graceland Bhaskaran, Director, Critical Minerals Security Program at the Center for Strategic and International Studies. Thank you so much. And, of course, Joe Doe, always appreciate any time we get with you as well. Metals and Mining, heavy machinery reporter here at Bloomberg News.
Hey, seeing stocks in the green.
If you didn't understand rare earth minerals.
Get out next time.
Go listen to that.
Next time we need a periodic table.
Next time. But not rare.
No, but earth from the earth, yes.
Good to know. Good to know. We're driving to the close.
Yeah, stocks in the green right now. Up next, Walter Todd, President and Chief Investment Officer at Greenwood Capital Advisors.
Order filled. Order filled. Stop filled. Order submitted. Order filled.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got 20 minutes to go ahead of the closing bell. Stocks remain higher. We have got no selling into the closing bell. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with an aggressive bid this afternoon after some uncertainty this morning. The Dow is currently up 677 points. S&Ps are higher by 97, while the Nasdaq gains 2%. The U.S. 10-year yield is at 4.48%. Gold and oil are climbing, and Bitcoin, that's higher by 5%. Among the main 11 S&P sectors, all were trading in the green, led by gains in materials and energy. And leaders to the upside in the Dow, J.P. Morgan and Apple. Home Depot led to the downside. After earnings, J.P. Morgan rose 5%. Wells Fargo was little changed, and Morgan Stanley rose 3%. And wrapping things up, the FT reported that the Fed's Collins said the Fed is ready to help to stabilize the market. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend. And for live breaking news over your Bloomberg type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. 19 minutes to go until we wrap up the trading day. I love what TikTok. I feel like we've had a lot of TikToks this week. I love what Charlie had to say, though. We're holding on to our gains. We're getting in the last half hour, last 20 minutes of trading, and we aren't seeing any kind of selling into the close, which I think most market watchers would say that's a strong sign, especially after the week that we've had.
I don't even know where to start.
I did a little Twitter survey.
Okay.
They're super scientific. No
yeah.
standard deviations.
I think your next stop is presidential polling.
I'm going to tell you. Moving into cash, another risk off, and I got 41% yes, 53% no, 6% thinking about it.
Okay.
So there you go.
Okay, there you go.
Take it for what it's worth.
Let's see what Walter Todd has to say about this. He's president and chief investment officer at Greenwood Capital Associates. He joins us from Greenwood, South Carolina. Walter, a week such as this, where we saw, the best day for the major indices going back more than a decade at one point, then followed by a decline, and now for the week we're up 5.7% on the S&P 500. Not to mention everything that's been happening in the bond market. How do you make sense of it?
Well, you can't get too depressed this Masters week here. We're about an hour away from Augusta National where I sit. But, yeah.
But you're here right now. You're not playing golf or watching golf.
Yes, I'm in front of the screens.
Okay.
Yes, exactly. Unfortunately. But, the volatility that we've seen does, echo of, it reminds me of 2008 a little bit, which is not a good period, excuse me, you want to compare to in terms of the ups and downs. So it is very difficult to make sense of. And we've had, a lot of client calls and interactions over the past, 3 to 4 to 5 days. But certainly feels better when you get these rallies. But I would just note that, a 9% rally that we had on Wednesday from the tariff pause, that's not the sign of a healthy market, even though it feels good because the market's going up.
You're not the first person to say that to us. We've had, I'd say, probably 4 or 5 people say that's not the sign of a healthy market.
No, right? Not at all. And it's, I didn't even look at the VIX today to kind of get an idea of where we were because we'd seen it pretty high today. It's amazing, a different market environment, what you look at and what you don't. VIX down almost 4 points. We're now just below 37, but, we've been as high as we were 60 on Monday.
60. Yep.
Yeah. So I am curious, the clients who are calling you, the investors who are calling you, what are they asking and what are you doing as a result of it?
Yeah, so the first thing is the preparation and ahead of these events, right? Is having a diversified portfolio, mix of stocks and bonds. I know we'll talk about the bonds maybe in a minute.
Yeah.
But so you're not shocked in terms of what happens to your portfolio, and also the preparation for any cash needs that you have, being having that on the sidelines to begin with. So we're able to kind of talk through the circumstances and the situation to settle people back down. What we're trying to do is look for opportunities within long-term holdings that we have in our equity portfolio, as an example, and take advantage of these dislocations. I think we probably set or have a pretty good level for a bottom around that 48.25 level that we hit on Monday. That was actually the peak in 2020, late 2021, also the breakout level in early 23. So that seems like a good level on the downside, but at the same time, I think we're probably going to be capped on the upside from the breakdown level, which was around 5,600. So I think we're going to kind of be in this range for a little bit, but I am very much looking forward to listening to earnings calls, which I did today, of course, to hear what's happening in real time from management teams.
What's your takeaway? We had 3 banks report today. We had earlier this week, we heard from Delta. We've heard from Fastenal as well. What's your takeaway from the companies you've listened to?
Yeah, I think, both Jamie Dimon and Ted Pick, those are two I listen to. I also listen to Wells Fargo. I mean, I think they were more kind of level-headed, if you will. They acknowledge that we're in a slowing environment, both from a economic standpoint and a capital market standpoint. That's factored into their outlooks. But they're, the messaging was, kind of, keep calm and carry on. And even, provided guidance, which was of a surprise a little bit with Jamie Dimon and JP Morgan providing guidance on net interest income, for example. So I would say better than feared, certainly, and you're seeing that reflected in the stocks moves today. But this is just the beginning, and so we're going to hear from a lot more management companies as we head into next week and the following weeks. And I think, the look back on first quarter is irrelevant. The look forward on what's happening right now and what they expect going forward is the real information that we're going to get here.
Well, Walter, if we get what Jamie predicts, is a lot of companies not and a lot of CEOs in the C-suite not willing to really commit to some outlooks. How do you commit new money, at least on the equity side of things? Do you not, and you wait until you start to get companies feeling confident again to put out outlooks?
Yeah, it's a great question, Carol. Jamie referenced, if the stock can, continue to come in, they would look to buy it on from stock buyback standpoint. So they have some confidence. But to answer your question, I think you got to be comfortable with a couple of things when you commit capital, regardless of maybe some uncertainty or lack of clarity as you look out over the next 3 to 6 months. It's understanding the companies that you own, why you own them. The management teams that run them, the confidence in them, and then you can look for levels to commit additional capital to those companies once if you know them correctly. If you don't know why you're in a name, if you've gotten into something more recently, you're not as familiar with it, you're more likely to sell it at the wrong time versus committing additional capital. JP Morgan's a name we've held for a number of years, and obviously with Jamie Dimon at the helm, we feel very comfortable committing capital. We actually bought some more Monday of this week on the downdraft. Yeah.
Okay, before you go, we promised we'd talk treasuries here and what's going on in the bond market.
Kind of buried the lead here.
Well, if you look, we're actually seeing yields down at the long end on the 30-year and the 20-year, a reversal from what we saw earlier in the session. The 10-year at 446 right now. What's going on in your view in the bond market?
Yeah, the bonds are the tail wagging the equity dog right now. And I've been fascinated watching this chart. I wish I could share my screen with you, this intraday chart of the S&P and yields. And clearly the market's interpretation of these moves in yields is perhaps a lack of faith a little bit in U.S. assets. So earlier this week, we had all U.S. assets, currencies, rates, or bonds and equities all down. Yields up.
Right.
So that's not a good circumstance, and that's very unusual in times of market stress.
Yeah, I agree with you. I've been watching the equity versus the treasury trade, and it just doesn't quite totally make sense to me today in terms of what we're seeing, especially on a day when we got that University of Michigan sentiment number that was pretty negative. Walter.
The lowest since 1980. Yep.
Yeah, right? I expected, yields to be way lower. We're just living in interesting times. Walter Todd, thanks for checking in. President and Chief Investment Officer at Greenwood Capital Associates. Masters? Somebody said he was watching?
Yeah. Carol, I don't know anything about sports, and I knew.
Second round underway. I used to watch golf all the time with my dad. I told you, I don't even know what day it is.
Friday.
This felt like a month.
Friday and 10 minutes to go until the close of equity trading.
Not that anybody's counting.
Hey, I mean, the green is it's holding up 1.8% on the S&P 500.
Close coming your way in just a moment.
Order filled. Order filled. Order filled. Up filled. Order filled. Order filled. Order filled. Order filled. Order canceled.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio.
All right, everybody, we've got just under 7 minutes to go until we wrap up the trade